Good morning and welcome to Traders Corner January Investors Summit. My name is Anthony Chapman and I will be the moderator today. This is our first event of the new year and want to wish everyone a healthy and prosperous new year. The trading environment promises to be more dynamic than ever in 2025 with foreign conflicts and a new administration taking office. The volatility and opportunities are immense. So it's important to be prepared. On our panel today, we have handpicked the industry's top trading experts to join us. They have agreed to share their most consistent and profitable trading strategies with us in a free online educational forum. Today's show is packed with a diversity of strategies and educational information. So let's get started. Our first presenter has over 2 decades of trading and investing experience. She made a bold decision to leave her position at a prestigious investment firm to start trading and investing on her own. Now she makes more in a month than she made in a year. Pretty incredible. She has a reputation as a professional technical analyst, and she is revered for her meticulous approach and unparalleled precision in deciphering market dynamics. Armed with an acute understanding of market psychology and a keen eye for patterns, she can foresee market movements with remarkable accuracy. Ladies and gentlemen, here to present Swing into Profits in 2025 is Mrs. Anka Metcalf at TradeOutLoud. Welcome back to Traders Corner, Anka.
Thank you so much, Anthony, and thank you everybody, and Happy New Year. I hope that your profits are going to continue to soar and move beyond any kind of expectation in 2025. We're in for a really amazing year. All right, so my presentation is going to be how you can swing into profits trading 10 minutes a day, basically unchaining yourself from your trading desk and your trading computer. Before we get started, I just want to pause here into the risk disclaimer because everything that we will be talking today is going to be about trading, and it's not going to be construed as investment advice regarding the purchase, sale, securities, options, futures, or instrument of any kind, because I'm pretty sure you know that trading involves a really high level of risk and may not be suitable for all traders and investors. So my name is Anka Metcalf. I'm the CEO and founder of TradeOutLoud.com. I have been a professional independent trader for more than 20 years. I come with 10 plus years in investment banking. And like I said, I'm a professional trader. I day trade, I swing trade, and I'm an active investor. I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and invest in any market. I run 2 very successful programs. One is the Stock Swing Trader, and which is the oldest program that we have launched in 2010. So we're going 15 years strong. And I run a futures trading room since 2017. This is the newest edition, and this is for income generating. We do offer trading education for swing trading, day trading, and for investing. And I specialize in high velocity moves. I'm going to share a little bit about these high velocity moves in today's presentation. I'm also the designer of an institutional proprietary trading system that is based on price support resistance. But wait, there's a catch. Not only supply and demand, represents only about 2 to 3% of the equation. I use 8 layers of price support resistance. I do have specific triggers and trigger times and specific price zones, and I'm very actually identifying areas of divergency and synchronicity in the market, because it's easier when you trade with a synchronized market, meaning you have the cues that are moving up, you have all the other stocks that are following the cues are moving up, right? Or when the market is down, you have to select weakness. So I'm going by relative strength and relative weakness again. For those of you guys that want to learn more about Trade Out Loud, I'm not going to bore you. You can visit our website and you can visit our social media pages on X, Facebook. We have 2 Facebook pages. We have the Facebook Trade Out Loud and the Facebook Anka Metcalf. And also we have our YouTube channel. And this is our email. If you should have any questions, feel free to email us at any time. So today's presentation is about how you can get started into swing trading and active investing in 2025. Best trade setups for explosive gains, days and weeks before they can happen. All you have to do is have a little bit of patience to wait for precise patterns that are going to developing. And we are right now into some really amazing territory into the market. We're also going to talk about focus time frames and what are the best time frames that offer the best results in a trending market and in a non-trending market. And also we will talk about trade selection criteria. I have so much information for you guys. This is going to be crazy town, and how to spot mega opportunities even in the worst market conditions, because let's face it, it wasn't really fun trading last week, and it wasn't really fun trading within the last 2 to 3 weeks. And you know why? Because we had a lot going on. First of all, we had the year end, but before that, we had a roller coaster in the market because we had the quadruple witch option expiration, which you know what happened. They get pinned. Specialists are having much fun with pinning of the levels in stocks, in indices, etc. And then we have the year end. With the year end balancing, we didn't really have a window dressing effect, but we did have a Santa rally before actually Christmas came to us. And not only that, but we had the January effect installed already. So are we seeing some action now that earnings season has finally started? I'm very excited. This is it. This is the time when you should be in the market right now, today, especially that the biggest financials companies have started reporting today. We had JP Morgan, we had Wells Fargo, so we had a lot of banks that reported today, and we're seeing the effects into the market along with the PPI numbers that came out. But the PPI numbers would not have so much strength if we didn't have really good, robust reporting from these financials that actually ripping to the upside. So it's all about making money. We're here because we have one thing in common: making money. And if you have a full-time job, and if you think, hey, you know what, I can't dedicate myself to trading, I can't dedicate myself to investing, I can't dedicate myself to swing trading, you're wrong, because you can do this. In fact, swing trading only involves literally about 10 minutes a day, and you could actually scan for trades outside of the market hours. So if you have a busy schedule, when you come back from work, I don't know, 6 or 7 or 8 o'clock, you have a nice dinner, and then all you have to do is just sit and watch for about 5 to 10 minutes every single day to see what has been going on into the market and identify some patterns based on which you may take or may sit on your hands, right? You may sit on your hands if you're having a pretty choppy whipsaw trading environment, but if you see a setup, go for it. And when you're on vacation, you could actually make money when you're on vacation. To be very honest, I consider myself retired, even though I trade 2 hours in the morning, well, roughly 2 hours, because I'm basically in a trade not more than 20 to 30 minutes on Monday through Friday. And then my swing trades are working for me. Don't you like it when you're making money into the market? It's so much fun identifying patterns that can produce really good results. So what, you have a loss, here and then, that is not important. Those are just little drops in an ocean of trades. So basically you can trade from anywhere in the world. Self-directed trading and investing, it's all about taking control of your financial future and managing your own money. Nobody is going to do it better than you. You're just going to be an account number for your fund manager, and you're just going to pay them tons and tons and tons and tons of commissions and fees. Been there, done that. So make your money work for you in 2025. The reason why I love swing trading is my preferred style of trading. If there is one thing, and if there would be someone that is going to ask me, okay, I said, you know what, you have to choose between day trading, swing trading, and investing, I would definitely choose swing trading, because you're unchained from the computer. You could actually go to the gym, you can actually go to the beach, you could go skiing, and then your money is going to work for you. And all it takes is minimum time and no screen time. But if you want to become a money magnet, you have to put a lot of effort into it. But there's good news. You don't have to be a math whiz in order to get started trading. You do not need to have a finance degree in order to start trading, to start swing trading. And you do not need to know fundamentals in order to swing trade. It's almost 90% technical, and technicals results. How many times, I'm going to ask you guys in here, how many times have you seen a stock? For example, I remember a couple of years ago or a year ago, FedEx reported earnings and it came crashing down. It had a huge gap down. And for a couple of days or 3 days or 4 days, it stayed into the bottom. Why? Because it landed on a weekly 200 simple moving average. And that was support for it. Algos were not reading the fundamentals. Algos were reading the support zone. And shortly after, the stock began the counter trend, the short squeeze. So that's what it's all about, okay? That's what it's all about. Now, this is probably one of the most important slides of this whole entire presentation. Why? Because you should know that every year stocks will move about 20 to 30%, maybe even more every single year. Have you seen the performance last year of the majority of the stocks? They were up a lot. Some of them were up 100%, some of them 60%, some of them 50%. So well above the 20 to 30%. Do you know what returns you're getting if you have your money invested with a fund? You're lucky you get 5% or 7%. And on top of that, you have to pay commissions and fees every single month, which are pretty costly. And this happens at least a couple of times a year, depending on the cycles. Do you want to see the proof? All right, now this is a cycle number one. So this is a pullback. This is one of the cycles. So you can see here that the price action went from November 2023 into a high of March 2024. Needless to say that, let's say you wanted to start in January, right? Clean slate, you go like, I'm going to reset everything, going to refresh everything. I'm going to start in January, just like we are starting right now. Okay, this is January right here. Look at the beautiful outcome that it had from January all the way into March, right? So you're getting extended periods of time where you're going to make money. But if you're looking for pullbacks and opportunities into the market the way you should, you can see here that from the November lows into the March highs, the Qs generated over 26%. Now remember, 20 to 30%. Right? So every year stocks will move about 20 to 30%, maybe more each year. This is just an example of the Qs. Now remember, when you become a swing trader, it's also a great idea to have a narrower trading universe. I always watch the Qs, I always watch the SPYs because I have them in my long-term accounts, but I also look for stocks that have literally massive strength in comparison, relative strength in comparison to the Qs or in comparison to the SPYs, right? And that is the big deal. That is what you need to be looking for. And I will share with you in this presentation how you need to do that. Okay, so let's take a look at this pullback here that went on from March all the way into the end of April, and we had another pullback. Every single pullback is another trading opportunity. Look at the beautiful setup that we have here. Here we had a buy setup. Here we have an inside and out formation. So you can see here that the red candle came in with force, tested the 20 SMA. However, what it did is the next, and by the way, this is a weekly chart. The next week it propelled higher. It didn't really manage to trade above the prior high because this was quite a substantial sell that we had back then. But you know what? It stabilized. So it still produced this beautiful green win bar. Now, what happens is into the next week, we had a trigger above the green, right? The trigger above the green. This is going to be your entry. This is going to be your stop. And then look at the beautiful movement to the upside. You can see here a doji. You can see that as we were going into summer, the price action was slowing down. It was showing some dojis here, topping tails, dojis, right? And this is a sign of price exhaustion. Plus, it was very extended from the 10 EMA, it was very extended from the 20 SMA, it was very extended from any kind of support level because the new support level was into these highs right here. But overall, you had another cycle in which the price went up another 20%, 26% here, 20% here. And how about here? right? We had the extensive pullback here into the summer, and the fall season was ready to rock and roll. And here we are from the bottom almost to the highs here, not quite, another 20%. So here we are, for example, we have 3 cycles within the Qs that generated more than 60%, more than 60% without you having to live through the pullbacks. Because if you're not an investor, if you're a swing trader, you're at the first sign of reversal, you're going to be out. At the next sign of a buy setup, you're going to get back in. At the next sign of reversal, you're going to be out. Let me show you another example. This is the S&P. This is again the weekly chart, and this is exactly represented from January 2024. Notice the cycle from here to here, pull back, from here to here, pull back, from here to here, pull back. You would actually make more money if you are swing trading than you are investing. That's right, because you don't have to live through pullbacks. You can always get back into the trade. So at the first sign of reversal, at the first sell setup, you're out. You're gonna wait for the next buy setup. You're gonna ride it again. You're gonna get out at the first sign of reversal, and you're gonna let it pull back. You're not going to short it, and then you're gonna wait for the next sign of reversal, and you're gonna take it back up. Tell me where we are right now, guys. This is very interesting. This is another pullback into the market. Today's action proved that the price action has rotated. If we have enough time, we're going to get and review some charts. But if we don't, please review the daily charts to see how beautifully we reversed, especially into the S&P and also into basically all the indices except for Russell today. Russell is a little bit sluggish, but still the numbers that came out this morning at 8:30, along with the earnings from these major financials, made the price pop a little bit, but it really didn't have a lot of continuation into the morning. It just stalled. But the rest of the indices, right, if you're looking at the Qs, the SPYs, and the diamonds, they all had that off. They all had those rotations. Investors and traders couldn't wait for earnings season to start. And we're here back into a pullback mode. Now, if you stand back a little bit and if you look at the technical chart, can you tell me what you're noticing here? Because this is very interesting. You're noticing that the dominant moving average here is the 20 SMA. So this makes it a lot easier for us because this is going to be predictive. It's symmetric and predictive. So you're getting the pullback into the 20 SMA. All you need to do is wait for a rotation that is happening here, and bam, you have your trade. This is a trade, by the way, that we took in this week. On Monday, I called this trade into our stock swing trader program. This is WHR, because I always try to stay away from market stocks. Definitely, you know, the big power players in the Qs, the big power players in S&P, the big power players in the Dow. And I'm trying to sit back a little bit and try to find some gems. Because when you're having a turbulent market, your obligation is to find trades that are outside of the box. So I got my scanner fired, boom, and I got this WHR, which short term, yesterday, it went all the way to 126. Guess what? Now is another 3% up. So it's extended up. So here I am just posting to my traders and my members. If you have not taken profits in WHR, please do so. Partial profits, I'm talking about partial profits, because we have another target into $130. The stronger the close, this is what I was telling my members yesterday at 150. The stronger the close, the stronger the continuation tomorrow, meaning today. Use a trail stop below today's low. So that means this was the low right here. The stock right now is up another 3%. Now, at the beginning of the year, I hosted a webinar with a 2025 market forecast, and it is a much attended event. I have been doing this for many, many years, and it's really well received. And I highlight some of my favorite stocks for the year, for medium term, and of course for long term. Guys, this $4 stock that was at the time of our entry, FNMA, delivered delivered 63% in 1, 2, 3, 4, 5, 6 days. 6 days, 63%. You guys can see it right here. Okay, so this is where the price action was trading now, was trading over $7. So if we go back here and read this again, every year stocks will move about 20 to 30%, maybe more each year. Okay, so we have this one that literally moved 63%. That's crazy pants. I don't know about you guys, but I'm really excited about swing trading. And this is one of the reasons why this year I know it's going to be awesome, because I'm seeing it from the technical charts, and not just I'm saying that, oh, I'm going to make 2025 my swing trading year. No, we are going to have massive opportunities in 2025. We are going to have a lot of volatility in 2025. Okay, so in 2025, my focus is going to be more than 80% in swing trading stocks. So money managers and hedge funds live mostly off commissions and fees, and there's no surprise. You're just an account to them, and whether the stock or fund performs then or it doesn't perform, right? Because they can put you in a stock that or in a fund that doesn't really perform, it doesn't do anything. They still get paid. So did you know that Barclays Hedge reported that over the past 5 years, the average hedge fund in its universe produced a net annualized gain of 7.2% with a Sharpe ratio of 0.86% and market correlation of 0.9%? That is really bad. That is really bad. They're not even putting the effort. Now, new report finds almost 80% of the active fund managers are falling behind the major indices. Ooh, that must hurt, right? So your money may not be working for you if you have your money with a fund, right? All right, let me share another chart that I absolutely love, adore, Costco. Every time I go to Costco, I'm a big Costco shopper, and every single time I go to Costco, it is a zoo. It's literally a zoo. I can't find a parking spot. I can barely get in. I can barely find a cart. It is a zoo. It's always jam-packed. Plus, if you read the news with Costco, they had a stellar last quarter. So December was massive. So they're expecting to have some really massive earnings in a few weeks. And of course, it's into a pullback mode. And notice that from the technical chart, you don't even have to be an investor. You can swing into it. Every time when I trade Costco, I never put a stop in because I'm putting those shares into my investment. And I have to share a little secret. I don't have the slide here with me, but last year in January, I opened an IRA, a new IRA account, and I had very little money into it. I had $7,000 into that IRA, and guess what I did? Guess what I did, guys? And that was in January. I got into it right here. It was like $675 or something. And guess what? I got it with 10 shares. 10 shares. You don't want to know. Just do the calculation and see how much money I made here. I just don't want to make it public because it's ridiculous. With 10 freaking shares, I made a killing into it. And now we're at an inflection point here because the price actually pulled back again into the 20 SMA. So my bottom line is, my conclusion here is that you don't need to have a massive trading account in order to start swing trading. You can trade it with 1 share, with 5 shares, with 10 shares. I got 10 shares literally into my IRA account, and this is the result, okay? And keep in mind, I may add, because I'm going to be contributing to my IRA, and this year I'm going to be contributing $8,000, right? Because they raised the limit. All right, now Meta is also a stock that should be literally watched very carefully. Now, a lot of the election advertising and sponsorships have been on Meta, and they're really big on promoting. They're really big on advertising. So everybody likes to sit on Meta. Everybody likes to create groups on Meta, or they're part of a group on Meta. So everybody's advertising. So their advertising is huge. They're getting huge revenue from advertising on this platform. So this may be another 2025 constant on your trading universe for swing trading and also for investing. Now, swing trading is the most effortless trading style. Literally, it's effortless, right? All you have to do is put your daily charts, weekly charts, and monthly charts and try to identify some setups. You're not going to have setups every week if you're just trading a trading universe. But if you're, if you're diligently scanning, you're going to find at least 5 to 10 trades every single week. And you can take all the trades if you have the account, or you could just select what makes more sense to you from a risk to reward ratio, from your risk appetite, and from your risk tolerance. But you need to know and respect the rules of the game, and you need to be very patient to wait for the setups, because remember, if you don't have a setup, you don't have a trade, and you're exposing yourself to a loss. Now, it's not about the trade as much, but it's about the risk management, right? So you have to have really good risk management skills. So why is it important to get started now? We're trading at the beginning of January 2025, because the money that is sitting in our bank accounts or in your trading accounts are losing value due to inflation, and they're still going, you've heard the Fed. Okay, they were a little bit dovish. That's why the market towards the end of December, it's actually happened on December 16th when the FOMC meeting, came out with their projections for the first quarter, and they were pretty dovish, right? That's why the market was definitely in a really choppy, whipsaw-ish environment since then. So who's swing trading for? It's for everybody, whether you're 20 years old or 18 years old, or whether you are 99 years old. Traders with busy lifestyles that want to manage their own long-term money and their trading accounts. Part-time traders that do not have the time to sit in front of the computer all day. Swing trading is a wealth generation style, and this is what I love about swing trading and style of trading, just like investing. Investing, you have a broader time horizon, and swing trading, you're looking at a period between 2 days and about 2 weeks. All you need is literally average about 10 minutes a day. Even if you are, let's say, a really busy person, you can find 10 minutes a day. You could take a break, 10-minute break. You could do, any time after dinner, before dinner, on your, work, while you're at work on your lunch break, you could take 10 minutes and look at the market and say, hey, what's the market doing today? Do I need to raise some stops? Place alerts where you have your entries, where you have your stops, where you have your trails. So it's not that time consuming to do this. And you can work from home or anywhere, literally with an internet connection. And this is the only way to make your money work for you, because it's effortless. Now, if you want to get started, if you're really serious, these are the steps that you need to follow. Number one, you have to open an account, whether you're going to open it with Charles Schwab, TradeStation, Interactive Brokers, Webull, Robinhood, Fidelity, Ninja Trader, Tastyworks. Any of these platforms are good, are robust. Do your due diligence and see what makes more sense for you, and just open an account. The next thing to do is obviously you need to fund the account, okay? So step number 2, determine your risk and your risk tolerance. Now, as a general rule for swing trading, majority of traders use about 2%. Depending on your skill, you can use 1%, or you could go as 3 or 4%. It's up to you and your personal risk tolerance. Ask yourself, how does it make me feel if I lose 2% of my account on this trade? And if that doesn't make you feel good, then go down to 1%, okay? Because remember, you need to be very comfortable with your losses, because if you have that hot-tail feeling in your hand, that's not going to be good, okay? The third thing that you need to do is establish your game plan. This is where we're going to get technical, because you need to know a little bit of technical analysis. You need to know position sizing. You need to know where your entries are, where your stops are, so you determine your risk. You need to know how to determine targets. So this is your trading plan, how you plan on making money, right? So you need to have some information in order to determine your entries, determine your stops, see where your targets are, and how to trail, right? Because money management is very important. For example, you don't want to leave money on the table, but at the same time, you don't want to get stopped out of the trade, right? You don't want to put like really tight stops on a swing trade, because swing trades you know, a lot of times you're going to see that they're fleecy and they're going to gap down a little bit. So make sure that you accommodate that so you're not going to get fleeced out. The step number 4 is to create a trading universe. What stocks do you love? Okay, so the first thing that comes to my mind is, I don't know, take your bank statement. Where do you shop? What do you buy? Right? So I shop at Costco. I have Costco on my shopping cart all the time when it comes to stocks. If you're a Target lover, and if you like shopping at Target, then Target should be on your list. If you like buying certain products, those products should be on your list. If you have an Apple phone, then definitely make sure that you have that on the list, right? So these are some of the things that are very, very, very common, right? So you have a phone. If you have an iPhone, definitely watch the progress of Apple stock. If you have a membership at Costco, watch Costco. If you're using Facebook, or then have Facebook on your watch all the time. See how many people are reacting there. See how many people are advertising. And once you see those sponsorships, you know, those highlighted sponsorship ads on your platform, and the more you see, the more you need to pay attention to that, to Facebook. Okay, so these are just some ideas. For example, you're on a hunt for a new home, and you're seeing DR Horton, or you're seeing, you know, Toll Brothers or what have you, and you go like, oh wow, okay, so they're building a lot in my area. I'm looking to buy a Toll Brothers house, or you know, something like that. Just watch Toll Brothers, right? So everything has to be natural and has to make sense to you as well. Also, you can create your own market minder and be diversified in your market minder. So have some tech stock, have some tech stocks, have some semiconductor stocks, have some utilities, have some energy stocks. So be diversified. Have some home builder stocks. So be diversified. Have 3 to 4 stocks from each of these major sectors, and this way you're going to have a narrow trading universe. And not only that, but you're going to have a list of probably about 20 stocks that you're going to keep on your watch. Trust me, when you get started, this is super easy to do. And step number 5 is create and refine your strategy. Identify the trends. Take a step back and see what dominance you have. Is it an uptrend? Did it break the uptrend? Is it a downtrend? Does it have room to squeeze back up? I mean, take a look at the general charts on higher time frames. Don't be afraid to go as far as quarterly charts and move down to weekly charts, to monthly charts, to daily charts to narrow your entry. So it's a great way to get started. So this is just how you can get started, but more about this in the next slides. So a lot of you guys in here may be day traders, or a lot of you guys, you know, just don't know enough about swing trading in order to get started. And this is what this course is all about. So I'm going to share some information about what swing trading is, how you can select the stocks to put in your trading universe, so you make sure that you have really good, reliable stocks, right? So number 1, trading, swing trading is the sweet spot between day trading and position trading, right? So day trading is minor time frames, is just those smaller time frames, 1 minute, 2 minute, 5 minute, 15 minute. And investing, you're dealing with quarterly charts and yearly charts, and you're looking for generational wealth. So you're looking for, you know, you're looking to pretty much stay in a position for years. So it generates high probability trades, and it offers the best chances of success, meaning the best return on your investment, right? So if you're risking, let's say $1,000, you're looking to make $15,000 or $10,000, right? Like at least 2 or 3 to 1. Swing trading positions will be held from 2 days to about a couple of weeks. And I say usually it's about 2 weeks, but I will add in here a couple of weeks because I have been in trades for more than 2 weeks. And that is because if you're hitting a roadblock into the market, and especially in the market indices, and if they're sideways, until stop is hit, right, you're still going to be in that trade. You could be in a trade for 3 weeks, 4 weeks, 5 weeks, depending on the market environment. So be ready for that as well. Now, what are the best time frames? Time frames and focus that deliver the best results. The daily charts and the weekly charts, and they both have to be in swing. They both have to be in sync. Position trades, long-term trades will be held from a few months to a few years. Like I said, if you're an investor and you really don't have time to look at the market every day or look at the market every week, all you need, like I said, it's about 10 minutes a day or about 20 minutes at the end of the week for swing trading. But if you don't have that time, or if you don't want to put in that effort, then investing is for you. We're actually going to come out with an investing course. We've actually started, and I was teaching an investing course before even TradeOutLoud came about. So that was in 2003 and 2004. And then I saw the need that everybody wanted to generate income. So investing was not a huge thing back then. So I actually started myself, day trading more than investing. Because obviously it produces the income, and once you have the income from day trading, you can allocate towards swing trading and towards investing, towards compounding in your positions. So position sizing, like that long-term trading, that core trading focuses more on higher time frames, like monthly charts, quarterly charts, and yearly charts. Swing trading and investing captures a portion of the swing from swing low to swing high. And it's all based on technical analysis. And remember, a portion. You're not going to hit the low and you're not going to hit the high, right? So you're not going to get the nitty gritty, okay? Now, swing trading is not about capturing the entire trend, right? So because you're never going to get the bottom and you're never going to get the high, because you need a confirmation to get in here and you need a confirmation to exit, right? That's going to be a reversal to exit. It's going to be your exit sign. Swing trading is a simple strategy where you enter a trade when the price breaks above the pullback reversal, okay? So you need to have a buy setup, or if you're shorting, you need to have a sell setup. Here are some more charts that I want to share with you. This is another chart. I'm going to show you how the entry is. So you're not going to get the immediate bottom. You're going to get the rotation here. This is where you're going to place your stop. And of course, you can see here that you have an area of basing. It's before earnings. These vertical lines are earnings. And you can see here that the stock has been based and it hasn't had any reversal signs, and the price action continue higher. And in fact, you could exit here. You have an option to exit here. But as long as the price action is trading above the 10 EMA, you could actually exit somewhere in here as the price is, this would be your exit bar, as the price is breaching that 10 EMA. Now, it takes a proven strategy to select high odds day trades. Literally, it takes, a proven strategy. You need to pay attention you need to pay attention to the technicals, very little fundamentals, meaning knowing when earnings season, knowing when the earnings on a certain stock is scheduled for. That's all the fundamental that you need. You need to buy stocks on sale, stocks that are decline. When to buy? When certain things happen into the market, when pullbacks occur. You get steeper pullbacks like the dot-com bubble, the 2008 financial crisis, the 2016 election, or the 2020 pandemic. Those are gems, okay? That is when you load the boat for your investing portfolio. But they're also fantastic for swing trading. So do I need a certain event to get in? The answer is yes and no. Like, you need a pullback, right? You need some kind of a pullback. We are right now in that pullback. So now's the perfect time. Be diversified and stay away from high risk industries like the travel industry. Here is another stock that I wanted to point out. This is actually for long term, that is doing a sandwich. This is squeezing out of the bears and continuing the trend higher. You can see that this presents a buy signal for me just above this red bar right here. Now, you need to be in sync with the institutions. You don't need to follow them. If you follow the institutions, you're late to the game. You need to be in sync, and you need to have a system that is in sync and knows how to read institutional trading. Okay, that is the most important thing, and technical analysis can help you with that. And you need to follow the cycles like I showed you at the beginning of the presentation. Now we're going to talk a little bit about types of stocks. Now, I don't know, Anthony, if you could tell me, like, if I have until 12 or if I have until 12:15. I forgot whether it's an hour or 45 minutes.
Yeah,
Sorry.
it's 45 minutes. I apologize. I should have told you that earlier. But
Perfect.
yeah,
Thank you.
until about noon. Yeah, you're welcome. Thank
Awesome.
you.
Thank you. I still have
Yeah,
5 more minutes. I
you
appreciate it.
too.
Thank you so much, Anthony. All right. So type of stocks, right? You guys know that there are so many types of stocks that you can actually trade. You have growth stocks, value stocks, income stocks, blue chip stocks, and of course, penny stocks. Just stay away from the penny stocks. So when it comes to trading, no one has a crystal ball. It's just 99% technical. And remember that only 1% fundamental. Take a look at Tesla getting ready to launch higher. Take a look at today's charts and see what it did. Also, how to select stocks, okay? So you need to, based on technical analysis, obviously, but if you're looking to trade for a little bit longer term, you need to have a good history of earnings, right? Because if you're living through earnings, you want to make sure that you're able to digest those earnings. Again, technical charts are a must. You have to look for volatility contraction. You have to look for higher volume into the market. Look at Meta. Meta's ready to rock and roll. Look at the powerful trend that it has. Put this one on your 2025 list. So we talked already about how to enter the trades. I'm going to go fast forward here because I have a lot for you guys. All right. Okay, so if you're interested in wealth generation and cash flow creation, swing trading is for you. So again, you're sidestepping that long term and you're more for instant gratification. It's a part-time style of trading with actually full results. We have a program for you guys, and I do have a special offer. We sell this service for $299, which is literally peanuts compared to the results that we're having. We have a transparent track record on our website. So this is the stock swing trader. We are basically delivering stock swing trades to members since 2010. It's a service for self-directed traders, and we will show you how to navigate the market without being chained to your computer. Our approach is 95% technical and only 5% fundamental. And if you go to our website, you're going to see that this service is $299, okay? But we have a surprise for you if you sign up today. Now we have 10 spots for $199. The link is right, oops, sorry. The link is right here. It's bit.ly/TOL wealth. You can feel free and go there. Now, what you get with this service, you're basically getting a newsletter Sunday or Monday, depending on the market environment. You're getting this newsletter with all the information about what had happened in the market the week before, real detailed information about all the sectors and everything about the market that you need to be ready for of what's happening, and also the forecast for the following week. You can see here a lot of details. Here we provide the market outlook, analysis, and trade ideas. And this is all recording is usually about 30 minutes or an hour long. You can view that here. It's delivered again on Sunday. You have the 2025 portfolio, live portfolio access, 2024 portfolio, because we still have some trades into it. And you can see here that we have a lot of information that we provide with you, that we provide for you guys. You also have access to the performance portfolio here. And you have access to a private X feed that only members have access to. I don't know, let's see, let's refresh this. Okay, here we go. And you can see here that, sending information for our clients. So if you guys want to sign up, it's bit.ly/TOL wealth. It's $199 per month, and it's going to be grandfathered in. Thanks so much, Anthony.
You are most welcome. Thank you for such a great presentation.
Thank you for having me.
Yeah, thank you, Anka. Another great presentation by Anka Metcalf. Ladies and gentlemen, that was Anka Metcalf of TradeOutLoud. If you are ready to accelerate your income to 6 or 7 figures, trading only 2 hours per day, then Anka Metcalf has a solution for you at TradeOutLoud. We have placed our special offer, or Anka, if you could put your special offer in the chat box as well, that bit.
Okay, I'm gonna just put it, yeah.
Okay, thank you. I didn't do that, so I appreciate it.
Anka, it's Norman. It's Norman, Anka. You could go 2 hours if we let you.
How are you?
Good.
Norman, thanks for being here. So thanks Anka for putting that into the chat box, and we appreciate it. And at the top of the show, I mentioned we had a diversity of great strategies, and next up is a professional trader who helps traders collect long-term income from prop trading. Early in his career, if you didn't hear his voice, that was Norman. He has run one of the largest options firms in the country and has worked for Payne Weber as a commodity trading advisor. He has over 1 million views on his 4-minute drills for traders on YouTube, which helped launch his current site, thedisciplinedtrader.com. And that's what Norman is. He is a very disciplined trader. He believes that prop trading could be the best thing that's happened to retail traders since exchange-traded contracts. Ladies and gentlemen, here to present 2 simple, proven ways to master the mental, emotional piece is Mr. Norman Hallett of the Disciplined Trader. Welcome back to Traders Corner, Norman. I know, we need your intro music.
Yeah. Thank you, Anthony. They don't call you Tony, do they? Nobody calls you Tony, right?
Not in a professional setting.
Okay, yeah, gotcha. Only in the background. Thank you, Anthony. Yeah. Thank you, Anka. Wow, Anka could go for 2 or 3 hours. She goes so deep, you know, with her understanding of what's going on. You know, if you're a stock trader, you know, that was a great offer. So really glad to follow her. She's really good leading. She's, what do they call it? She's riding shotgun here today. Excellent. Listen, I'm going to go in a different direction from the standpoint of, this is really my original direction as far as the mental and emotional piece, because without this, whether you're following Anka or anybody, it's not going to work unless you have the mental and emotional capabilities expressed. In other words, you know, my firm, the Disciplined Trader, started out in 2000 just doing what I'm going to talk to you about today. About 5 years ago, we started to help traders with the mental, with the actual trading plans, because we were getting them solid with running their trading plan. It's just that their trading plan was really not worth running. And so you've got to have a good trading plan. If you believe that you do, then you really want to, and you're not getting the results that you want because you're jumping off your plan because of your own, I call it getting in your own way when you trade. If you're your own worst enemy. This is the presentation you want to stay for. I call it 2 simple proven ways to master the mental and emotional piece. So let's get going, and I really appreciate you being here. That is my wife and myself. She makes me look good. She can make anybody look good. That is my wife of 40 plus years. That was taken actually about 5 years ago. So still looking young. I robbed the cradle. Tisha is her name. She is a master, one of the world's leaders in subconscious training. In other words, understanding the depth of why somebody does what they do based on their subconscious beliefs. You see, it's the subconscious mind that allows you to, that has you doing what you're doing. It's your conscious mind that that voice in your head that's talking to you will decide for you based on what your inner mind or subconscious mind is true for you. And you actually create what your subconscious mind believes is true for you, and therefore you follow. So I'm going to get into that. I'm going to get into the science of it today so that you really get a grasp of why you do what you do, and I'm going to give you some tips on how to turn that around into acting the proper way when you trade, which means not hesitating to put on a trade, not being controlled by the fear of losing, or the past loss that you just took, or a lack of patience when you're not getting a signal to jump into something that you shouldn't. All of those things are control factors that you need to demonstrate as a trader. I've been an author. I am an author. I've got coming out with a new book on prop trading this quarter. I'm a trader really by heart, and I'm a consultant. I'm an educator. Actually, I was a math teacher for 6 months till they fired me for teaching replacement theory in blackjack to my students. That's another story. I've written several books on trading, on designing and constructing effective trading plans. I've had books written about me. I've had, this is actually something I think that's still on Amazon, that was a film of me presenting at one of the trading expos. But I think I'm known mostly with the way I got on the map in a retail sense was my 4-minute drills, of which Anthony mentioned. I've got over 1 million views on that. You can find them on YouTube if you care to take a look. But these are 4-minute between the eyes thoughts, and I'm going to give you a little bit of that today, because you really can't kid around when you're talking about. I'm a big kidder, as you can see already, but when I talk about this mental and emotional piece, if you don't have it, nothing's going to work for you. So I work for Payne Weber as a commodity trading advisor, managing millions for them, for 20% of the profit. That was a good season for me. I worked for them 1.5 years. And prop trading, which is not what this lecture is about, I'm in love with, because of the fact that they actually give you a little bit more than 20% of what you're making. Hallett Commodities was a clearing firm that I added to my income through grabbing the clearing firm. But then I decided, why not combine my wife's speciality with my speciality and just help traders with the mental and emotional piece. And that's what we've been doing since 2000. I think we're the only ones doing. A little bit more detail on Tisha. She is recognized as an innovator in the field of subconscious training. Over and above her 32 years of private practice, she developed several breakthrough processes and tools to deliver effective subconscious training. In the 1980s, she started what they call the Fast Start Accelerated Learning Program to improve study habits for students. But since 2000, as I mentioned, she's focused with me primarily on helping stock, futures, and Forex traders to be disciplined to follow the trading plans, as we've co-developed the Disciplined Trader Mastery Program, as well as other programs, which I'm going to show you today at the end. This is a picture of your subconscious mind. Believe it or not, it's photographable. And this is a very good-looking photograph of a subconscious mind. And what you're seeing here, these tendrils here, these worms this is actually thought energy. It's actually fungible. You can actually see it and measure it. These are thought impulses that carry a specific thought. Boy, I just lost in that trade, and should I wait? Is my trading plan still working? Is this really for me? Should I do more testing? Should I go back to sim? These are the kinds of doubtful impulses that you can create on your own. And if there are enough with the same impulse, with the same idea, it forms what they call a neural net. This is that piece of your subconscious mind that, when your conscious mind and when you're asking yourself in a conscious state, should I take the trade or not, it's going to follow what is true for you based on what you input into it. So if you surround yourself in a conscious way with doubt and fear, and when you're in an emotional state, these tendrils actually get deeper and more and stronger, and really in a shocking in a situation where you have a shocking situation, sometimes it only takes one gigantic impulse to form a neural net. And there are a lot of examples. These are called traumas. Okay, so you have, as traders, we are controlled by the neural nets that we have created, and I can tell what your neural nets are by the way you act. Traders that come to me and say, hey, I really should have taken that trade, but I kind of waited for a little bit more confirmation. I took it. By the time I took it, there was less profit potential and more of a risk. I keep doing that, and I know what's going on. I know that you have a fear of taking a trade, a fear of losing, and therefore you need to see more than even what your trading plan tells you is enough to take a trade. So I can tell your situation by the way you act. So so what do you do? How do you reverse this? Well, it's actually pretty simple. What you do is you control that input. And when I mentioned that you can get in a very relaxed state, just taking a few deep breaths is all it takes. A lightweight meditative type state, which is really sitting in your chair, taking a few deep breaths. And we have we do custom sessions for our traders, but we also have stock sessions for overcoming the fear of losing, for instance, where you may sit there and you may play a 5-minute or 8-minute audio after taking a few deep breaths, and that audio says things like, I am a wise and disciplined trader, and I do the things that a wise and disciplined trader does. I've worked hard to be the successful trader that I am. I'm a wise and disciplined trader. I wait for my trading plan to signal me when to go in, and I go in without hesitation. I'm a wise and disciplined trader. I'm confident in the way I trade. You continue to just take that 5 or 8 minute session in a relaxed, after a few breath type of state, and you're going to create these neural pathways that will be conducive to what you want, and you will form your own neural net, a positive one that will have you respond to situations the way you should. And what happens to the one that wasn't working for you? It atrophies like any muscle or thing that you don't use. And if you fill your mind, even for 5 or 10 minutes a day, with the positive suggestions, it doesn't take long for this neural net that's not working for you to atrophy to the point where your new neural net is now dominant, and therefore controlling your actions. And it's really just as natural as it was doing the wrong things. It's going to be just as natural to do the right things. So this is the science behind it, okay? I thought I'd show you another picture of, this is a electron microscope's image of that same thing that we just saw, only in a different fashion. It's a scientist from the Cold Springs Harbor, New York. This was back 2 years ago. This photo was taken. Announced that they have discovered a new neural circuit linking deep fears with the area of the brainstem that controls behavior. But this is the actual picture. These are the neural pathways with your thought energies. I'm a wise and disciplined trader, and here's that neural net that's formed, so that when you have a trade and you start talking, so here it comes, I'm ready to take it. It's not going to be that kind of discussion. It's going to be, there's the signal, now I take the signal. I'm a wise and disciplined trader, and all I have is my trading plan that's tested, that I follow, and I know from back testing, if I follow it, it's going to work in the long term for me. So here I go. So this is, I just thought that you could get a couple of different views of this aspect, but this is what is controlling your situation, and this is what is working against you that you really want to have start working for you. And we work with traders in this respect there are certain suggestions that you can make to the subconscious mind that are taken quickly and effectively. Others that you think you can make, if you say, for instance, I don't take trades that aren't in my trading plan, your mind doesn't hear the don'ts. It takes everything you say is true. So you got to watch the way you commit sentences and thoughts to your subconscious mind. So we're pretty good at it, and so we've got that all down for you. In any event, the thought I would show you an alternate picture. There's another technique that we use. It's a newer technique to us. It's a technique that's been going on in the eastern part of the world for the last 200 years in different ways, but it's called the emotional freedom technique, and it's the go-to therapy for post-traumatic stress disorder. And I bring up that monster first because it's probably the toughest, it's the toughest trauma to convert to calm. When you're in people who have been active in war, and you're responsible for a bomb or something that killed some people, and these kinds of things where you're wrestling with what's right and wrong. These are the kinds of traumas that are very, very hard. And I'm certainly not comparing the trauma losing trades to the trauma of war. But I am saying it's a trauma, certainly a much lesser trauma. But if EFT, the emotional freedom technique, can work for soldiers, it can also work for we traders, for us traders. In any event, I wanted to show you a little bit about it. Combines Eastern philosophy with Western philosophy by including the same points, acupressure and acupuncture points, which are involved in the flow of energy. The flow of energy, once you have blockage, that's where you start to hesitate doing the right thing in our trading world. So it's up to us to release those blockages and let the chi, the energy, flow. Now, you may or may not believe in all that or understand that, but I can tell you that it's real, and that if you just do the process without even believing it, it's going to work for you. And the process is very interesting. Again, it's a combination of Eastern and Western sciences. Now, you have on your body many different acupressure and acupuncture points. There are 2 right between the eyes, as you see. There's one at the top of the head, 2 right between the eyes. You have your what do they call on the sides of your head? These points on these they call it side of the eyes, but it's really your temples, those temple areas under between the nose and the chin, under and right in that place where some artists grow their beard right there, that little spot of hair. You've got the collarbone, right under the collarbone, and under your arm, believe it or not, is another place. And so these are the points that in rotation, you are tapping with your fingertips in these rotations and saying certain things while you're doing it. The first part of the process is to talk about what the problems are and what the pain is. So if we were looking at lack of patience, that you jump into trades and you seem to do revenge trading and so on because you don't have the patience to wait for your A+ setups. You may first start by tapping here, then tapping here, and as you're tapping, you say certain things that we prescribe for you, and those things are maybe something like first you bring the fears out. I keep on chasing trades. I take trades that I shouldn't because I'm really having a problem with my being patient enough to wait for the proper trade. And as you're talking about this, you're tapping these points in rotation. Now, again, if you think this is crazy, believe me, it's not. This is solid science backed by multiple, I'm going to say at least dozens of case studies and studies with thousands of people that it works. So, and after a round or 2 of tapping with the pain, you go back and then tap with the solution. I am a wise and disciplined trader. I do the things that a wise and disciplined trader. I'm a patient trader because I know that waiting for the A+ triggers will get me where I want to go more quickly. And so you're saying these positive things while tapping. So you're removing the blocks and then you're injecting the positive energy in those same pathways. So it's a very, very, again, a tested science that is something that actually the truth is, it's all the truth, but what we wind up doing most of the time is I've given you 2 processes here. One is of course the subconscious training, the subconscious positioning, where you're working with your neural pathways to create the right neural net. And then there's the tapping here that I'm talking about. Well, we use this tapping really in an emergency situation. This process, if done correctly, gets immediate results many times. And when I say many, more than not. And so when somebody is really reeling, and in fact, to the point where they're saying to themselves, I don't even know if this is for me, but I'll talk to Norman and Tisha and see whether, and they're way down here with their enthusiasm, and they're just kind of almost ready to quit. And we identify the particular situation as a specific situation, fear of losing, lack of patience, whatever it is. We will go to the EFT process and use that first. Why? Because it clears things immediately. In other words, it may not input the behavior quite as solidly and forever that the subconscious training does, but it will eliminate the problem so that you can act more normally. So the EFT really, I look at it as the emergency room for traders' mentality, and then the recovery is with the subconscious training. Do these two things in combination. We're the only ones that do this. Why is that? Because it's not, traders, they're mostly type A's and they mostly have strong egos. They're mostly men. And although more women, I would say that now good 15 or 20% are women traders. They don't have quite the ego problem that men do. I've found, but I may be wrong about that, but this is from my decades of experience. And so, to believe that you can change and believe that something as simple as this could do it for you may take a little bit of convincing, and that's really what I'm trying to do right now. I don't like to believe that I'm pushing this or convincing. I'm giving you the science. I'm asking you to consider it, because really, if you're not, again, controlled mentally and emotionally, nothing is going to work for you. I thought I would show you, this is this is from our stock EFT sessions. We've recorded them. You can see that there are 6 of them. There are more than that, but these are 6 in this picture. Pulling the trigger without hesitation, overcoming thoughts of fear and greed, trading to make money mindset. This is an interesting one, because this is all about taking your trading and viewing it as a business. In other words, if you're doing trading as a hobby, or let me just try it, I want to make some money on the side, that's not going to work. It can work, but it's much tougher than treating your trading as a business. That that when you lose a trade, it's very similar to putting an ad in a magazine in a business and nobody calls. You won't do that again in your business. You won't use that magazine. You'll try something else. So everything is a learning process. Losing is part of the overall winning if you have a good trading plan. If you have a trading plan that can get you 60, 70% winners over time, if you follow it, over time, you're going to do well. So trading to make money mindset is, listen, you're in business to make money. You're in trading to make money. So this is it's one of my favorites, really. This is one sustaining discipline. This one is actually, we use for traders after they've had experience with some of our others. It's more of a combination session. Exercising patience. I talk a lot about patience in these presentations, and the reason I do is because I know that there are more testimonials that thank us for what we do and the positive results that they've had, that talk about that talk about lack of patience to patience of a saint, as they call it, or ice in the veins kind of patience. So that's why I talk about it a lot. But exercising patience and coping with losses. This is something that is always a situation. Not only taking your loss, which is another session. In other words, you don't want to be moving your stops around, but also coping with losses. Once you lose, you can't leave that and say, oh my gosh, another loss. You say, well, got that one behind me. Now, because of the percentages of my trading plan, I've got a high percentage of being a winner here. So you've got to think like with positive expectation. Anyway, I show you this picture because this is a demonstration of Tisha doing this. We're 2 minutes and 39 seconds into probably a 6-minute session. I said they're about 5 or 6 minute sessions. And what she's doing is she's now tapping that first, you remember that first, one of the areas up here between the eyes. So she's tapping that area, and she says a statement, and you repeat that statement while tapping with her. And then she'll move to the temples, then we'll move to under the nose, and move to under the chin, under the lips, above the chin, and she'll continue to talk about. She'll to repeat this. She'll have to say the sentence and then have you repeat it as you're tapping along with her. And so this is a very simple process. You don't have to remember the order. You're going to be doing it with her. Now, in our laser coaching sessions that we do, or program, this is really for serious traders who are just tired of going around the rat wheel, okay, and knowing that they're the issue. This tapping in combination with the subconscious training is really where you want to be. And Tisha, what we always include in our program are one-on-one sessions. Tisha will have as many one-on-one sessions as you need over, say, the course of a year, if you're in the particular program I'm talking about. And in that session, she will discover your specific needs and your specific issues, and actually make a custom subconscious training or a custom EFT session that will address your situation the way you see it. And the reason I say the way you see it is everybody comes to a conclusion in a different way. It may be from personal experience, it may be from absorbing other people's experiences. And so when she discovers why you got where you are, then she can translate, she can talk your language. The more specifically she can talk your language in creating one of these custom sessions, the more it will be relative to you and therefore be absorbed. So yes, all of these pre-made sessions are effective. They will work over time, but that time can actually be collapsed even further if you have a custom session that is built specifically for you and is derived from how you got where you are. So this is a very important feature, and it takes some time from us. We have to understand who you are, but it's worth it for us to do it because we see what the quick response that happens. This is not a process that takes months. When we offer a year-long program, as we do in our laser coaching, what we do is we offer, usually, I'm talking 90% of the time, Tisha will see you twice, 3, 4 times over the course of the first couple of months. After that, you're on a roll, you're doing fine, and then we are there for you if you need us, or if you need Tisha or me. I'm kind of in the background. If you need us, we're there for you, and that support, that that we're there, is enough to continue the ball rolling for you without actually seeing us. So this is our experience with it. Yes, we have those that see us every week, and somehow I think some of them just like to talk to us, and that's okay. Listen, we're here for whatever you need. But the actual trading mechanism and the fact that you now are on track, following your trading plan, not getting in your own way, that's solved in the first month or two, 90% of the time. And I'm going to say 95% of the time. I don't think last year we had anybody that went for, maybe out further 6 or 8 months. They had a particular issue or a question that they had, and so we made a session for them. But that we offer the year if you need it. Okay, if you've got if you're somebody with considerable issues, maybe you'll need 4 or 5 of those sessions over a year. But the fact that you're there, where you're being accountable to us, is a very, very big help. But if you need more help, we're there along the way. Okay. But here is the VIP laser coaching program that I wanted to offer you today, because it is recognized as the world's premier trading for maximizing traders' mental and emotional capability, so that your trading plan is followed at written, and it features this unlimited one-on-one personalized coaching sessions for a full year. Okay, unlimited, so as many as you need. And we put that out there because it's important for people to know that we're going to be with you for as long as you want us to be. So let's talk a little bit about the advantages of one-on-one trading. I don't have much time here, but let me condense it for you. The advantages of one-on-one trading. I know Superman's got a new movie out. Maybe this is the perfect picture, but personalization. One-on-one coaching is tailored to traders' specific goals, challenges, and personality. We can customize your approach and strategies to address your specific, unique needs. It gives you focused attention. You're going to receive our undivided attention. And, you know, sometimes your issue can be related to your trading plan. And if you're in this program, I don't mind reviewing your trading program. Again, I've written books on a trading plan, and maybe I can give you an idea of how to match you as an individual that we found out because we're working with you with your trading plan. Because a trading plan, for instance, that requires you to be patient and may only have 1 or 2 signals in a 4-hour trading session, and you're not a patient person, this is not the trading plan that you want to follow or follow without adjustment. So I may suggest that you adjust your trading plan. Instead of using a 10-minute candle chart, maybe go to a 2-minute. It still gives you some time to move, but it's going to expose a lot more trades for you. That's a simple solution. There are others that I have for adjusting your trading plan if you have lack of patience. But what I'm talking about is that I'll be there also to help you once we discover you know, your inner workings and how you think. Okay, so you're going to receive undivided. This is a plan about the mental part. I mentioned my expertise because anybody that commits to a program like this, I can't help, but I want to help you with the full package. So if I can jump in there and take a look at your trading plan, I will. But the program is about the mental state. Okay, so you're going to receive undivided attention and get you that deeper exploration of issues and more comprehensive solutions, as I've kind of beaten you up on today. Confidentiality. Personal matters can be discussed in a safe, confidential environment without the presence of others, promoting open and honest communication. I mentioned that where you are today is a culmination of your own personal experiences. You know, if you've, sometimes a particular trauma or say lack of funds, you're trading with very short money, or maybe you're trading with a lot of money and you've been losing that, and it was inherited money, and you feel guilty about, whatever it is to you is part of what Tisha really needs to know. And I'm not usually, and I'm not in these particular one-on-one sessions with Tisha, but so if you don't want to share it with me, you don't have to. But I will say that that sharing where you are personally that surrounds your trading and is likely affecting your trading is important to understand. So personal matters can be discussed in a safe and confidential environment without the presence of others, and all the in a Zoom room where you're sharing your thoughts. No, this is a one-on-one situation, so it's very, very important. Of course, flexibility. That's me as a younger man. I think Anthony can attest that it really is me. No, it's not. Coaching sessions can be scheduled at any time that's convenient for you, accommodating your lifestyle. Okay, that is, we will bend over backwards. How's that, Anthony? I think that's reasonable to say. We'll bend over backwards to make sure this works for you. But this slide is about knowing that we have a calendar and you pick the time that you would like to meet with Tisha all along the year. Okay, so this is starting to hurt my back looking at this. Advantages, another advantage of one-on-one coaching is the rapid progress. One-on-one coaching enables quicker progress since we can immediately address any obstacles or challenges that arise, even with one R in arise, during the session. I think Anthony and I should take one of those R's from arise and put it into during. And I think I'll have the right slide there. I've got to beat myself. I made this slide. In any event, the idea is that I told you about. I mentioned the fact that EFT can give you that immediate transformation, and then then building the neural pathways in conjunction with that is the process that results in your rapid progress. Okay, so one-on-one coaching, very key there. Accountability. Maybe the most important of all. Tisha and I can closely monitor your progress and hold you accountable for your actions and comments. There are extra 2 hands there. I guess that's my dog pointing at you too, leading to a higher levels of personal responsibility. Real results. Look, listen, we all know that if you're accountable, some people don't like to be accountable. Because they feel like they're being treated as a child. That was me years ago before I met Tisha. Then when I married her, you know, and this is already 40 years ago plus, and I walked out the door. I used to walk out the door of my office, and she would know if I had a good and bad day, depending on how I looked and how I acted. If I was short, she says, we got to change that. It took her about, I'd say about 2 weeks of her making some special subconscious trainings for me, and I've never looked back. And I said to her, I didn't say to her then, but as we were living together and loving together, as the years went on, I said, you know, if I'm going to do this with traders and stop managing money, if I'm going to help traders be successful, I need you, because I couldn't do without you. I'm getting chills just talking about how she affected me and how I'd like her to do the same thing for you. So accountability, very aware. A customized feedback. The feedback provided in one-on-one coaching is specifically tailored to your unique circumstances and needs, leading to more relevant and actionable insight. You know, I talk about when I coach people in our trading plan, and when Tisha coaches them in this laser, there's a lot of praise and there's a lot of correction, etc. So there's you got to be real, but you got to also appreciate the effort being made. And so when you're coming back and saying, hey, I don't have, and you're admitting that things are not going the way you want them, that admission is part of the solution. So the feedback provided in one-on-one coaching is specifically tailored to your unique circumstances that you express to us. Okay, so this is Brian, who was on he was one of our first clients a few years ago when we started this. My trading results have improved in only 2 weeks. I have become more patient and find myself looking for optimal entries and not having hesitation to pull the trigger even after a loss. If you follow Norman and Tisha's guidance, you'll do the tapping sessions and short meditations. I believe the program can make you a more disciplined and profitable trader, as it's already doing for me and continues to do for Brian out of the UK. Here's something from Bill Rainey, who's a banker. Norman and Tisha, amazing instructors, integral part of the journey to become a consistently profitable trader. I struggle, but the subconscious trainings, along with Tisha's calm and masterful use of psychology to get to the real trading mindset, have changed my life. I could go on for hours, but I stopped him because I'm a kind of guy that likes to read things in bullets. But I will say that, you know, Bill's a terrific guy and a banker, and you know, he can take his banking acumen of seriousness and really bring that to trading, which is part of his solution. But everybody has their own thing. Everybody has the elements that we can help you put together and make you a better trader. So here is the VIP laser coaching offer that I have for you. First of all, the unlimited 15 to 20 minute coaching sessions for a full year, so that we're there when you need us. Now, I say 15 to 20 minutes. We call this laser coaching. The first couple of sessions are going to be longer. They're going to be 45 minutes. They're going to be an hour. I've seen Tisha go over an hour. Okay. 15 to 20 minute coaching sessions for a full year, so that we're there when you need it. Again, 15 to 20 minutes is all Tisha needs once she knows all about you and where you are. And then it's a matter of kind of keeping the plate spinning on the stick. There used to be a comedian on an old show that had 10 poles, 10 broomsticks attached to the, you know, in the floor that's standing upright, and he'd spin some plates on it. He'd have all 10 sticks spinning the plate. He'd have to run over to another one as it was wobbling. I guess I go off on a tangent here, but the idea is that sometimes it may just take a little bit of injection or a little question or whatever. It doesn't take long after a while. We get right down to business in these VIP laser coaching sessions. So we may ask you about how you're feeling, if you got over the COVID or whatever, or the cold, or ask how the dog is or whatever, but that's going to be just one question. We'll get right into it. What's your issue? Let's fix it right now. So we're very, very serious about getting you where you want to go. So they're unlimited 15 to 20 minute sessions. Again, the first couple are going to be much longer than that. Customized personal subconscious trainings and EFT sessions created and delivered to ensure the most rapid behavioral transformation. So what's going to happen is that once Tisha decides what your situation is, and then records right there live with you on Zoom a custom session for you. That recording will be delivered to you, and you'll take it. You'll listen to that recording or that EFC video exactly when Tisha asks you to do it. Once a day usually is what she wants to do with the subconscious trainings, and for the EFT sessions, it's usually just 1 or 2 times after she works with you. Again, that gives you kind of that immediate clearing of that issue with the EFT. So you get the more personalized, and every trader is different. I can tell you that from experience. There are no 2 traders alike. This is why somebody who gives you a trading plan that they've been making all this money, and you see somebody's track record and they're making all this money, and you take it, it's not a fit, because every trader is different. And that's what we're into, customizing, fitting you into your trading plan, so to speak, okay? Access to the disciplined trader's full array of scientifically proven mental and emotional trading tools, giving you immediate help at your fingertips. I'm going to give you a temporary access, if you don't already have it, to our Disciplined Trader Mastery Program. This gives you, this has, for instance, it has all of my 203 4-minute drill for traders, so that you can actually get a punch in the middle of your face with the truth about something based on the title of the 4-minute drill right then and there, anytime you want it. Because when truth is delivered to you, it really gets you. It really makes sense, and it really motivates you to do something about what you're asking. And so, that's there. We have subconscious trainings that I mentioned to you, the standard ones. We have the stock EFT sessions that I've mentioned. I've already shown you six of them there. There are more. But anything that Tisha prescribes to you will be, she'll say, go over and grab this. It's in your library. So she'll do custom. She'll sometimes give you some of the stock stuff. Whatever you need in combination, you're going to have it. Plus all of these. I've got downloads of books that you'll have access to, books on concentration. For people who really like to read stuff and understanding the idea behind the mental and emotional piece. I'm not a big book reader. I'm more of a Reader's Digest kind of guy. I'm more of a bullets kind of guy. But we have what you need. But the most important part, again, is the customization. But you're going to get also access to all of the other material that we have, and full email access for quick response to any questions, not requiring an in-person meeting. Sometimes you just have a question. How many times should I take this session? It's really good. Do you have any other sessions like this? Or I'm really nosy. Do you have one on not moving my stops around? Is there something I can do there? Sometimes, boom, it's sometimes just an email will do it. We're very good at answering very quickly. In fact, some people accuse me of not having anything to do, and Tisha, because we really honor those who honor us with their subscription to us. Okay, this is a $5,000 service, and it's a $5,000 service because it was originally, and still is, designed for professional traders. That $5,000, when a firm has a room of traders and 1 or 2 of them are not trading responsibly, they'll refer them to us, but they'll usually make the trader pay $1,000 or $2,000 up to $5,000, but the company will pay the rest, and happily, because they understand, if you're trading clients and customer money, for $5,000 ticket to get one of their better traders straightened out is worth it. So that's a standing number for professional traders. But when we offer it to retail traders, we can cut it to that half. But for today, I wanted to cut it even more at $19.97 for the full year of the VIP laser coaching. But Anthony and I, we've done a lot of these together, and I'm proud to be part of the presenters at Traders Corner, and I wanted to make a special offer for you. I do this once a year, okay? I do this the first 2 weeks of January, and this is the last really day of the first 2 weeks of January. It's going to not be $19.97, but $9.97. Puts you in the same in the same construction as we work with professional traders to do this. Okay, $9.97, and it expires at midnight today. Either you want this or you don't. I'm talking Eastern time. You got to use the code LASER2025, if you can put that in the chat. And here is here's the site you need to go to. This is a special site just to sign up for the disciplinetrader.com/laser. This is the laser coaching commitment page, okay? But use, it's priced at $5,000, but use this code laser 2025, and this code expires at midnight. It will get you for $9.97. So if you've been struggling and you know it's you and you're brave enough to admit it and you want to change, let's do this. Let's get this done. Okay. If you've got any questions, since this is short, usually I take questions here. You can write me at the Discipline Trade and Hallett at thedisciplinetrader.com. Okay, Anthony, I think I just made it. I didn't give you much breathing room there, so I apologize to the next speaker. But what I say is going to help the next speaker because they're going to be mentally prepared to run a trading plan that's worthwhile running. So thank you, Anthony, for the time today.
I agree. Thanks, Norm, for switching it up and offering this to our traders today. This is really important stuff, and we don't get coaches like this usually. So this is really great. I really appreciate what you did here. I'm typing in your link right now. So.
Okay. Who's following me today?
The world.
Everyone's the world as well.
Yeah.
I should ask that. See, it's always the way you ask the question.
Yeah.
Who's the next speaker?
Oh, sorry. The next speaker is, let's see. I put the link in there, so that's there. Sorry.
I saw it, Gary. You're like me. You can't do two things at once. And also, make sure everybody knows that the laser 2025 is going to be the code that you've got to put in, laser 2025.
Yeah, the code is above that. So
okay, gotcha. Love it.
So that's there. And Rob Premkumar is after you, so he's coming.
Oh yeah, you want to stick around for him. So yeah, very good. You got
Thanks,
me sandwiched between two greats. So thank you very much again.
Yeah, thank you. This was really great. Really appreciate it. Guys, you got one of the best at your fingertips. Make that money, call them up. Get stressed out, make that money, and then call them up. Do it. Thanks, Norman. Congratulations on your success as a prop trader. Your resume speaks for itself, and just such a great presenter. We really appreciate it. Great information, and your presentation was certainly enlightening. It's always great to have you on Traders Corner. Ladies and gentlemen, that was Mr. Norman Hallett of thedisciplinetrader.com. That's thedisciplinetrader.com. He lives it. He is it. If you're interested in being mentored by a professional trader with 40+ years of experience who can pass a prop trading evaluation with ease, then look no further. You can learn more by clicking on the link in the chat box, which we did put there, and we also put the code there. So thanks again, Norman. It's always a pleasure having you on Traders Corner, and we hope to have you back again.
Take care.
Thank you. We really appreciate it. Always love when Norman is on the show, but let's keep the ball rolling. Our next guest has over 20 years of experience in institutional asset management, including large investment banks in the USA. He has built advanced financial software for both retail and institutional investment management systems. We're really switching it up. This is great. His focus now is on building breakthrough trading algorithms for retail day trading and swing trading markets. Here to present level 2 order flow liquidity trading strategies is Mr. Rob Premkumar of BuySide Global. Welcome back to Traders Corner, Rob.
Thank you so much. How are you guys? It's a great privilege to join us today.
Yeah, it's going good today. Thank you. Our market's up. We're doing good. Yeah.
All we need is volatility. We don't care about direction. We don't care about anything else.
You are right.
We look at the volatility. As long as market moves, we are in the party. All right. So let's get started. So we are going to talk about liquidity trading. This is something we started like a year ago, but we have been researching almost like a past 3 years. But some of the things I'm going to show you, doesn't matter what kind of strategy you're using, it's going to add a much more power, like another arsenal in your trading to add confirmations or even new entry strategies or new trade management or stop loss, everything. So let's get started. I am Rob from BuySide Global. Today, we are going to learn about liquidity trading strategies. When I say liquidity, we are talking about level 2 based order flow data. Okay, so before we get started, I want you to understand the risks involved in trading, because this presentation is purely meant for educational purposes only. So I want you to understand risks involved in trading. If you need to understand the complete disclaimer, please go to buysideglobal.com/disclaimer. All right, so I don't want to get started with right away with the strategies, what to look for, what to trade, all those things, because sometimes you need to understand the basics, the fundamental of anything that we do. That includes the trading strategies. So I wanted to walk you through some of the very basic information that you might know, might not know, but it's my job to just refresh your memory, to give back the reason why on things what you see in the trading. So to start with, I would like to ask the simple question: when and why the price moves? This is the question you need to understand. Most of the time, if you don't find the reason, not the reason, why the market behaves when the price moves, you will be at the disadvantage. That's why I wanted to give you some of the foundation information. So let's think about why and when the price moves. What are the reasons behind it? To understand the concept, I wanted to bring back the pricing auction theory, because the market works purely based on auctions. Every time the market buy orders, sell orders, limit orders, anything goes there, it is an auction, real-time auction happening on the exchange based on all the orders coming in, and then orders getting fulfilled based on brisk, transparent, efficient market strategies. So to understand that, best example is I would like to give on the housing market, because auction theory is the same, but instead of going into the complex how exchange is executing orders, how the price moves, everything, I want to understand how the auction process works. Because if you understand the basics on the auction process, then I'm going to explain a few things you'll be able to understand much better. So let's say that you wanted to buy a house, you're looking for a house for a long time, and then when you see a house, let's say whatever you're looking for in the house, your dream house, you went there, you checked it, everything, it checks all the boxes that you're looking for. You wanted to buy the house, you really wanted it because it's really good, everything. But the problem is the seller is asking like $500,000. So what's your next step? This is where we are right now, right? When I say I'm trying to compare the analogy between the housing and then the stock market, including futures market. When I say asking $500,000, the current price. So if you look at the chart, you see current price, whether you need to know whether I should sell or buy, everything. You have to make a decision on that point. So in this case, if you want to buy the house, they're asking $500,000. How you gonna respond? But you know you want to buy the house. What you can do? First thing is, what is the fair value of the house, so that I will determine what I can offer to the seller. Okay, so what do you do? Same way in trading, what do? You look at your charts, look at historical price movements, historical moving averages. You look at all the price movements, everything historically. Same way in houses, we look at the comparables. We look at what are the house sold in the same street or similar sizes, similar kind of features, everything. What is the comparable houses sold in the neighborhood, zip codes. We do analyze the past transactions, right? It's same analogy goes for housing as well as stock market, everything. We look at the analogies, historical information. Okay, so now based on those historical information, historical chart, historical averages, I think the buyer is asking the right, almost close. Okay, so I'm going to decide, I'm going to give the price whatever the seller is asking. I'm not asking less, I'm not offering less, I'm going to give exactly what he's looking for. So you're going to place the offer for $500,000. Okay, so now think about what are the chances that you're going to get the house. So just because the house is listed and then the seller is asking $500,000, you offering them $500,000, there is no guarantee that you're going to get that house. Why? The reason is that there is a hidden information that you don't know. That's what is blocking between you and then your dream house. What are those? The offers, other offers that the seller is getting, right? So which you will never know until it's all over. So let's say in this case, the seller is asking for $1,000, your offer is at $500,000, but the information that you don't know is the current prices, other offers. Some other buyers is offering 520, some other buyer is offering 490, some other buyers at 510, 550, and then this is the current offers the seller is getting. If these are the information offers that seller is getting, now think about what are the chances you're going to get the house. Absolutely not. You're not going to get the house because seller is going to pick the best offer at 550. He's going to move on, right? So that's why you need to know there's hidden information in the market that you don't know that affects your success in getting what you wanted. So same way, like I'll give a little bit data, but now think about the reverse side. Now in this case, we saw that there are a lot of higher bids, 550, 510, 510, 520. That means you're not going to get it. But in this case, if you know this information, let's say that you know this information, looking at those offers, if you are able to find it somehow information, your offer really should be like 551, right? 551 exactly, raise the bid by the top bidder, but you don't know the information. Same way, think about if there are only two other offers for the seller, both offers are like much below, right? So one at 455, one at 465. If your offer is at $500,000, what do you think happened? You almost lost like another $35,000. You are overpricing yourself. You're gonna get the house, but you paid more. What you could be paid less. So on the third scenario, what are if there are no offers in the market? There are no offers in the market. There's nobody wanted to buy the house. Everybody checked the house, maybe saw something which you didn't see. That means there are no buyers, but you're offering $500,000. Now you're getting into the gray area of something you don't know. So now in this case, all three cases, you are losing something. But I want you to ask the same question what I asked before. Why the price moves, and then what impacted your transaction success or failure? Okay, so in this case, it's purely based on the offer flow. Just because what the seller wanted, just because what you want to offer, it does not determine anything success or failure. So you need to know what other offers the sellers got, what are the different numbers, and then how many buyers, everything. So we call that as like offer flow. But in stock market, same thing. Futures market, everything is order flow. When you are looking at the market, when you're looking at the market in the chart, you're looking at the historical pricing, average prices, and then the RSIs, MACDs, or whatever special indicators you're using. When using those level one data in the sense, it's based on historically price movements, how the price moved or like behaved in the past. That's what it is. But that's gonna give you guidance, but it's not gonna be the final decision maker. Okay, so in that case, what really matters is order flow, because just because price moved in a 10 like 50-point range or 100-point range for past 2 days does not mean the next very soon price will not break out or go back to the range. There's no, that's why we look at the order flow, or how the orders coming in terms of buyers and sellers, who is more aggressive, who is more passive, how fast the orders coming in terms of buy orders and sell orders. We need to look at everything. For that, you really need to look at the level 2 order flow, because level 2 order flow gives you much more in detailed depth data of what's happening in the market right now. So order flow does not tell you based on what happened in the past. It's based on how many buyers you are getting, what is the quantity, how many contracts, how fast they are moving. All the details are in the order flow data. Okay, so now again, let me ask you, in the futures market right now think about how, when, and why the price moves in the futures market. Okay, so being that said, again, historical price movements can only tell you how price moved in the past. That means you can make the decision, guesstimate, I would say guesstimate on how it could move based on what you see based on the past movements. Okay, but only the current, the next price movement is purely dictated by the current order flow. Okay, think about like when the ES at 5800, when there are more buy orders coming in, what do you think the price is going to happen? It's going to obviously push higher and higher if there are more buy orders coming in to the exchange than the sell orders. Prices obviously is going to increase irrespective of what is your moving average, what is your MACD, what is your divergence. Doesn't really matter. So order flow is the real reason. So in nutshell, you need to know what is exchange is getting in terms of order. Are they getting more aggressive buy orders, buy market orders? When I say aggressive buy orders, I meant by market orders. Are they getting more aggressive buy market orders, or they are getting more aggressive sell market orders? Or they getting more passive limit orders, pass buy limit or sell limit orders? If it is a limit orders, obviously there will be a lot of limit orders, but what price point there are a lot of accumulation, a lot of like a huge block sitting there to get executed. You need to know all those insights, how the current order flow stacks against in the exchange for the instrument you're trading right now, because that is what is going to control the price movement. Okay, so that's something very, very important. Let me explain you in a little bit clear manner as well. Okay, so to give you a little bit perspective, the difference between level 1 data and level 2 data, if you go to the, if you open NinjaTrader, go to Super DOM, if you see just the best bid and best ask, if you can see the mouse movement, you can see the 9, the best ask, 15, the best bid. That's what you see. You don't see anything on the level 2 screen on NinjaTrader. That means you have only level 1 data. That means you can see only historical price movements. You can't see anything current order flow. So if you need to see the current order flow, you have to subscribe to level 2. Doesn't matter where you are getting your data, market data, or Rhythmic, or like NinjaTrader, or a DX feed, or like doesn't matter. Wherever you are getting the feed, you need to upgrade to level 2. You will start getting all the order flow, all the limit orders, all the passive orders, full stack of orders coming in, everything brokerage. You're going to see everything changing real time, very, very fast. So with this information, you should be able to figure out how the order flow stacks against the market sensitivity. Okay, so to explain that little further, I wanted to give you a little bit of examples as well. So to give before we get started, the DOM, anytime the price in the current price is highlighted in the yellow, all the bits are stacked on the left below the current market price. All the ask stacked above the current market price. The best ask is closer to the current price. Best bid is closer to the current market price. Okay. So I have two scenarios to explain much a little bit even further. So I have Super DOM where we have all the detailed level 2 order flow. When you see 11, 13, those numbers are 11 sell orders, like best ask right here at 52, 55, 22, and then there are 13 contracts, sell orders sitting at 55, 22. These are passive limit orders. So what are passive limit orders? Anytime you place a limit order, or anytime you place your stop order, anytime you place your target orders, stop orders, is all limit orders. You're telling the exchange that execute these orders when the price cross this particular price. You are telling the exchange don't do anything until the price crosses this price level. So when the exchange gets it, it stacks all the information in a Super DOM, so you can see it will change real time, because traders around the world trading the same instrument just like you. So the orders are flowing in through the exchange. It get updated real time. You can see everything on real time as well, changing very, very fast. Okay, so being that said, let me a little bit of example of how the price moves. So let's say this is the current stack of order flow. That means 11 ask at 55, 22, 13, something like this scenario right now. What if somebody plays a aggressive buy order of 500 contracts? Aggressive buy order of 500 contracts. What will the market do? So if once exchange will look at the order, okay, somebody asking for 100 contracts, they executed a market buy order. That means they are aggressive buy. That means I need to deliver the 500 contracts. What will they do? Exchange will pick up the 11 from here, 13 from here, 9 from here. But so they are keep on adding until they got 500. That means 11 plus 13, like 24, and then keep on adding until they are able to grab 500 contracts. So in this case, they are grabbing all those. When it comes to 152, they grabbed almost what? Let's say 472, and then they need just 28 more. They'll take the 28 from this guy, like 160, take the 28 from this guy, and then this number will become 164 minus 28. The price will move from here. So in this case, the aggressive order, find the contracts, move the price to 10 ticks. Okay, 10 ticks. Okay, so let's look at the next scenario where we have, instead of 11, 13, 9, 12, 13, this kind of numbers, what if we have a heavy, high volume sell order sitting in the stack, like 289 ask at 5522, 288 at 5522, something like that. How will the price move? Now, same case, I'm going to same thing. In the same case, there is a exchange is getting a market buy order for 500 contracts. What will the exchange do? They're going to grab the 289 from here, and then remaining 211, they take it from here. Now, by just grabbing the contract from just two places, they're able to fulfill the market order of 500. Now, how the price move? Just one tick. Price moved one tick. In both cases, the exchange got only aggressive 500 contract buy order, both cases. But in one case, it was a price moved like 10 ticks. The other case moved only one tick. Why? Again, the reason is as simple as the order flow, because in the order flow there are more sellers here. In this case, that means the buy order is like not even able to push the price further, whereas there are no sellers. When the buy orders comes in, it's able to push the price further. Same order based on how the current order flow stacking the market, how it's changing in the market, price movement. That's what we mean when we say current order flow dictates the price movement. You need to know, look at the price current order book, current passive order flow, current aggressive order flow. You need to look at those order flow so that you will know how the price is going to move or not, which way it's going to move. Everything you can see at those level. That's why we always look at the level 2 DOM, where we look at the order blocks sitting in the exchange. Okay, so being that said, this is the information available to you. Just because I don't know how many of you here have level 2 data as well as trade with level 2 data effectively, because that's very important. Most of the traders don't even look at level 2 because they don't know how to use it. They don't know how to leverage it. Okay, so sometimes you need to understand that, like in the same example that I showed you, when the small order blocks like 11, 12, 13 doesn't matter, it's not going to stop any big buys or anything like that. But whereas if you have a huge order blocks, that can really control the market. That's what we see. Not all liquidity really matters. When we say liquidity, these are liquidity market participants. More participants in the market, that means more liquid. When I say liquidity, we're talking about the biggest order blocks sitting in the market to be executed. Okay, so we don't really care about anything 23, 63, like a 97 small thing. We want to look at the large numbers, the biggest order blocks, how it's behaving, how fast it's changing. If the number is changing, increasing or decreasing, we want to look at those dynamics in the market. So that's why we say not all liquidity matters. Only the largest, persistent, concentrated liquidity blocks really matter. So that's why we created a indicator called BSG liquidity zones. It's a level 2 database indicator. We have built algorithm to analyze all the information from the level 2 order flow. It's going to plot you on the chart. I'm going to show you, I'm going to teach you very few things. I'm not going to go through in detail. We'll provide the training, everything after the purchase, but I'm going to give you a little bit of information how to trade based on those. Often people get confused about there are market depth indicators like a book map, all the things. No, market depth is different from liquidity zones. The difference is If you go and open the book map, it is a market depth. It's going to color code all the orders, all the orders in the market. It's going to color code it. It's impossible to trade. Okay, but whereas liquidity zones, we only pick the I can't explain you how we pick, but algorithm picks only the, like I said, persistent, consistent, like a constant order flows that really matters. Bigger blocks, that what we look at in the order flow. Algorithm able to remove all the noises, pick only the important order flow that can really impact the trading. We only plot those information. That's why this is not a market depth indicator. It's liquidity zones. We look at strongest liquidity zone where price really move matters. Okay, so what I'm going to do next, I'm going to show, this is the chart. This is the ES chart from yesterday. This is the ES chart from yesterday. How many of you traded ES yesterday? How many of you traded ES yesterday? Because this is ES chart yesterday. I'm going to show you. Okay, so after this chart, I'm going to walk you through 3 setups. I'm going to walk you through 3 setups. Once if you really understand the 3 setups, I'm going to show you the same chart, and then you should be able to tell exactly how you could have picked this trade, you could have picked this trade, you could have picked this trade on a Tuesday. Okay, on a Tuesday. Tuesday was a very good moving day, almost like a lot of traders made money. But how good is a system if I show you only the moving day, like where a lot of people make good money? So I also have another chart here. This is from Monday. Monday was really a whole morning. First half of the day was super choppy, sideways. Market was like range bound. So even in this case, if you follow the same setup that I'm going to show you if I show you the same chart after the session, you should be able to figure out how you're able to find these entries and exits on this is from this Monday on ES. So I'm going to show you the both scenarios. Same chart, you will be able to figure out on your own. Okay, let's get started. The first one, the very first one we're going to talk about here is the setup number 1, the highest probability setup, which is trade swap. That means seller's control will be replaced by buyer's control after the breakout, or the buyer's control replaced by the seller's control. So what do I mean by that? Remember that in the liquidity zones chart that we showed you, we're going to plot the strongest bids and strongest ask based on the liquidity zone algorithm. So you will see the strongest bright reds or bright greens. So those are the real lines you constantly watch and monitor. So if you are able to, if the market is consolidation, let's say the market is like a bouncing between the, we call that as a rectangle zone, consolidation zone, right? So if the market is consolidating over there, once the price breaks out, come back, pull back to the same level where the strongest like sellers area were, bounce from there. This is what the setup we're looking for. But particularly what we're looking for is this particular point, price return to the level where the previous seller's control was. So this is what we're looking for. We're looking for swap, seller's control replaced by the buyer's control, and then we enter the trade. This is one setup. So how can I look at the chart? So here is a screenshot from our product based liquidity zones. You can tell. Okay, let me draw it up for a second. So if you look at here, you can see like a lot of sellers control here, a lot of buyers control here, and then the market just like sellers did not move, buyers did not move. The market was like range bounded. But once the market was able to break out, you can see, like I said, the setup 1, sellers control become the buyers control, the price moves. And then same thing here, seller's control was replaced by the same price level, buyer's control. The red becomes green, and then red becomes green, red becomes green, and red becomes green. So anytime the red becomes green, it's a buy opportunity. Sometimes it'll be reverse. So what do you mean by reverse? You will be able to see the strongest buyers become sellers. You can see the green became the red. That's the shorted opportunity. So this is the simplest way you can identify the clear breakout based on the level 2 order flow. Okay, based on level 2 order flow. Meanwhile, if you have any questions, please type of questions in there. I should be able to answer end of the session, or like if it makes sense, if I need to answer while presentation as well. So anyway, what we're looking for, like I said, we are looking for the swap. The seller's control becomes the buyer's control, or the reverse. That's our setup number one. Anytime we see the sellers become buyers, we take a long position, we place our stop right there. So every time, not only this setup is going to give you the entry, it's also going to give you the stop where you should go. Very, very precise stop. If you are taking this as long, your stop is below, couple of ticks below this buyer's control. In here, stop here. In this case, the stop is here. In this case, so you're gonna leave some breathing room, because we're gonna explain the concept called the liquidity sweeps. So we need to have some breathing room. So this is our setup number one. But let's talk about fast about the next setup, which is okay. So this is like a setup number two. The only difference is you don't have to wait for the green opposite zone. We can just take it as long as price return and then bounce from there. So let's say the price breaks out and then like retrace back. Don't enter yet. Once it start bouncing on the same level, we're going to enter. So how can we see it? You can see right here in terms of when the price breaks through, come back to the same level where the previous sellers control were. Same thing. There was like a lot of sellers, price moves there, come back here, same level. So strongest sellers control, come back. This is what we're looking for in the second setup. So in this setup as well, you can see much higher probability of trading success. Okay, so last one I wanted to talk about here is liquidity sweeps. Liquidity sweeps is nothing but anytime the price, instead of breaking out, we saw the breakout. What is breakout? Price goes past that liquidity and then going even further and then return back. In this case, as soon as it grabs liquidity, it return back. It's like a spring, go take and then return back. So we're looking, when we see anytime price rejection from the liquidity zones, that is exactly called liquidity sweeps. It's immediate reversal. So we can look at the candle patterns on the behavior after the liquidity sweep happened. But when I say liquidity sweep, it need to clear the liquidity. That's very, very important. So in this case, it is the liquidity is right here. This is the liquidity. Price goes there, take the liquidity and coming down. Look at this, take the liquidity coming down. But whereas sometimes price goes close without even touching the liquidity returning, don't take that. That is not liquidity sweep at all. Even here, liquidity was here, it didn't even touch it. It's just very close, very close. It's not going to work. Okay, so let's look at that one. So in this case, I have a chart here where how much I'm doing with the time. Okay, I have 20 minutes more. Okay, so in this case, I have a chart here. I want to show you both setup number one as well as the liquidity sweeps. You can see I wanted to see the pricing action every time the liquidity sweep happen. Okay, so look at this. Liquidity sweep, rejection, go to the opposite direction. Liquidity sweep. Every time you can see the liquidity sweep, it's always like a go to the other end of the swing. Clearly, that's you will see the liquidity sweep as an effective way to enter on a range bound market, because when the market goes sideways, it knows what is the extreme end. It takes a liquidity and then go to the opposite end. Takes the liquidity from one end, it goes to the opposite end. It's like ping pong between both the ends, back and forth. That's what we look for in the liquidity sweeps. Most of the time people talk about liquidity sweep based on the supply and demand, based on the ICT fair value gaps and all, but we have a much better way, clearly see it, where is a liquidity sweep, whether the rejection, everything you can see it very, very clearly with our liquidity sweeps indicator. Okay, so let's give you one more chart as well. In this case, if you look at here, when the market opened, market was range bounded here, but eventually it was broken. You can see sellers seller control replaced by buyers control, setup number one. But after that, market went into a range. Can you see that market went into the range choppiness for a prolonged time? But during the time, I want you to look at those particular liquidity sweeps. Look at this. Liquidity here, liquidity sweep, liquidity sweep, liquidity sweep, liquidity sweep, every time there's a liquidity sweep, you can see the price moves. Liquidity sweep to liquidity sweep. Okay, that's why the liquidity sweeps is a great way to see the rejection of the price level based on order flow before it goes to the opposite end of the pricing spectrum. Okay, so liquidity sweeps not only effective on the choppiness or like sideways market, it also effective on the trending market to reduce your risk. So for that I need to have a different presentation, which we will provide those training videos, everything as part of the product purchase. But all you need to do is like practice those three setups. The one I talked about, a breakout, and then the liquidity swap, sellers to buyers, buyers to sellers. Second setup where breakout and retest to the same level where the strongest liquidity which it was broke out of. And then third one is the liquidity sweeps. I want you to find out as soon as the price like rejected over there, the price after the price crosses, it's not going up, it just rejected immediately. As soon as it touches the liquidity, look at this one. Look at here, strongest rejection. Look at what happened after strongest rejection. More and more you watch, you'll be able to anticipate the price action movements much better. Okay, so being that said, let's look at in terms of how you could have taken the trade from the same thing that we talked about. So this is from yesterday, right? So I showed you a little bit a few minutes before. If this is what you see in the chart, if we add the how we could have got this kind of trades, this was okay. Now I have liquidity zones chart on. Okay, now let's see how we could have got the same trades, same opportunities. Okay, so for that, why did we take this trade? I want to look at the strongest buyer's control replaced by moment we saw the seller's control came in, we took the short trade where exactly the green became red. We took the short trade. Okay, so we didn't exit here. Why? Because price did not reverse immediately, it continued going down. But here, after going through this liquidity, it reversing back. That's why we exited here after coming back to the range. Okay, so that's why I want you to understand how we took the trade. Now, how about this one? This is setup number 2, where we saw that strongest liquidity and then price rejection over there, and then we took the trade here. Why we exited here? Because it was rejecting once and twice on this liquidity. Okay, so we exited here. How did that third trade? Same thing. It was rejecting once, twice, almost fourth time. It could not go below further. We kept our stop here, took the short, and then this is the trade. Everything is based on the order flow, based on 3 setups we talked about. All you have to do is practice again and again for at least like a couple of months. You'll be able to anticipate much better. Setup number 1, breakout swap. Setup number 2, breakout and retest. Setup number 3, liquidity sweeps. Okay, so now same thing. Let's look at in terms of how you could have traded the next one. This is for this Monday, the choppiest session, like sideways market on ES, very small range bound. How did we were able to figure out the complete precise trade entries and exits? Okay, now the clue is anytime the market is choppy or sideways, you need to look for liquidity sweeps. Okay, so look at this now. So if you look at this, you can see the market was like the outer edges here, right? Market is going between, but particularly you can see the liquidity sweep happened here. We didn't take the trade, but same place we had one more rejection. We took the trade from this liquidity sweep to the opposite liquidity sweep. Do you see the right there? And then when we saw another liquidity sweep above, the liquidity we had from the morning. From the morning we had this liquidity. It took the liquidity sweep, immediate rejection. We took this one, liquidity sweep to liquidity sweep. From here, we could have taken this trade, but we did not take it. But here, we took this trade, we went back to the same thing, liquidity sweep here. Look at another liquidity sweep. Price came back to them, took the liquidity and then reversing, and then went on the next liquidity sweep. So that's very, very important for you to understand. On a range bound sideways market maker job is to grab the contracts to deliver the market efficiency. They need to go and take your stops, take your limit orders, take your targets. They need they wanted to push towards the highest liquidity where the highest concentrated stops are. This is what we call it as stops hunting, right? This is what we call it as stops hunting, like order flow hunting or like passive limit order hunting, those things. So it happens every single choppiness day. You can see again and again. Okay, so in a nutshell, all you have to practice the 3 setups that we talked about in terms of to trade in any futures market, any stocks, any instrument, to use the 3 setups. You can trade in any kind of market. So that's why we wanted to talk about the importance of level 2 order flow, importance of simplifying the trade. The beauty about this particular setup is not only it's going to give you the entry, it's also give you the most high confident stop loss level and then the high confidence target level. In this case, even in the choppiest day, you're going to get the much better high confidence, like all 3. Okay, the product is like a base liquidity zones indicator. You need to have a level 2 data feed. It's a must. Okay, where all the trade setups are based on higher probability trade setups. You can get information liquidity zones there. So this is our pricing. This is our pricing in terms of if you are going to website right now, try to join us. The monthly subscription is $89 per month. You will get the indicator, you will get the your training, all the videos. You will get our some of the live trades and then explanation, our mind thought. We'll walk you. We recorded the videos while we're taking the trades, what we were thinking, why we took the trade, how we exited, how we manage everything. You will have all this information from our side to really get started. So for being in the webinar today, we wanted to offer you the best possible way. Use this link right now with buysideglobal.com/offer. You should be able to get the liquidity zones. Use the discount code level 2. Use the discount code level 2, the coupon code. You should be able to get the first month payment 50% off. Okay, let me paste the comments right here so that you know. Okay, all the audience here. Okay, also let me. Okay, so let me send you those codes as well here. So do you the level is the one we showed up on Superdome. There's a question here. We don't look at the Superdome. I'm just giving you example. We look at the direct data feed from level 2 data feed. We analyze all the level 2 order flow data, and then our algorithm is designed to filter the noises as well as find out the strongest liquidity zones, and then we try to find the strongest order flow. So yes, you need level 2 data feed. Yes, correct. Do you not use this indicator? You need level 2 data feed to your account, because this indicator looks at only order flow. It looks at the aggressive order flow, passive order flow, limit orders. It looks at the order flow entirely. So without level data, you won't be able to trade. Okay, so get the level 2 order data feed and then get the indicator. Watch our videos in at least next few days, and then watch the chart. Watch a chart, and based on what we are giving a training, and then see the setups, see the how it behaves at least for a couple of months. After a couple of months, you will be able to anticipate the moves, anticipate the entries, anticipate the sweeps, anticipate the breakouts. Your confidence level will go much further. So that's why it's like training is a key. That's why we focus more on the education, training, recordings, everything. So as long as you see, if you go to Superdome, if you see price levels, contracts at every price level, that means you already have level 2. That's what it means. If you see only one number, you don't have level 2. But if you see, like I showed you in the screen, multiple prices and contract numbers on each prices, that means you already have level 2. Okay, I think, do you have any other questions? I think I'm running out of my time. Last minute, I just want to finish in time for the next, to respect the next presenter's time. I think I answered everything. If you have any questions, please pull out your phone, take a screenshot where you have the link, you have the coupon code level 2, and then get started for the first month. First month is all about building confidence. Once you start seeing those setups, and then once you start the opportunities, you'll get excited. so that you can continue months after month. That's why we want to offer you the monthly subscription first month discount. Anyway, if you have any questions, please reach us at info@buysideglobal.com or the phone number 435-659-8581 during business hours. Thank you so much. Thank you so much for being patient, spending time with me today. I really appreciate it. Looking forward to see you on the other side. You guys have a great day.
Thank you, Rob. Such a great presentation. Ladies and gentlemen, that was Mr. Rob Premkumar of BuySide Global. If you're interested in learning more about those very powerful supply and demand order flow trading signals, he's put that offer link in the chat box, so be sure to click on it or copy and paste it. And you can find Rob at buysideglobal.com. That's buysideglobal.com. Thanks again, Rob. Come back and see us on Traders Corner. We really appreciate it.
Thank you so much. You guys have a great day.
Thank you. Ladies and gentlemen, our staff at Traders Corner sifts through hundreds of pro traders' resumes and brings you only the most credible and qualified educators to participate on our venue. And our next presenter is no exception. She specializes in helping people to day trade with confidence and ease. If you have the desire to learn to day trade successfully, she simplifies the process by completely breaking down the art of identifying high probability trade setups. Here to present Become a Profitable Trader, Get Back to the Basics of Day Trading is Marina, the trader chick Villatoro. Welcome back to Traders Corner, Marina.
Hello, how's it going?
Hi.
Thank you for
Good.
having me.
Thanks for being here.
And Happy New Year.
Happy New Year, thank you.
Are you gonna be able to give me access to share
I'm
my?
Sorry, I thought you had access already. Yeah, let me do that. Good.
All right, hang on
Sorry
just
about
a
that.
second
Yeah.
here. Okay, are you able to see my chart?
Yeah, we see your first slide. Yep.
Screen. All right, cool. Thanks again, and hi everybody. I am very grateful to be here, and Happy New Year. We are in 2025. Crazy year start, everything. It's already, you know, I think it's just in turbo as we are starting. So today, I am Marina, the trader chick, first and foremost. Hello, this is me, and I want to just go in and just give you guys a quick idea of who I am so that you know who I am and where I'm coming from. I'm actually right now in Barcelona. I am an expat living in Barcelona. We've been here for almost 2 years already, but before that, we had been expats for over 20 years in Central America. And today I want to talk to you guys about something that is overlooked, and let me give it to you straight. You guys will be watching all these different, you know, offers about signals and trade rooms and all this money that you're going to be making. It's literally taking somebody that might know how to drive a minivan and thrown into a Formula One race and not being taught how to even maneuver the car, and then expecting you to just follow along, and you pretending that you are going to follow along and win the Formula One race. It sounds completely ludicrous, right? Or another way for me to explain this to you, imagine you want to be a doctor and you might already know the physiology and anatomy of a human, but all of a sudden you are thrown into the operating room, given I don't even know what they're called, scalpels and other things, and saying, all right, go for it, and start cutting. You're going to stand there. You're not going to really know what's going on, right? Because you've never actually learned. I want to teach you guys all of that you need to know so that you are able to understand and follow along what those signals are all about, what those trade rooms are all about, because it doesn't matter if you're going to be sitting in those rooms, guys, because if you don't understand the basic language of what is happening, you're just going to be following along, and usually it's a delayed reaction. And usually when delayed reactions happen, what happens? You end up losing, right? It's exactly the same thing. I always say to people, like, they're like, oh, I want to buy a Trade Alert software, or I want to get into a Trade Alert newsletter. I'm like, the thing is with trade alerts is that the people are telling you and you are delayed. You've already missed the actual area to get in because it's delayed and it's from their filter. If you don't understand what you're doing, it's going to be impossible to get in at the right time. And why not learn how to do it for your own self? So today, that is what we're going to be talking about. We are going to be breaking it down so that you guys have the foundation, and then you can definitely go along and listen to what the trade alert rooms tell you, the trade specialists tell you, because you will understand what is happening. First and foremost, you want to understand that day trading is not investing. And why is that the case? Because unlike investing, with day trading, you don't want to diversify. So many people think that if they diversify and go into multiple different instruments and markets, that they're going to end up winning more money. It's literally the exact opposite when it comes to day trading. Why? Because imagine if your child wants to learn a musical instrument and tells you, well, I want to learn the violin, the drums, the flute. It's completely impossible for them to learn all three very different instruments at once, right? It's the exact same thing when it comes to day trading. You do not want to diversify, guys. You want to focus on one market, and that's the market that you need to truly understand and master. That means understanding the movement of it, understanding a strategy for it, understanding what is happening, and then entering the correct rooms to understand that versus just, oh, I want to just trade everything. We're going to discuss this a little bit more because a lot of people don't know what there is to trade. So today I am going to get over all of that so that you guys fully understand. But if you could get one thing from me today, is mastering that one instrument, one. That's when you can become a pro trader. Okay. The other thing with investors and day traders is that the difference is that we do not care if the market is going up or down because we could earn either way. Investors, if the market is going down, if it's going up, they'll sit through it because they are in it for the long term. We are focusing on what's in front of us right there, right now, because we make money either way. We look at the technical analysis so that we could understand what is going on. The other really important thing that I believe holds so many people from becoming successful is because there's so many limiting beliefs and misconceptions, or as I like to call them, myths about day trading. First and foremost, the big one is that you need $25,000 to get started. I mean, how many of you guys think that that's the case? Because let me tell you, it's not. Today, having a small account is completely normal. However, the myth of the $25,000 to get started actually began because brokers, which we're going to talk about, very, very, very important, is knowing the broker you are going to be working with. Brokers, what they used to do, and to this day they do it a little bit, is they say that they will give you a margin account. And what that means is they only give you margin accounts if you have $25,000 or more. Today it might be a little bit different, but what is a margin account? Margin accounts to me is literally loan sharking. Why? Because a margin account is nothing more than them lending you money disguised under a really cool name. You do not need to borrow money to go trade. You do not. You put in what you've got. Do not overextend yourself, because if you win or if you lose, they're coming back to get that money at an interest. Okay? That's where that $25,000 myth began. Today, you could have tiny accounts, $500 accounts that you could day trade, no problem. The other huge misconception is the amount of charts that people think that they need. You do not need a lot of charts. I use one chart, one monitor. This is super unsustainable, guys. This is not sustainable. Human heads are not capable of seeing all of this craziness going on in front of them. It's impossible, okay? You want to simplify your life. You want to look at one chart and you want to really learn it. And then you can continue with others if you decide, but until you are starting to make real money because you understand what is going on, please do not have these crazy setups. They do not work, okay? They don't work. So I want to talk to you guys about the different markets to trade, because a lot of times when I meet people and they say they want to day trade after they got over the fact that it's not investing, when they decide that they want to day trade, I would ask them, you know, what do they want to trade? And they normally spit out 2 to 3, sometimes up to 8 different instruments and markets. Let's really niche it down. Let's really laser focus it, okay? And once we laser focus it, that's when we could truly master and enter the correct rooms, okay? Entering the correct room is so important, guys, okay? You cannot join a trading chat room if they're talking about crypto and you're interested in Forex, right? It sounds absurd, even though they might say that they do it all. And actually, when people say that they do it all, that's when you need to run, because that means they're not mastering. What that means is that they're hiring a bunch of admins, a bunch of moderators who probably don't even trade, will take your money, and you will not have any learning possibility or understanding what's going on, because they personally don't even know either. The more you understand what you want to trade, the more you focus on the market you want, the better you become. Okay? When you become a doctor, there is a reason why doctors become specialists, right? Even in surgeries, very few are general surgeons. The majority of them are oncologists or gynecologists or dental, right? They get into that specificness. And guess what? Those are the ones that are truly making the money. Those are the ones that are truly making a difference. It's no different with the trading financial world. So let's discuss what markets are there. We all know Forex, right? Forex, foreign exchange. What is this? It's literally you just pairs of different currencies, right? The most hottest, of course, is usually US with Euro, but there's a lot more, right? The US with the yen, the Australian with the Canadian. It doesn't matter what pair you choose, but choose the pair and stick to it, okay? And maybe at most take on 2 pairs. You cannot go too crazy here either. Why? Because it's not about the currency and what it's doing. It's about the leaders, the politicians, and the kind of relationships they are having with the other politician of the other country. What does that mean? It means news, right? You cannot be on top of all news, but you could certainly be on top of 2 countries, right? Then you're able to master it. Equities. I love when people say to me, when I ask people, so what do you trade? Oh, I trade equities. Really? Because in the United States alone is 5,000 different stocks that you could trade, right? That is not a pro. However, if you ask a pro what they're trading, and if it's stocks or equities, they would either choose sectors, you know, maybe technology, pharmaceuticals, media, or they will focus on big caps, small caps, or even more specific, they get into the position, the actual companies, Apple, Meta, Tesla. These companies are huge movers, right? They are incredibly highly volatile, and that means that they move. There's a lot of volume to them, and that is where the money is made, is when there's a lot of movement. And usually those companies, because they are mature, are also the ones that move the smoothest. So when you really down or niche it down, that's when you become masters, and that's when you could also join the right trading groups or get the right idea and the right information. Futures. All right, guys, come on. Again, when I ask people, so what do you trade? Oh, I'm in the futures market. So you're telling me you trade wheat, soy, E-minis, the Russell, and crude? Those are 5 markets that could not be any different. Simply because they're under the umbrella of futures does not make them the same market. You need to, again, focus on what you want to focus. Crude will never move like soy, right? The E-minis, which is the index, will never move like sugar, right? So you need to, again, decide on the market, and then you'll understand what's going on. Options. Are you an options trader? If so, wonderful. Stick to options. Learn everything you need to know about options, because if you're in options and you want to do equities, they work differently. Does your mind and bandwidth handle that kind of a difference? Are you able to do that many? A lot of us just want to sit in front of the charts for an hour, right? You don't want to be killing your day by sitting in front of it for 10 hours per day. If you do more than one market, you definitely will. And if you're not, that means you are losing miserably. Crypto, again, great. Bitcoin, we know that Bitcoin is flying off the wall. Wonderful. But crypto itself has over 6,000 different altcoins and projects. 6,000. I actually think today there might be even like up to 15,000. Okay, every day it's more and more. Again, if you're gonna do crypto, focus on what you're gonna do. Are you into altcoins? Are you into meme coins? I mean, there's all these different things. You gotta figure it out, and you gotta stay the course. Okay, do not go completely all over the place. That is a guarantee for losing your money. Now, why am I so particular about the market you want to be in? Because everything has to go through brokers. Like it or not, we go through brokers. We are not big enough to go directly to wherever, and I don't even think it's a possibility anymore. There was at one point if you had a big enough accounts, but you have to go through brokers. Okay, so are you going to go to a crypto exchange if you want to do futures? Sounds pretty crazy, right? But I love the fact that people come to me and they're like, oh, okay, I just opened up a broker account and I want to do equities, but they opened it with a futures broker. I'm like, so how are you planning on doing this? Oh, well, this brokerage works with equities as well. When they also work with some other market that they don't specialize, this is what happens. Number one, their commissions are through the roof. Number two, they do not have real-time data. Number three, they are not the specialty, guys. You first need to find what you want to trade, and then you look for the broker. All right, now back to the broker. Why it is so important for you to know which broker, and also to ignore a lot of what they say. First of all, broker, their company, their job is your commissions. Their job is to sell you anything that they could eventually make money from. And that is how they coined the margin account and made it all look pretty and perky. Why? What is a margin account? I've already explained it to you. It is a loan sharking. It is them lending you money. Guys, when you trade, you need to call it play money. Why? Because there is a high probability in the beginning you are not going to be a huge success, especially when you are joining these trade chat rooms, buying absolutely useless software, joining alert groups, and a lot of us do that, right? Because we want to find the easy way out. When we figure out how to actually truly make money, wow, it becomes amazing. And you realize you don't need 95% of the stuff that you thought would help you, which doesn't. So in the beginning, it's about money that you cannot put if your father is in the hospital or for lunch for your kids. And you certainly don't ever want to borrow money. You do not ever want to have a margin account. This is not obligatory. It is not mandatory. And you could tell the broker, I don't want it. You do not want margin account. You never want to borrow money, right? Even if you win big, you're still going to have to pay them back, and you're still going to have to give them interest. But then you might lose big, and guess what? You're still going to have to pay them back, and you're still going to have to give them interest. All right? So now let's discuss the actual terminology, because to me, it actually blows my mind how many people put their real money into the market and they don't even know the difference between a buy and a sell, between a market entry and a limit order. So let's really understand the lingo. Why? Because the lingo is different for anything we do in life, right? If you want to be a doctor, there is a certain lingo, right? If you want to be a mechanic, there is a certain lingo. If you want to be I don't know, a personal trainer. There's a certain lingo. There's a lingo for everything, right? It's just normal. That's why they're different categories and little worlds, right? It's the same for the financial markets. It's exactly the same. Yet people think if I got a little bit of money, I don't need to learn any of that and I'm going to be a millionaire. It blows my mind that people actually believe this, and it's not true. It's not true. All right, guys, you need to understand even the basic lingo. So let's get that out of the way so that you can start to go and master your markets. First of all, what's a bull market? It's literally the market just going up. What is a bear market? It's literally the market going down. Nothing else. And you do not be like, oh, it's horrible, it's going down. Day traders probably make more money on the down market than the up. So a bear market could be really wonderful. There are 3 trends, not 2, 3. The upward, the downward, and the sideways. And the sideways trend, interestingly enough, is the one that you need to be the most aware of. Why? Because it's the one where you lose the most amount of money. So when you understand the sideways market, understand that channeling flat market and learn to stay away, wow, the amount of money you'll start to bring in and hold on to is going to be amazing. But if you don't know that, you're not going to be able to do that. All right, buying. When you hear somebody saying, I am buying or I'm going long, guess what that means? It's super simple. You are literally entering at a low price point, exiting at a high price point, and you are taking the money in between. Simple, simple, simple. Don't overthink this. The exact same thing goes for selling or shorting the market. Who cares if there's other people losing money? It's amazing to me. Do you know who those people are? When people are like, oh, if the market's going down, there's people losing. Who cares? You're not them. They don't know you. You don't know them. What is a sell? What is a short? Technical explanation, you're entering at a high price point, exiting at a low price point, and you're taking the profit in between. That's it. Don't overthink it. If your technical analysis is telling you to go for a short, boom, you short it. And that's it. Okay, guys? Hang on just 1 second here. Oops. 1 second. Hang on just 1 sec. Something just happened here. Are you able to see my charts? My screen? Hello, hello, hello. Are you able to see my screen?
Sorry.
Is anybody there?
No, we don't see it.
Okay, yeah, I figured that. Hang on a second. I just lost a little bit of, just give me a second. For some reason, my chart just totally went. Okay, wait 1 second here. Okay, here we go, here we go, here we go, here we go. Okay, are you able to see it again?
Yes, it's back.
Hello?
Yeah.
Are you
We
able
can
to see it again?
Yeah.
Is there anybody there? Am I talking to the air? Is anybody there?
We could see your screen. Can you hear me?
Okay, okay, cool. Nobody's responding, so I wasn't sure. All right, so
sorry.
next thing, profit target and risk management. All right, guys, this is really, really, really important. Why is this important? Because a lot of people do not realize that having a profit target is as important as having a risk management. Why? Because greed will kill you. So what is profit target? It is literally telling the market, I want to take my money here. I want to hit that profit target and I am going to cash out. Because what people do is they're, especially newbies, they see that the market is going in the direction, they don't put the target profit in because they're like, okay, it's going to continue. And guess what? It turns around right where you predicted that it's going to be, boom, and then it goes down. And because you also did not put in your risk management, you get stopped out or you lose your account. So you need to tell the market, look, here is the profit target and here is the risk management. Okay, you need to let the market know that you are in control. All right, and if you don't have that, it's really, really important to understand that you need it. Now, I'm going to go back to the analogy of the minivan, that you're driving a minivan, and if you want to be a Formula One racer, are you going to bring your minivan to the Formula One racetrack? No, you need the proper vehicle for that, right? It's understandable. The minivan barely goes 80 kilometers an hour, and you need a 250 kilometer an hour vehicle. You cannot trade on some rinky-dink app. You need to have chart platform. You need to have a really good charting platform. And today there are so many that are free and that are brilliant, but you need to have a really good one. And once you have a good one, then you are able to also do a lot more as a trader, okay? And usually the majority, actually I would say all of really good charting platforms, they all have indicators. They have universal indicators. You do not need to buy indicators, all right? It's really important. And I'm going to repeat once more. There are 3 trends in the market. There is the upward trend and the downward trend, which we are all very aware of, but you need to fully understand the sideways trend. It is crucial because this is where the majority of your money gets taken, okay? Now, I already mentioned about the buying and the going long, okay? Please understand the difference and the selling and shorting between the buy and the short. Really important. Now, understanding the difference with a market entry versus a limit order. What is the difference? First of all, a market entry means telling the market literally that you are an amateur. Oh, I don't really know what I'm doing. I'm seeing the market is going in this direction. Okay, I'm just going to enter. That's a market entry, right? There's no plan, there's no strategy behind it. But a limit order is literally telling the market, all right, I see that you're going in this direction, but I want you to fill me at this price range. And if it doesn't get filled at that price, I don't want to be in. Because you know what happens with a market entry? Not only are you telling the market that you're an amateur and you're kind of just going with it, the market also takes money away from you. It's literally like a fine. It's called slippage. And the market knows that and usually can fine you up to 20 to 25%. You don't want that. And if you're showing the market that you have a limit order, it's also telling the market that you know what you're doing. The same goes for the stop limit. The exact same thing. You are telling the market what you are willing to risk. If you are just taking the money out, getting out, you're going to, first of all, lose. You're not going to get out where you want to get out. And there's slippage. It's going to, again, fine you an extra 25%. Now, I've mentioned many times that if you understand technical analysis, you could totally rule the market. So what exactly is technical analysis? Interestingly enough, it's really, really simple. So what is technical analysis? So it's a few different things. Areas is the first and most important of all. You need to understand the areas because the markets revisit areas, and if you don't know what they are, you're literally just driving the car in the middle of the highway and not knowing if you're in the right direction or the wrong direction. You're literally just asking to be crashed into. So what are areas? We have the resistance area. If the market is going up and it starts to hit a ceiling, something 3 or 4 more times, that turns into a resistance area. The same thing if you're going down market and it starts to hit the floor, that is the support area. You need to have them worked out and you need to understand those areas. And my personal favorite is reversal patterns. This is all free, guys. You do not need to spend money on software or any of that because it's free. It's right there for you, okay? So reversal patterns. It is the up, it's the double top, double bottom, triple bottom, and the head and shoulders. What it shows you is that the market has a very high potential of reversing, okay? It is showing you that it is reversing. And you need to stay out to wait when it does give you that actual reversal patterns, okay? And then we have divergence. Divergence to me is literally my holy grail. So divergence, you could see the price action is going in one direction And my personal favorite indicator, the MACDs, are going in the opposite direction. Does it mean that the market is going to turn and reverse? No, but what it does tell me is that the market is really slowing down, and I don't want to be in a market that is losing its strength. I want to be in the market that is giving me the strength over and over and over again. Okay, so let's talk about how to put this technical analysis to actually good use and how we can use it in the market so that you understand when you are sitting in a trading room that you're understanding what you are seeing, because the majority of people are going to be talking about the breakout areas. Okay, how do we spot the breakout? Because the breakout is considered to be one of the most powerful trade setups out there, and if we don't understand what we're looking for, we're going to miss it. So this is when you put the technical analysis into good use. We put in a resistance area. If the market is going up, that's when we look for a breakout to the upside. If the market is going down and we have a support area, we look for the market to continue down. That is the breakout. So it's literally when the market is going in one direction and all of a sudden it becomes flat. It gives you that sideways market that kills you, right? Because we've already understanding how to spot it. We sit out and we wait for confirmation if it's going to continue in the same direction to break out, or if it's going to transition into a whole new trend. Okay? And when we understand the breakout, then we understand that how to enter and where we could profit with the breakout. So the way I like to do it, as I mentioned earlier, you can see below, this is my MACDs, those red dots. It's when it is flying over the black dashed line, which is the 0 line. This is an area where there's absolutely no real movement, okay? And it flies through, that is showing me there's no divergence. It just broke through. That is a perfect place for me to place my limit order. I am telling the market where I want to be entered, and then I will also tell the market where I want to put in my profit target. Okay, that is how we understand the market and can put everything together. So here's the thing, guys. We actually have everything that we need to take action, right? We have these amazing summits. We have these amazing gurus on YouTube, podcasts, books. I mean, you name it, we have it all at our fingertips, right? Yet we're still struggling. And the real reason is, how do you know that you are doing it right? Right? Even though there's all this information out there, how do you know that you are doing it right? Because all of this is great. And the real question though is, with all this information out there, how do I truly get started? And it isn't because, I get it only from beginners. Interestingly enough, the question I usually get this from is people who have been trading for a while and are still not able to make consistent money. And they're constantly asking me, how do I do this so I am profitable consistently? And interestingly enough, it's usually because we lack the basics. We lack the basics, right? I always say that, it's easy to put in windows, but the windows are going to keep on crashing if we do not have the wall to hold them up. And that is exactly what the basics are. Okay, it's literally like getting into a car. I love car analogies because we overlook the fact that we once learned how to drive a car, because today we hop into that car and it's just second nature for us, right? But we did have to learn the basics. We had to learn, where is the steering wheel? Where is the clutch? Where is the accelerator? Where is the brake? Where is the gear? If you don't know how to do this, you can never drive, right? And you certainly cannot drive in a Formula One race, which usually, being in the live market, feels like. The adrenaline is pumping just the same. Now, imagine if somebody got into your car and they've never been in a car before, and you're telling them, all right, you need to buckle in because that's going to save your life as we're driving. And the person's like, buckle in? What am I buckling in? If nobody taught them that it's a seatbelt to buckle in, are they going to know that? No, because we're not born with this information. And the thing is a lot of it is overlooked. And I believe completely, 100%, that once we fully understand the basics and use it, we will completely master trading. And that I could even guarantee. And this was my own personal sad truth. I spent over $20,000 on chat rooms, alerts, on academies, on conferences, and I just kept on losing. And every single time I would ask in the chat room, I'm like, can you please explain to me, what do you mean it's a reversal pattern? What do you mean divergence? I would either be fully ignored or treated as if though I'm supposed to be born with this information, and no one is. And once I learned it, everything changed. But until then, I struggled. And to the point where I ended up losing $4,000 within 5 minutes, and then I quit. I quit. I was just devastated. I was defeated. I was done. Because at this point, I was trying to trade for a couple of years. I was constantly losing, and it was just horrible. And I quit. I walked away. But the thing is, guys, and I know that everybody in this room is at the exact same mindset, is that we are all bit by the trading bug, right? We're all bit by it, and it never actually stops itching, right? And do you know why? Do you know why that is? Because deep down inside, we know that we could do this. When I quit for about 4 or 5 months. I walked away entirely, but I couldn't stay away. And when I was watching these people do it, I was like, if they could do it, I know that I can. I know that I can. So what I decided to do was to get back to the basics. Before I actually quit, I actually had 3 monitors. I had 3 charts. I had 10 indicators. It was completely, I was in constant analysis paralysis. So what I ended up doing, when I came back, I literally donated 2 of my high definition monitors to the garbage men. I'm sure they took them. And I eliminated all of my indicators and eventually put back only 2 indicators. And I started to study the basics, and I studied them for years. And several years ago, one of my students says to me, he's like, you know, Marina, your teaching and your philosophy is very similar to Coach John Wooden. I've never heard of Coach John Wooden before. And I was like, who is this guy? And of course, I looked him up. And if you know who Coach John Wooden is, you will know what an amazing human he was, right? He was a legendary person. So his entire philosophy was, when in doubt, get back to the basics. And I mean, this guy was a legendary basketball coach for Los Angeles. He won over 88 national championships, 88 NCAAs, 10 national championships. He trained A-star basketball players, but it didn't matter what they knew in all the championships and competitions they had won, because when the new season began, it doesn't matter what you've done before, because your ego is going to make you think you are better than that. So what he would do is he would get back to the basics: how to tie your shoe, how to roll your sock, how to dribble the ball. Because if you're on that field and you're acting cocky because you know everything and you're not paying attention to the basics, you could forget to tie your shoe, you could sprain your ankle, and then you're out for the whole season. So you got to get back to the basics. And today I have a very special offer for participants only. My introductory course, Bootcamp for Day Trading. And you could do it at any apparatus. You could do it on laptops, desktops, tablets, phones, anywhere. And all of this course is one-time price only of $97. Now, I want you guys to go here right now. Go to bootcampfordaytrading.com, bootcampfordaytrading.com. And if you are having an issue to get in because Google has these firewalls, you need to remove the S from the HTTPS. Just put in HTTP : bootcamp for day trading, and you will get to it. Now, I want us to go over and see what exactly you'll be getting for the $97, which will bring you on the investment. First of all, what does $97 buy you this day and age? Do you guys like to play golf? Because today I heard that it's about $150 to $650 per person per day to play golf. You want to go out for big dinners with your family? Me and my husband just celebrated our 22nd anniversary 2 days ago, and we went out to dinner. And I kid you not, we had 2 appetizers and 1 main dish that we shared between us and wine because we don't like to eat that much. And that was 125 euros. Not much you could do for $97. So the amount of knowledge and information you're going to get for $97, you can't go wrong. So let me break it down to you. We're going to be getting a simplified day trading package. And I know that setting up your platform could be a little bit intimidating. We do it together, so there's no issue, so that you guys get into the fun stuff of the trading. Then we really focus on the anatomy of the market, understanding the uptrends, the downward trends, and really focusing on the sideways trends. Then really dealing with the technical analysis, reversals, divergences, because once you know how to handle this will be like the biggest aha moments, and it will take you to the next level of your trading, guaranteed. Guaranteed. Once you understand what you are looking at and understanding how the market is moving, you are going to have the confidence to truly trust yourselves, okay, and really understand all of this. And like I said before, divergences to me, they have been my holy grail. They're so simple to understand, and they are the biggest aha moments you'll have. All right, and then we're going to talk about the breakouts, because once you master the breakout, that is just unbelievable, because the majority of the trades are actually breakouts, and we will learn how to avoid the fake out breakout as well. All right, once you understand that, boom, and you'll have full access to the curriculum all the time. So I have students from all over the world. Best money I ever spent. Only mentor that truly checks the work. I enjoy bootcamp so much and learn every day. But here's the one thing that I'm going to get back to. How do you know you're doing it right? So I am actually offering my one-on-one mentorship for 1 month. You guys get 1 month one-on-one with me, coaching totally for free, included in that one-time $97, because having a mentor could be what takes you to that next level. And I also have a live trade chat room that we go over together. I do not hire moderators or admins. It will be me that we will be learning together. All right. Again, all of this for $97. Go right here, bootcampfordaytrading.com. So please take a screenshot of this so that you guys could do it after we finish. Bootcampfordaytrading.com. This is what you're going to get. Everything in the course. 30 days one-on-one with me, and 30 days in the live chat room. And all of this is less than the average of 1 trade. Okay, so you could 10x your knowledge, your information, your education. One-time fee, $97, but because of that price, I only have space for 25 people. Okay, guys, so if you go here, Bootcamp for Day Trading, .com, right here, bootcampfordaytrading.com. You see there is that S. Sometimes the S won't allow you to get in. If that's the case, you just need to remove it, and HTTP will still bring you back to here. This is the order form right here. And like you see here, $97. You guys could take a screenshot right here. Bootcampfordaytrading.com. Oops. And then you are brought here. All right, guys, let me just make sure I have answered all your questions. 1 second here. Okay, so bootcampfordaytrading.com. Let me know if any of you guys have any questions, if there's anything at all that you want to ask me. And again, $97, you get to work with me 1 entire month, one-on-one, as much as you possibly want. All right, let me know if there's anything else. And thank you so much for taking the time to be here with me and to better for yourselves. We're starting 2025, so start it big. Really, $97, you guys get to work with me. And this is the best way for us to truly learn and grow. Okay, yes, it could be either one. Once we decide on the market that works for you, then we work with the market that works for you. It is not a general thing. It will be working specifically if you want to work with futures, you want to work with stocks, if you want to work with a particular stock, that is where the mentorship truly comes in and we work together. All right, guys, thank you so very much. Let me know if there's anything at all that I could help you with. And I'm looking forward to working with you. And thank you so much.
Thank you, Marina. We love how you simplify everything so anyone can understand and succeed at the art of trading. Great information. Thank you for taking time out of your day to join us today on Traders Corner and for making such a generous offer to our members. Ladies and gentlemen, that is Marina, the trader chick Villatoro. And we put a special offer link in the chat box. So have patience with that link if it doesn't quite work for you. I clicked on it and I just had to give it a few extra seconds for some reason as well. You can also find Marina at thetraderchick.com. Marina, thank you so much for being here and pushing it through to our traders today. We really appreciate it. And
thank you,
we hope to have you
everybody.
back on Traders Corner. Thank you. Yeah, sorry, Marina, I didn't mean to cut you off. Oh, I think she, oh, she's on mute, sorry. All right, well, thank you, Marina, we appreciate it. And hit up her link and
Thank you.
check it out. Yeah,
Yeah,
thank
something
you,
happened again.
yeah.
Bye, everybody.
Apologies, thank you so much. Well, we told you at the top of the show that we had a great lineup, and we do. We got such a diverse array of personalities today. It's really great. And our next presenter is no exception. He was in the fire control services for 40 plus years. He started trading futures on his off days 40 years ago. He has a great presentation full of brand new cutting edge material. Ladies and gentlemen, here to present Discipline Manager is Mr. Stephen Tremper of Tremper.com. Welcome back to Traders Corner, Steve.
Hi there. Sounds like Anthony. Doesn't sound like Rob. So hi, Anthony.
Yeah, it's me, Anthony.
All right, how are you? You should be able to see my mouse moving around here on the screen.
Yes.
Okay, good. Yeah, thanks a lot. Well, I haven't been in the fire service 40 years. I've been in the fire service 40 years, but I haven't traded all that future time. So it wasn't only until about maybe 12 years ago. So make me sound a lot older than I am.
A lot more experience.
So yeah, so basically thanks again for having me here. And I hope my intent here is just to help other traders overcome the same struggles that I've had and still have, dealing with discipline. It seems to be a common thing and phase here. Everybody talks about psychology and whatnot. So hopefully this is just another tool that they could use that I created for myself because I needed discipline. So I created a manager. So in any event, so summary, my intent is just to kind of show you what it is, and you can decide if you even need it at all. And then I'll show you how to establish some rules within the discipline manager, some of the settings that you have the ability to change, tweak and change. And then I'll give you some examples of what will happen if you breach your limits, and then I'll show you where to download it. You can play around with it, and today's special. And then if there's any questions and answers, typically in the settings section of it, I will more than happy to go over any kind of questions that you have. But first of all, who am I? So as I said earlier, I'm Steve. I've been in the fire service 40 whatever years, and I retired in 19. I started playing around with options and the Forex and stuff like that. God, probably 12, 14 years ago, something like that. And then it wasn't probably maybe 8, 10 years ago, I kind of fell into futures. Not quite sure how I got into that, just surfing around the web, I guess. And then I started looking at that, and that just seemed to be a better fit. So that's, and I haven't looked back. So futures is my thing, and that's what I like, particularly NASDAQ, because I'm a adrenaline junkie. So that's just a picture of me at the exchange. I was there as a visitor. I was not working there. I never did. I wish I had, but needless to say, that's who I am, and that's I by no means do I want to come across as some expert. And I know a lot of people that are in this webinar have a lot more experience than I do, but I'm just a regular normal trader, just me. And And I just have some tools here that Ninja approached me long ago that, you know, people might be interested in. And as it turns out, you know, years later, there are a lot of people that have, funny thing is, the same issues that I had. So a lot of my tools that I have on my site were built specifically for me. They're ones that I wanted that I couldn't find anywhere, so I did it. And one being, it wasn't my first, but this was my second, the Discipline Manager, and that was one of the things that I had. So those are all available on the site. So anyway, a little requirement, you know, as far as the government thing. Basically, I'm not telling you where to trade or anything, so I don't really need to go over this, I don't think, and you do it anyway. If anything, the Discipline Manager is going to stop you from trading. So the way I look at it, I typically don't need this, but I'm just going to show it on here anyway. Money management statistics, I think you all probably already know, you know, 90% of traders, you know, fail, they'll lose or go to break even, and a very small percentage of them actually make money consistently. And you can define how much money that is, because there's all kinds of, you know, now with the micros, you know, you got to have a lot smaller goals that you're looking for. So it's all available to everybody's individual risk tolerance. Psychology, emotions, you know, the hope, fear, regrets, all that I've had all of it, and you can't tell me that you don't. And you know, the lack of trading constitutes all of the above. So it's just trading, having a plan and a management plan, and that's where, you know, again, that's where the Discipline Manager comes in. It kind of helps you kind of keep you on your toes. You could just Google any of these statistics, so it's not like there's a hidden formula here. Why do they fail? Well, you know, failure to nip your losses. Over trading, that was one of my big issues, and I still have that when I'm, you know, down. I'm trying to, you know, trying to get the revenge, I guess, trying to get back at least to break even when I get into that scenario. Fear of missing out, and then waiting for the trade, and that, to me, I think is, again, I'm an adrenaline junkie, so it's so hard just to sit there and wait and watch and stare at the screen. And that's my worst four-letter word, is wait. And so you have to master the ability to wait. You have to, you know, have the self-control to get your trades and only your trades. Don't be making trades up, or I call it the board trade. You're bored, so you just say, well, I'll go long and see what happens. You really don't want to do that, and you just have to, you know, we're not traders, we're waiters, and that's what we have to do. And it's just so frustrating, and you know, here I am waiting on a possible setup. I just can't stress it enough. It's just so boring, and that's kind of led me into the algos, you know, more and more over the last few years. I've got one that I'm building for myself, which again is available if anyone wants to play with it. We call it Helix, because I had two strategies. One was an indicator, and the other one was a strategy, and we married them together, and hence, you know, all the DNA in there, which came up with the double helix, and then we just dropped the double, and so that's where the Helix kind of came to be. But that's available out there. It's an ongoing. I don't think it's ever going to be, you know, 100% totally ready, but it at least trades for me, so I could put on. I can get to the spots where I want to focus on. I can make the colors to go ahead and paint the backgrounds, give me audibles when I'm there. And then in the auto mode, it'll actually take the trades for me based on my setups. And I've worked with a lot of people helping, you know, tweak their setups and get it fine-tuned and then test it and play around with it. And it's just made it so much easier for me just to click a single button, knowing that my rules have been met up. But that's here nor there. So getting back to the Discipline Manager, though, the psychology of discipline, the psychology to follow the rules, and that's just it. You know, the manager, you have your rules set up, and whatever they are, they're yours. And if you break your rules, well, then you might want to go relook at them over the weekend and see if there's some tweaking that needs to be done in the rules. But needless to say, as it stands right now, those are your rules, and if you bust them, then you want to stop, or it's going to make you stop, because it's the manager. It's going to tap you on the shoulder and say, that's it. So you need, you don't want to get out too quickly, so you have to hold, but on the other hand, you don't want to hold too long and give it all back. And then you skip trades because you're you fear of losing again. I've been through all of that, and I think most of us has, and that's how somebody once came up with this sentence down here that I just love, and I can't remember who it was that did it, but a discipline manager cannot help you with your psychology, but will help you with your discipline. And that will then lead to a healthier psychology. So again, it's kind of hand in hand. You have to be disciplined to get the psychology, but you have to have a little psychology too. So you've got to be able to control the losses, whether your average winning day, whatever that is, don't lose more, on a bad day. You've heard the adage, surrender to the fight, but not the battle. So, there's been days you just have to say enough is enough. I can't take it anymore. I'll just deal with it tomorrow and hope for the best and just walk away, because sometimes it just doesn't go in your especially with NASDAQ. It's like ADD on steroids. So it's sometimes you just got to leave it alone. Everybody has different account sizes. So 1% loss limit on a $5,000 account is not the same as trading a $5,000 account on a micro contract. So everybody has their position sizing that you still have to deal with. I mean, that's another part of the trading plan that you have to do and feel comfortable with. But again, going back to control the losses, Warren Buffett once said, rule number one, never lose money, and rule number 2, never forget about rule number 1. And I thought that's so important, because you got to protect capital. I mean, that's first and foremost. Of the choices, you can have a big win, you can have a small win, you can have a small loss, but it's those big losses that just really kind of eat you up. And eliminating those will result in a better psychology and discipline. And that's how I started, just to take small little stops. And if I get popped out, well, then I just reevaluate, maybe wait to get it a little deeper, or I'll get back in again. I mean, it's only a few bucks, so it's not the end of the world. So you have to stop the stop losses and ATMs. I don't know many people that don't have it. Stops, that is. Nobody really knows I mean, you could look at charts and things like that and risk and reward ratios, but really nobody knows where it's going to stop. I mean, you could always determine your risk by your stops and how much you're willing to give based on your position sizing, based on your account, etc. So that's fine. But then where is it going to go? How many times have I seen targets get hit and it just keeps on going? It's like, you don't know. You have an idea where it might be going, and you hope that it gets there. And if it gets to that target zone, as I call it, because I actually have an indicator called target zone, but who can really pinpoint to the tick where that zone is going to be to get out, right? How many times does it come almost to your target and then just dropped and came back? So that's why I created I have a zone where I can put a zone on there and say anything in the zone I'm fine with. If it goes to my true target, then great. But if it gives up, X amount of ticks, then it's good enough for me. I'm in my zone. I'm happy. So the risk side of the trade is the only thing that you can really manage, and that's the stop losses and good risk management based on your account size. And you really don't want to get, so I shouldn't say you don't ever want to move your stops to adjust them, but I feel it's better to get out and reevaluate and then decide what's happening, kind of let it marinate a little bit, and then get back in if you feel comfortable. But moving it back a little bit, no problem at all, a little here or there, but you don't want to just go back so far that you'll just get underwater, like doubling down kind of thing, or adding on. I don't really buy into that. If it's really going against you, add on, and then you'll make it back sooner. So that's kind of a recipe for disaster. So don't get caught up in revenge trading is another one, but you don't want to give up. There's been many times, or there was a time years ago, I'm getting rid of all my indicators, getting rid of everything, and I'm starting fresh like I know nothing. And I started basically from scratch. I just pretended that I didn't know anything, and I did all the homework and listened to all the videos of all the experts and all that business and courses that I had, and I just was in essence starting all over again, because I just knew that it's just a matter of time. So how many times you get somewhere and you give up just because you can't do it, and you're so close. And I've seen it in trading. You know, you get out, you just can't handle it anymore, and you look back 5-10 minutes later, and sure enough, it went where you wanted it to go. So this is, you know, here's your equity curve, you know, experience, you know, looks like fun. I have no idea what I'm doing. This is really hard. And as you get a little experience, you're like, okay, I can kind of get this, or it comes back down a little bit. And then you're like, okay, I could actually get this. So, you know, there's the equity curve and the psychology end of it. So anyway, moving on from there, then you have to protect yourself from you. And you can do that with your own personal trading manager. And that's where the discipline manager actually came to be. And you have to picture it like everybody tells you have your own trading business. You are the CEO of your trading business. So you have to delegate your rules to the discipline manager or a manager. If you're the CEO, you discipline what your discipline manager is the one you're, I guess in the real world, like on, you know, the safety department and all that, or just the manager in general, you delegate what you want to the manager, and then it is their job to, you know, to monitor the employees, which in this case happens to be you also. So you really have to change hats. You're the CEO, and you're going to hire a manager to deal with your rules that you want as the CEO and your targets, et cetera, and then your discipline manager is going to allow your trading employee, which happens to be you on a Monday morning, to go ahead and follow these rules. And if you don't, the manager is going to be there to kind of stop you. So if your trading employee gets out of line, then your discipline manager will control your company's losses. So when you evaluate it over the weekend, you can, you know, reevaluate it and look at it and tweak if you have to, but see what went wrong, or maybe it was just a given day, et cetera. At the following meeting, you evaluate and tweak, but you don't want to be tweaking, you know, like in the middle of the day. That's what market replay is for. That's what, you know, practice is for. And you already know some of your rules anyway. So when you're actually in the heat of the moment, you're not, if you get popped out, then you should just be done with it. So setting up your management rules. The discipline manager is designed to allow you to set up your own hard daily and weekly drawdown limits along with your goals. And if your hard drawdown limits are hit, then you're done for the day or the week, depending on, you know, which rules have been breached. And then new trades are not allowed after that point. And once your daily or weekly goal is hit, then you can continue to trade, but you never want to give back more than whatever your percentage is. There are some people that say 0%. When I hit my goal, I'm done. I'm not going to give back anything. And you can put 0 in there. And if you want to give back, you know, if you want to play with maybe 50%, you can go ahead and say, I hit my goal, and so now those rules are now in effect, and I'm only going to play with 50% of my winnings. And if you want to change that percentage, then you can go to level 2. You know, so this is called your dynamic drawdown. You know, it's based on your account high for the given day and the week. It moves proportionately. And then there's warning boxes that'll be displayed when your thresholds are breached. So if you have a warning set, it will give you a 15-minute timeout, kind of like a circuit breaker at the stock exchange. So if you're a certain percentage of your loss, you know, you have $1,000, let's say, for your drawdown, and 50% of that's been lost already at $500. Now you're negative $500. Well, it's going to give you a timeout. It'll give you a 15-minute timeout. It'll give you a time display on there, and it'll say, you know, you're in a timeout. I don't think it says timeout exactly, but I just use that for kids. And so go get some coffee, go walk around the block, you know, do something, shake it off, come back with a different mindset, and let's try it again. And now you can go the rest of the way. As far as resetting, you know, the discipline manager, there was much discussion regarding creating a reset, allowing the user to override their own rules. Some people suggested that we have a password that they can't access, like a key. Somebody said they can give it to their spouse, and then they can control when they're able to reset. Anyway, so it was realized that, you know, you're the owner of your own trading business, and that you as the CEO should be able to make those final decisions. And so that said, if you opt to reset it, than the discipline manager. It does require, it's not easy. It's not a matter of just pressing a quick button and resetting it. There's a reset button down at the bottom, but it doesn't take an effect immediately. There's, a few things you have to, close everything down, relaunch, come back up, fire everything back up, re-get connected. So it's not like it's going to happen in 2 seconds. So hopefully you'll get past that revenge trade period of time. But again, you are the CEO. So if you want to fire the discipline manager or just slap them around and reset it, you could do that. And here's the reset button in the bottom right-hand corner. It says reset. When the rules are not set, it'll say apply. And then you set your rules and you hit apply, and then once you apply, then turns to the reset. So you can see that it's reset there. But you really don't want to do that in the middle of the day. You really have to kind of, hey, those are my rules. That's what I did. Let me stick to it. At the end of the trading day or whenever you're done, you can reevaluate and say, okay, is that fair? Is that are my rules true? Is that what I'm looking for? How could I tweak it? So this is not an indicator. It is placed and incorporated into your Ninja, but it runs in the background in a separate window if you prefer to even keep it open. You don't have to, but if you want to see like performances or something like that down at the bottom, you can do that. But it's not even necessary to be on. If you turn it off one day and come on the next, it'll just be there for you, and you don't even have to, kind of you don't have to turn it on. It's already on. It's on based on your account. So an example. So let's talk about these rules here. So let's assume you set your drawdown warning for $350 and your halt is set for $500. So that means you go negative $350. As I mentioned, you got that little timeout, and then at $500 negative, you're done. You'll get a pop-up that says, you're done for the day, kind of thing. And once you close an order, so for instance, if you had 2 orders on and you close one and you breach it, but the other one is still open, if that one closes and you're breached, then you're done, but it won't close it for you unless you have that check to close all orders, then you're done. And so that will, if you do go under the 350, it's going to trigger the circuit breaker. You'll just get that warning that says, trading is halted until such and such a time. It says right there, 311, 49 seconds. So, it's 15 minutes, and then you can come back to it. And you just kind of deal with it. If you get the halt after your 15 minutes timeout, you come back and you continue to trade. And now you've breached your $500 mark. Well, you're done. At that point, you're not allowed to trade anymore. And that's it. You got to wait till the next day. And there's a little pop-up that shows you, hey, you're halted. Your rules been breached, and now you're able to trade on the next day. So the goals, let's talk about the happier side of it. So goals. So let's say you now hit your goals and you're going to get the congratulations. These are not really errors. These are Ninjacator has errors. You really can't suppress that error functions, but they shouldn't really be called errors, but maybe one time in the future they'll switch that. In any event, it's just a notice that comes up, says congratulations, you hit your goal. It lets you know now that your daily drawdown limits are now in effect. You've already passed your rules as far as how much you're able to lose, so now your drawdown is in effect. It's like, woohoo, you hit your goal, so you can do one of a couple things, you can continue to trade, but whatever your percentage was, as I mentioned, some people just have 0. Heck, maybe you want to give back 100%. So basically you're playing with house money. And if you lose it all, well, then you walk out the day, with nothing, but you'll probably be disappointed. So I wouldn't recommend that. But the point of it is that you can set those rules. And if those are your rules, then you're the CEO. Those are your rules. And once your goals hit, the dynamic drawdown becomes effective. And then whatever that is, it keeps going up. If you're set to 0, it'll just stop instantly. And if you, as I say, you're 100%, then it'll give you back all of it. And don't forget, there's commissions in there too. So whatever your drawdown rules are, I've seen 50%, I've seen 0, I've seen 50%, 33, 25, I've seen a whole camarage of things. So, again, you're the boss. So an example, as discussed earlier, the dynamic drawdown rules incorporated the circuit breaker if you have the warning applied there. It'll give you the 15 minutes. If your first goal is hit, then you hit your second goal, you'll get another one that shows your second goal is hit. And here's just a little of the math, how that works. If your balance exceeds your initial goal of $500, you know, it's gonna give you a halt. And 50% if you have that on, assuming you're using 50%, you don't have to use 50%, but you can see the math here. So if you have $1,000 and your warning's at 700, which is 30%, then it's going to give you that warning. And this goes up. So for instance, if you have $1,000, you hit your $1,000 and you're at $1,000, it's $700 is 30%. But if you go up to $2,000, that's 30% of $2,000. So it doesn't come all the way back down to $700. It's 30% of 2,000, which would be 14. So it grows with you, the percentages. Now, if you get to the point where you don't want to give back 30% anymore, because let's say you're at the $2,000 mark, and I'm just using these hypothetical numbers, but if you're at a $2,000 mark and you don't want to give back 30% or 50% for the halt, that's too much. Well, you at that point, you would go to level 2 and you would make the percentage a little smaller. And that's where you do it right in here. So here's the settings of it. So if you don't want to use something, I always just recommend 9999 just because you're never going to reach it. So here's your goal. Here's $700 of warning, and there's your $1,000 halt. And then let's see, your level 1 drawdown is 50% is your dynamic drawdown. So you could give 50% back of that, and you'll get your timeout if you breach it. And then you'll be done altogether at 75%. So at the end of the day, you'll walk out with 25% less commissions and any kind of slippage. But if you go to, let's say, $1,500 now, well, you don't want to, if you don't want this warning at all, you're done with the warning, just 999 it out and you get it out. But now you're only willing to give back 25%. So this is where you would change it to the next level, because you don't want to keep the 70, because this is going to keep growing. And at some point you don't want to do 75%. You want to tighten that up. So at that point you would use this one here and say, okay, tighten it up. Or you could even say 0 in there. Say when you hit 15, you're really done if you want. And then the weekly drawdowns, the same theory with the weekly drawdowns. And down here is include unrealized. This came with all those prop firms that have popped up over the last 3, 4, 5 years. And so if you're using a unrealized prop firm based on the unrealized orders, we added that one in there. It's defaulted to off, so it's just based on your realized. So when you get out of a trade, that's when it will take that value and then compare it to your rules and go from there. This is because I was dealing more in getting into algos and whatnot. Obviously the hiccups and everything, I didn't want to be stuck with a naked order. So I had the discipline manager. If you click that, if it finds a naked order, it gives it a couple milliseconds to kind of move a stop trail. But if it finds that a stop order got accidentally misplaced or moved, or or maybe you forgot to put it on at all, whatever the case is, it'll just shut the order down. And this is, I just scrolling down. This is the second page. We just keep going further down. Your daily stats, it'll tell you what your peak value was, your balance. These are all, to be determined at this point, so they're not in here. But and then you could, and down here is if you want to set as a default. So let's say now with all these copiers about, you can go ahead and set it as a default, and then that way when you go to the other account, which would be on, if you go backwards here, right here, it's on playback. If you use this arrow right here, you could have all your accounts. So if you have multiple accounts, you can go ahead and you'd have to apply the rules to each account. Now they may be different or maybe not, but if you're doing minis and your $1,000 drawdown, well, if you're trading micros on another account, then you don't want to have that as, because you'll never really probably breach it. And vice versa. I mean, if you had your micros rules set up for micros and then you'd switch to a mini, you'd be popped out in no time at all. So you got to, each account has to be set individually. So here are some of the things that we put it, here's the whole screenshot as it is, you know, just page 1, and then it just goes to page 2 so I can fit it on one screen. And there's the export. It's been around a little while. That's the last time we did some updates. Let's see what else. The drawback. Yeah, let's talk about a little drawback here. So our main obstacle in the discipline manager is that we cannot suppress market orders. That's a thing with Ninja that I know we've had for years, a little ticket in there, but it doesn't, you know, unless there's a lot of people, and there's the ticket number if you want to go inquire about it, but there's a lot of people, I guess, don't care about that, and so we can't do it. So that means that we cannot suppress market orders. So if your strategy, or if you think you're going to beat the discipline manager, if you put on a limit order or a stop order, something like that, within a millisecond, discipline manager is going to take it off. If you've breached your rules, it's just going to take it off and say, your rules are breached, can't do that. And you're going to say, okay, I'll be faster. I'm gonna outwit it. And so you put on a market order. Well, all you've done in a millisecond or two, it's going to take it off. So the only thing you've done is created commissions and possibly even a slippage. And usually it's not into your favor. It's typical. So anyway, so just caution on that. If you have a strategy that continually places orders, then the discipline manager will, market orders that is, then the discipline manager will just keep popping them right off. So you have to kind of be in sync with that. Now there is one good thing that Ninja has. If a strategy gets closed, it stops the strategies. So if you come in and your strategy's off, it could be because this manager shut it down. So that's a good thing. I know I had a hedge firm a couple years ago. I don't know if they're even still doing it, but I know they had a couple licenses out there for all their computers because they were doing just that. There were a lot of algos. So anyway, how do we get started? So currently, it's offered on a subscription basis, and the reason why I like the subscriptions because I can't tell you how many indicators and webinar things that I have and passwords for or whatever that just I don't even use them anymore. I mean, I can't even tell you where they all are. They're probably in my computer somewhere, the file, or maybe 3 computers ago. I just don't use them. So for whatever reason. So I feel that, you know, if you like it, if you continue to use it, it's beneficial, then just pay it, just like your phone. If you don't like your phone, you know, you stop the subscription and you don't have your phone anymore. But if you like your phone, you just keep paying for it because it's value, you find a value into it. And there's an annual fee that gives you some savings, and then the monthly, because I see people all the time, you know, they'll be in for, you know, maybe 4 or 5 months, and then they'll cancel. And it's like, great, you know, because they've maybe overcome some demons or whatever the case is. And so that's the whole purpose behind it. And or if you stop trading, you know, whatever the reason is, you're going on vacation, whatever. So you just stop it. But then I've seen people come back though too after, you know, a little sabbatical for a few months, and now they come back and they started back up again. So that means they were just taking a break, or maybe they just said, okay, I still need that manager. Yeah, so I don't know what the reason is, but you know, whatever. There is a 20-day free trial, so I would recommend downloading it. I would not start the subscription with because it's a PayPal activation. I would not do that right away until you've tried your trial, because the subscription is going to start right away. So play around with it, put it on market replay, set some rules up, and then go bust them. You know, make bad trades and see what happens, and make good trades and see what happens when you breach your goals. So you know, play with them. And then it's very easy to cancel. You control. I don't even get involved in that. Just you control. You just go to your PayPal account, and inside there is your subscriptions and your wallet there, and you can go in there and just with a few clicks turn it off, and that's the end of it. And then if you want to subscribe again, you can come back later and just resubscribe. Now, keep in mind the price might have gone up, but that's what it is right now. So how do you get it? So here's the home page. Up here is algos and indicators. So you can go there, and then the next page you would come down. These are the ones I was telling about. There's the Hallett. Here's my first strategy that I have. There's people, actually there's a free one that I have in there because I never, it's an old one. It's just that, it's based on ATR. A lot of people are still using it, and it's available. So have at it. And here's the indicator itself, but here's the strategy that actually trades based on those projections and based on your limits of whatever your ATR is, based on whatever you're doing. And the projections indicator is just on the chart, but they're kind of the same but different. The discipline manager is the one right here, is the one you want. If you want to watch some prior recordings, or if you want to rewatch this one, you can go right there and see an older version. And here's some, other indicators that I have. The list is long. These are all indicators and strategies that I've done for myself with me in mind. Some I no longer use. Some I've incorporated in Helix. Helix is starting to get pretty big because I've incorporated a lot of them in there. But needless to say, in order to, and then you can go down there, the subscription, which I, again, don't do it, and here's the trial, so you can download the trial. But when you're ready to subscribe, you can go in there and just click this box right there, and it'll give you the options of, the annual or the monthly or something. So you just click that, it opens up. There's a little video if you want to kind of see what it's doing, but I would recommend doing the trial first and go through that. And then for today, what we're doing is I'm just doing I've done this before, the special. It's going to be a 30% off limited time, and it's going to be, as part of the webinar and being here right now, there's a discount button that I turn on the discount code page, and it's a 30% off. So I would recommend, I would recommend not going to this one here because that's going to be the full price. I would recommend going to this one I'm going to show you where it's hidden under the discount codes, because that one is a different PayPal button. However, that is going to expire on Sunday the 19th. So there's a little caveat to that, and that is you have a 20-day free trial, but if you go the whole 20 days, that sale price will be over. So if you want to take advantage of the sale price, you probably, you got what, 4 days or 5 days to kind of take advantage of it, to play with it in on market replay or on live market, whatever. So where to find that is under referrals. There is discount codes, and actually we have now a button up there that says discount codes. You can go directly there, but these are all, I started this from referrals that I had, all these prop firms that popped up, and this list it grows and grows and grows, and so all these prop firms are in there, and it kind of gives you a little song and dance of each one, or percentages or whatever they're doing, so it gives you a little idea here. But the very top one is the discount codes, and so and there's I mentioned earlier, we've revised it so you could just go directly to there or to referrals, either one. But anyway, inside there is just basically a page that gets refreshed. Here's the link to all those referrals if you want to see them, all those funding firms. And if you want to get on the list, anytime this changes, we don't send out emails on things that are expired. We only send out emails on things that have popped up that are new. So we try to keep those emails down to a very minimum. But if you do want to subscribe, you just click on that button. But anyway, that's for the prop firms and all that. But further on down, we've got the webinar specials, and this is the button that you want to do to get the 30% off. So that's the one you want. And when you click on that, it'll just take you to the PayPal, and you'll sign in and whatnot, and it'll show you a 0 up there because it's 0. But if you click this little caret, you'll get this little box down here, and it'll say that it's going to start, right away. So this is what it's going to be. So again, try to use your trial first, and then, but by starting this, it'll be 0 initially, but then in there it's $34 after day 1. And then it'll redirect you to the page, and I will need the third-party ID, so I would recommend coming to here, and the contact form. It's just a little form. And as you scroll down on that, let me go back. Oh, I guess I don't have a picture of the contact form, but if you click on there on the contact form, just, your name, whatever, but a machine ID. So I will need a machine ID, a third-party ID. And that's something that Ninja started because of TradeOutLoud, purchasing of TradeOutLoud. And so if you're using the newer version of Ninja, you'll sign on and your license key and all that is up in your dashboard. The older version that I still use is that it's local on your machine. You just click the button and it pops up and it's local on your machine. You can go into tools and there it is. So like your license key though, that's how they had to change. That's the only difference between the newer versions and the older versions, is that license key is how you have to sign on into their dashboard to get into their so they can see who you are as far as if you're licensed to do this or do that. So that's, I think, about it. I don't know if there's any questions. I can never see them on here. But if you do have any questions or comments or whatever, there's the contact page that I mentioned before on the Tremper.com site. You can get me on Skype there. We have a Skype trade group that there's probably about 100 people in there. It's free, if you want to come in and if you're just trade like-minded people, just talking the talk. There's not a lot of talk on there, but if you ever have any questions or any concerns or just some, chit chat, then, that's what it's there for. Of course, you could email me, and of course you could call and leave a voicemail on here. So there's all kinds of ways to get a hold of me. Here's our here's our equity curve from COVID. I kind of like this, how we started out, sweatpants and coffee. So anyway, that's how to get a hold of me. Anthony or Rob, I don't know. I'm not familiar with the GoToWebinar, so I don't know if there are any questions. But
yeah, there's one question. Did you mention that professionals, including a hedge fund, is running it? I might have missed it, asked James. Do you remember talking about
that? I did. Yes, there was, and I frankly, I think they still are. I don't remember anymore, but and I don't even know the name of the hedge fund, to be honest with you, but I just know they they had 3 licensed versions because they used it for the naked, I believe it was the naked order, or maybe some other rules. I don't know what the rules were, but the point of it is I know they had multiple licenses on it because they had multiple computers running algos. And I do remember one time that I got an email from them, many months or a year into it, that it saved their little behind because I guess they run overnight or something, and something happened and something got wiped out and stopped. But anyway, the discipline manager kicked them out of it, and so that saved them a little bit. So yeah, so that's what they do. I really don't know how big they are, but they had 3 licensed versions, so that tells me that. And I do know they were a hedge fund because I know they had a group of investors and whatnot, so I do know they were something like that. But it wasn't a hedge fund like a trading prop firm. It was just investors. So, however, they used it with their algos, because I know one guy was big into algos, so that's what that was. So I don't know. Hope that answers your question. So I mean, it obviously it's there to, the whole game is that you don't need it forever. I mean, you have your plan, and you have your rules, and matter of fact, if you follow your rules, discipline manager, you'll never even see it. It'll never pop up. So you might want to check it every once in a while just to see if everything's there. You can look at the stats. It'll show you, like, at the end of the day or any time during the day, it'll tell you your peak performance, etc. But the point of it is that you would never know it's on until you've rather breached your goal, or you've breached your halt and it says no more, or you've hit your goal and it says, hey, congratulations, you've hit your goal and now you're drawdown. So if you stay anywhere in between that, if you have the discipline manager and you don't hit that goal, you'll probably never see it. And if you never hit your halt, you'll never see it unless you actually pull it up in a window in a chart. It doesn't go on a chart, it's just on a separate window. So if you don't pull the window, it's kind of like the output file window. You just pull up the file, or pull up the window, and you could shrink it down and put it on a corner of your screen somewhere if you want to see what it's doing. I mean, you can certainly have it on, but it's not necessary. So that's about that. So anyway, I think I'm right on time, and I don't want to overcome my welcome for the next presenter, because I know everybody's got a busy day today. So if there are no more questions, I think I'm good.
Hey, thank you, Steve. Always love to have you on Traders Corner. Ladies and gentlemen, if your emotions are getting in the way of your trading, Mr. Steven Tremper of Tremper.com has the solution. It's called the Discipline Manager, and you can learn more by clicking on the link in the chat box or by going to www.tremper.com. His tools have been a game changer for so many traders struggling with overtrading and many other emotional issues that traders commonly face. Thanks again, Steve, for making our audience such a generous offer today and taking time out of your schedule to join us today. Come back and see us on Traders Corner, please.
Thanks much.
Hey, you're welcome. Thank you. I just want to pause for just a moment and thank everyone in attendance here today and joining us in Traders Corner, and wish you a healthy and prosperous new year. Up next happens to be one of my personal favorites. He is a decorated former Navy fighter pilot and graduate of the Navy Fighter Weapons School, Top Gun. He was also selected by one of the largest options trading firms in the world to be their managing director of strategies. He is the founder and CEO of the Options News Network. And in 2010, he founded Top Gun Options to train retail investors of all skill levels how to create or how to trade options. He has trained over 10,000 people to date. Here to present Solo AMZN, the only stock you need to own, is Mr. Matthew Wiz Buckley. Welcome back to Traders Corner, Wiz, and thank you for your service.
Awesome, my brother. Thanks for having me. Welcome aboard, ladies and gentlemen. Let's go ahead and throttle up this last hour of trading. Really excited to be here. Make sure you silence your electronic nicotine, no distractions, because I guarantee you, you have never heard what I'm about to tell you. As a matter of fact, I can guarantee you, you've heard the exact opposite, and it's wrong. Now, I'm going to date myself. I was a kid when Star Wars came out. You might have kids that are Star Wars nerds, but what's the Death Star, right? It's that big space station the size of a moon that was taking over the universe. That's the stock we're going to talk about today. The only stock you need to own for the rest of your life. It's literally taking over everything it touches, or it destroys everything it touches. Okay, real quick, as you heard my bio, former Navy F-18 fighter pilot. So I'm going to give you a multiple choice quiz about which fighter aircraft would you fly if you had to go into combat today. What's this have to do with trading? Everything. Trading is a form of combat when you think about it, right? Somebody's going to win and somebody's going to get their rear end handed to them. Which one do you want to be, right? So here we go. Here's your first choice. That's the cockpit of an F-4 Phantom, right? Over 300 switches and dials in that cockpit. The pilot would spend a lot of what we call heads down time in this cockpit looking at all this stuff instead of eyeballs out of the cockpit, looking for enemy aircraft, AAA, which is anti-aircraft artillery, or SAMs, surface to air missiles. Incredibly labor-intensive aircraft, so they threw another dude in the back seat to just run the radar. Very, very labor-intensive aircraft. That's your first choice, or that one. 2 flat panel displays, right? 2 iPads in the cockpit. 0 steam gauges, right? This is the cockpit of the F-35 Lightning, the Joint Strike Fighter. We call this the Wonder Woman jet because it's literally invisible to radar. Everything is displayed on the pilot's helmet. Speaking of Star Wars, that guy kind of looks like Darth Vader, doesn't he? Wonder Woman jet, it's invisible to radar. We simplified combat down to 2 flat panel displays, and that's what we're going to talk about today, simplifying your trading cockpit. By the end of my quick brief, I'm going to give you an up-to-date intelligence brief with what's going on, especially with the hot CPI print this morning. The only stock you need to own, and if that doesn't make sense to you, a good substitute to trade. Real quick, how's the smart money doing? If you're in a hedge fund, the average hedge fund does about 9% a year. That's embarrassing. Why? Because that's how I did last year. That's my personal brokerage account, 151% return. Look at the Dow, 9%, 10%, NASDAQ 38, S&P about 20, 151% return from my personal trading account. That's me. That's my bio. Former Navy F-18 fighter pilot, Top Gun grad, all that good stuff. What's this have to do with trading? Everything. I just told you trading is a form of combat. As a young naval officer, as a young Navy fighter pilot, I didn't join the Navy to get rich. I joined the Navy to fly fighters and see the world, but I was always interested in trading in the background. Taught myself how to trade, and it worked extremely well. Why? Because I knew about having a strategy, having tactics to support that strategy, managing risk, implementing a contingency plan, right? Knowing when to get out of a good or bad situation before it got worse. I applied it to my trading and it worked incredibly well. I ended up popping up on the radar of one of the largest volatility arbitrage options trading firms headquartered right there in the CBOT. Everybody should know that building. That's the Chicago Board of Trade. That was our trading firm. I helped build a hedge fund when I was there. I helped build the retail brokerage some of you might have traded at, called Options House. And I was the managing director of strategy for this multi-billion-dollar trading firm. I also was the founder and CEO of the Options News Network, the CNBC for options. We'd shoot on the floor of the CBO and the CBOT, giving folks like you a behind-the-scenes look at what was going on in the options trading world. All right, that's my bio. That's my background. Let's go ahead and get airborne and throttle up. Now, this might shock some of you, and for half of you, you're probably going to roll your eyes. But like, duh, Wiz, what? Wall Street is lying to you. Now, I know half of you just literally said duh, but what exactly are they lying to you about? How many of you have heard since day one of investing, you have to diversify? You can't put all your eggs in one basket, right? Diversification is important. Here's the 5 steps: diversify, diversify, diversify. They froth at the mouth that you must diversify. Who? That guy. Ladies and gentlemen, whenever you hear the word broker, I don't care if it's stock, yacht, real estate, aircraft, delete the word broker and insert the word commission. How does a broker make money? It's called commission, folks, right? Anybody ever see the movie The Wolf of Wall Street or Boiler Room, or even the movie Wall Street, right? Bud Fox and Gordon Gekko. All right, boys, open up the phone books and get the little old ladies in tennis shoes out of the stock we got them in yesterday and get them in this one. It's called churn. It's an actual industry practice, folks, called churn. They want you in and out of as many names as possible. Cha-ching, cha-ching, cha-ching. Commission, commission, commission. Now, before somebody types in the chat box, well, Mr. Smarty Pants, I trade at Robinhood, or I don't pay a brokerage fee. Ladies and gentlemen, if you're not paying something, you're not the customer. What are you, new? If you're not paying anything, you're not the customer. The customer at Robinhood or other discount brokers are Ken Griffin at Citadel or Steve Cohen, folks. It's called payment for order flow. You ever sit at a poker table and go, I wonder who the idiot is? It's probably you. So if you ain't paying anything, you are not the customer. I'm going to tell you, ladies and gentlemen, I'm a fighter pilot. I'm an options trader. I don't have a lot of time. I have to be brief. Diversification is for stupid people. Now, if you find that a little offensive, let me go grab an old man to clean it up for me. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. That's a lot of words to say it's for stupid people. If you know what you're doing, you do not have to diversify. The only stock you need to own for the rest of your life is Amazon. It is diversified in and of itself. It is literally the Death Star. Recent hedge fund chief investment officer said, hey man, real wealth is not generated by diversification. It is built through concentration, right? I'm a political science major, poor kid from South Jersey, South Philadelphia. I like pictures. Anybody see a trend with net revenue from 2004 on Amazon? It's going straight up. I've never seen a company in my life that looks like that. How about annual revenue by segment? North America, international. Folks, AWS, Amazon Web Services, is Microsoft right now. It didn't even exist until 2013. Amazon Web Services is one of the biggest drivers of Amazon's current revenue. Now, speaking of AWS and Amazon Web Services, when I say the cloud, not the one above your head, but the technology cloud. What do you think of? Well, Google, Microsoft. Well, Apple's got a big cloud. You'd be completely wrong. The largest owner of the cloud infrastructure services market is Amazon, and it is growing. The silver medalist is Microsoft, and the bronze is Google. Apple's doesn't even exist in the cloud market, folks. Okay. Now let's get political for a second. Democrats hate this slide. Why? Stick with me. If you deleted the word Amazon and talked to me 50 years ago and said, would you buy this stock? I'd look at it and go, okay, whoa, look at the sales. Look at the sales. Well, hold on. Free cash flow is kind of there's a big gap between the sales and the free cash flow. And then I'd look at what? Profit. And I'd go, oh my God, I would sell this stock. I'd short it. And then I would have had a brief career because I'd be broke. Now, why'd I get political and say Democrats hate this? Ladies and gentlemen, Jeff Bezos, love him or hate him, is a smart businessman. He, since day one, has said, I don't know what the word dividend means. If I make $1 at Amazon, I'm going to take that dollar, I'm going to innovate. I'm going to buy a competitor, put a competitor out of business. I'm going to buy a new jet, Amazon. I do something with my, quote, profit. He puts it right back into the business. So Democrats hate this because they always say what? Amazon doesn't pay its fair share. Well, Amazon doesn't make any money. Oh, I hate that. Well, hate the game, don't hate the player. If you want a friend, get a dog, like Gordon Gekko said in the movie Wall Street. I'm here to teach you how to make money. I love how Amazon does this. Amazon is taking over the chip industry as well. Amazon announces supercomputer new server powered by what? Their own chips. I guarantee you, Amazon will destroy NVIDIA. You want to talk about putting all your eggs in one basket? If you're an NVIDIA, you're putting all your eggs in one basket. Amazon, I guarantee you, Jeff Bezos or Andy Jassy, the current CEO, look at their monthly P&L and go, we're spending that much on NVIDIA chips? Yeah, how much would it be to make our own and make them cheaper and put NVIDIA out of business? Okay, that much? Do it. I guarantee you in earnings in 2 weeks, you're going to hear more about this. You want a bearish trade right now? It's NVIDIA. Wiz from JG with a small account trading with Amazon trades netted $8,900 in a week. Kristen, you guys are amazing. I trade a smaller account and have done 22 Amazon trades for this year, $31,000 in profit. Christine, month-to-date profits in Amazon, 107 grand with more to go. Thanks, Wiz, for all your expertise and guidance doing day trades with short calls to protect my Amazon profits, learning from the best. A couple months ago, Ann made me look like I'm an idiot. Ann, Amazon, Monday through Wednesday, in 3 days, I made $90,000 on short calls against my 30 contracts utilizing Wiz's guidance. Now, before I blow sunshine, lollipop, and unicorn all over the place with how great everything is, I'm a fighter pilot, I'm an options trader. I need to brief you on the risks. What are the threats to just trading one name? Anybody ever hear of a small mom and pop company, Lehman Brothers? A 150-year-old company gone in 48 hours. How about Bear Stearns? Jim Cramer remembers Bear Stearns, doesn't he? There's that famous clip of Jim Cramer during the financial crisis. You're an idiot if you don't put your money in Bear Stearns. It's safe, $70. Oh, it's a steal. A couple days later, it was at zero. Good call, Jim. How about Pets.com? How about Enron? Folks, I could waste the rest of our time together as we walk through the graveyard of stocks that have gone to zero. But what is the common thread in these examples? Completely different companies. What's the common thread? They didn't own a thing. Enron didn't even own the building they were in. They were a middleman of electricity. I don't even think they knew what they were doing. Pets.com owned a stinky sock puppet and a domain. Lehman Brothers and Bear Stearns were countered. They owned paper, folks. They were trading firms that just had money and then paper, and then that all evaporated. Can Amazon go to zero? Yes. Will it? It's almost physically impossible. Why? They own things. I did consulting years ago south of Miami International Airport at an Amazon fulfillment center. I spent some time on an aircraft carrier. I thought the flight deck of an aircraft carrier was busy. This Amazon fulfillment center was the size of an aircraft carrier, and it was as busy with drones and robots and humans ripping around the place. It was a massive piece of property. So Amazon owns things, folks. Years ago, I flew for FedEx. I hated it. I left after 10 months. I don't like going to work at midnight and trying to fly to 8 in the morning. Why do I bring this up? Because I kept in touch with some of my buddies. 10 years ago, 11 years ago, whenever it was, a buddy of mine called. He's a trader. He went from being a pilot, put on a suit, and went to corporate. He called me one day out of the blue. Hey, good to hear from you, man. He's like, hey, who's Jeff Bezos? I'm like, he owns Amazon. Why? He's like, well, that's weird. A buddy of mine from GE Aircraft Leasing told me that he just leased 5 jets. And I said, well, he's going to do it. And he said, what? I said, he's going to put you out of business. Hung up the phone. Guess who called him about 3 years ago, laughed at him, and hung up the phone on him? Me. Look at the dates. September of 2021. Amazon is now shipping cargo for outside customers in its latest move to compete with FedEx and UPS. 2 months later, Amazon poised to pass UPS and FedEx to become the largest delivery service by 2022. And finally, 2 years ago, this headline: the biggest delivery business in the US is no longer UPS or FedEx, it is Amazon. Ladies and gentlemen, Fred Smith, Marine veteran, his Harvard Business School thesis, I'm going to start an overnight shipping company. He got a C+. It's a famous story. This will never work, but you're a veteran, so here's a C+. The guy, Fred Smith, laughed all the way to the bank. How about today? You want to order a toothbrush? Why would you get in your car and go to a Walgreens where it's locked behind plastic? You can go on your Amazon app, order a toothbrush, and it'll be at your home potentially within an hour. Absolute insanity. FedEx even begged Amazon recently, like, can you help? Can we partner before you put us out of business? They didn't. Amazon says more packages are arriving in a day or less. There you go. And obviously AI is just going absolutely bonkers. Years ago, I told members in my solo Amazon service, you want 2 bearish trades to make you filthy rich? Pound Walgreens and CVS into the dirt. New Amazon clinics are in 50 states. CVS lays off 5,000 employees. Walgreens plans major US store closures. Walgreens stock lowest levels in decades. Amazon is destroying the pharmacies. CVS board conducts strategic review because we're going to go out of business. Why? Because of Amazon. Whoa, why is this guy on the screen? Because I'm briefing risks. The first year of Donald Trump's presidency, he woke up one morning or didn't go to bed, depends on who you believe, grabbed his cell phone and did what? Sent out a tweet. Amazon, Jeff Bezos, monopoly. Nobody does monopolies better than Jeff Bezos. Believe me, he should be put out of business. Somebody needs to do something. What happened to the stock that day? It went down a little bit. Holy crap. The president of the United States is tweeting that we're a monopoly. What happened for the next 3.5 years? Nothing. The last year of his presidency, which he didn't know was going to be his last year, Jeff Bezos had bought the Washington Post. Another tweet. Amazon, Jeff Bezos, Washington Post, awful human being, horrible, put him out of business, monopoly. What happened to the stock that day? That tweet came out. It went up. So, ladies and gentlemen, there is a risk from political heat. FTC this, DOJ that, blah, 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 blah. I'm going to tell you, ladies and gentlemen, that I use this analogy. Amazon is Mercury. What do I mean by that? It's too late. If you smash Mercury, it breaks up into little pieces of mercury. If you tried to break up Amazon right now, you would create like 12 monopolies in other verticals. Amazon Prime, the entertainment division, is bigger than Netflix. I just told you Amazon Air makes FedEx and UPS look small. AWS is Microsoft. Amazon Pharma. Folks, I'll ripple through everything in Amazon. You'd create 12 monopolies. So it's too late. If they broke up Amazon into a bunch of companies, I'd buy all the individual companies, but I don't have to. They're all under Amazon. You're diversified, ladies and gentlemen, in Amazon. Look at his tweet. Now, some of you might not like this guy. I really don't care because what he said is right. James Woods. Just so everybody understands the game here, Lululemon and these other national brand stores don't care about theft because A, this crap is in fact virtually worthless, and B, they would rather sell it online. No fuss, no muss, no employees. When you see the stores locking everything up behind glass and forcing customers to select from a kiosk, it's a way to avoid excessive minimum wages to human workers, blah, blah, blah. Look at the next paragraph, the first sentence. Invest in Amazon, folks. Pretty soon, it'll be the only marketplace left. He nailed it. He sent this tweet out like a year and a half ago when people were like walking into stores and just stealing stuff from Lululemon, right? And they were firing the employees for going after the shoplifters. Nice job, idiots. So now that I've briefed the threats, let's talk about the benefits of trading just a single stock. Well, if you're trading just that one stock, you're going to potentially profit no matter what direction it goes up, down, or sideways. As an options trader, right? If you trade, I have no idea why people would own a stock. It makes 0 sense to me. Why buy the cow when you can get the milk for free? If you buy Amazon, you can make money 3 ways too. It's called the buy, hope, and pray. You buy the stock, you hope it goes up. If it doesn't, you pray. Not me, ladies and gentlemen. As an options trader, I don't care which way Amazon's going. I'm going to profit, and I'll show you how. You stay focused on the news and events that impact Amazon instead of a bunch of different stocks and ETFs, right? You become an expert in Amazon, reducing time spent on all these other positions. Let me give you a quick funny story. When I moved from Chicago down to God's waiting room, Boca Raton, Florida, a doctor reached out to me. He's like, hey, I heard you're a good trader. You teach people how to trade. Can you help? I got surgeries. I got office hours. I'm like looking at my phone in between appointments, and I just need help. Okay. I met him at a Starbucks. Thank God he's a doctor, because when he opened his laptop and showed me his brokerage account, he had 33 positions. I think I passed out and hit my head, so he had to revive me. I was stunned. Here's the funnier part. He tried to explain stuff, right? He goes, all right, well, let me go through it. He goes, this one, I think it's a pot stock. I'm like, what did you just say? I think it's a pot stock. All right, this one, it's a surgical stock. A buddy of mine got me into it. It's down 50%, but when it gets back up to where I bought it, I'll sell it. I'm like, Doc, you're a doc, right? He's like, yeah, why? I'm like, you're supposed to be somewhat intelligent. Why? Do the math, dude. The stock's down 50% from where you bought it. What's it have to do to get back? I'm like, all right, enough. Close this and get out of every position I am seeing right now and get into one stock, Amazon. That guy's life has been completely saved and changed. Now, if you're, simplify your trading cockpit, folks. This is funny. When was this? October. I've been telling that story. This happened in 2010. I've been telling that story for 14 years. This was on CNBC's webpage on October 16th. Here's a rapid fire update. This is Jim Cramer's Stock Club. Here's a rapid fire update on all 33 stocks, including new. Are you insane? You could put a bunch of monkeys in a room throwing darts at the Wall Street Journal and do better than this. 33 stocks? That picture of my trading firm in Chicago, folks, we had a research desk, right? A junior analyst had to know one name, maybe two if they were really good, like the back of their hand. They had to eat, breathe, and sleep that 1 or 2 names. A senior analyst had maybe 4 or 5. Do you know how many times I get up from my desk to walk over to the research group and go, hey, Steve, did you just see the news in XYZ stock? Yeah. Yeah, that's interesting. You're supposed to know everything about that name and you didn't know that? Yeah. So please, no offense to people in this room, please tell me as a retail trader with 5, 10, 15 positions in your portfolio, unless you're sitting there 24 hours a day, 7 days a week, how are you doing this? Folks, I do this for a living, and I have 3 to 5 positions, and that's sporty. You have got to simplify your trading cockpit, folks, period. I guarantee you it'll simplify your life. Now, if you're listening to me going, all right, I get what he's laying down, but I'm sorry, Wiz, the diversification vampire bit me in the neck. I must diversify. That's what my master says. All right, well, let me help you out with something. How about you trade XLY? It's the consumer discretionary ETF. Why would you do that? Because about 25% of this ETF is Amazon. If you want to get a healthy dose of Amazon, trade the XLY. You also get some Tesla, Home Depot, McDonald's, Lowe's, TJX, Booking, Starbucks, Nike, Chipotle. So ladies and gentlemen, if you loving some Amazon and you need diversification, we also trade the XLY in this portfolio, okay? Now, how do we target Amazon and XLY for max profit? I'm gonna show you. We're going to establish a base position, just like a Marine on a beachhead. We're going to establish a base position. We're going to go faster than the speed of light out into the future in the Amazon options chain out to June of 27. We can get long-term bullish 2.5 years into the future. After we establish our base position, we're going to trade what are called the front months. What's a front month? You're sitting in the front month. January, February, March. Amazon's going up, we'll trade some bullish spreads. Amazon's going down, we'll trade some bearish spreads or buy some puts. What if Amazon just moves sideways? Well, if you own the stock, nothing. If you're an options trader, you make money on a tactic called an iron condor. Let's go ahead and pull up my brokerage account and let's go look at a long-term bullish position on Amazon. Here we go. Now, if you wanted to buy, I don't know if we're on the chart. If you wanted to buy 100 shares of Amazon right now, you'd be spending $22,300. Everybody has that in their couch right now, right? Under the cushions, 22 grand. No, you probably don't. I'm cheap, folks. Watch what I'm going to do. I'm going to bring up the options chain and I'm going to fly all the way out to here. June of 2027. I can get long-term bullish on Amazon all the way out to June of 2027. Now, if you don't know anything about options, you probably know at least this, right? If you buy a call, you're bullish, right? It makes sense. You've probably heard that before, even if you don't trade options. I'm bullish on NVIDIA earnings. I'm going to buy some calls. Okay, great. That's the extent of your options knowledge. Awesome. If you buy a single June 27, 220, which is close to at the money, the stock's at 223 right now. If I bought this 220 call, it's $5,600, ladies and gentlemen. Buying a single options contract gives you the right to control 100 shares of Amazon stock. Somebody tell me why you would buy 100 shares of Amazon stock today. A dividend. Did you not hear me? Amazon doesn't give dividends. It's a complete waste of money. Now, I'm going to show you how you can get it even cheaper, how you can be long-term bullish 100 shares on Amazon years into the future. If you know that buying a call is bullish, you've probably also heard in around the options cocktail parties you've been to, I'm sure, that buying a put is bearish, right? You've heard that. Uh-oh, it looks like the S&P 500 is going to implode. I'm going to buy some puts, right? So buying a put is bearish, but somebody has to sell you that put. They don't think something's going to go down. That's why they're going to sell it to you. So buying a put is bearish, but selling a put is bullish. So I am going to sell that 220 strike put. And ladies and gentlemen, it's only $2,400 to get long-term bullish on Amazon today. Instead of spending $23,000, I just saved you $21,000. I can't hear the golf claps, but you better be golf clapping for me. Okay, but let's look, and I'll show you what this tactic is called. Let's go look at the risk. You see the picture over here? That's long stock. If you bought 100 shares of Amazon right now, that's your P&L, profit and loss diagram. Well, guess what? The tactic that I'm showing you right now is called synthetic stock. Why is it called synthetic? You're not buying the shares, bro. And you're not buying the shares. There's only two things you don't get with synthetic stock. And both you shouldn't care about. One is the dividend, which we laugh at. Amazon doesn't give one. The second one is you don't get to vote. You don't own the shares, so you don't get to vote. The last time I checked, Jeff Bezos and his ex-wife probably own one or two more shares than you'll ever own in your life. So it doesn't matter that you don't get to vote. Now, the smart people in the room looked over here and said, holy crap, Wiz, the max potential loss in that trade is 24 grand. What's the max potential loss if you buy 100 shares of Amazon right now? The max potential loss is if Amazon goes to zero, right, Chief? Look at the probability of Amazon going to zero. It's Mr. Blutarski's GPA from Animal House, 0.0. Now, the odds of getting killed by a golden retriever are never zero. I think there's like 16 decimal points and a 1. Can Amazon go to zero in the next 2.5 years? Of course it can. Anything can happen under God's universe. Will it? No. But ladies and gentlemen, it doesn't matter. The E-Trade, the Schwab, the Fidelity, whatever risk management department, you can't get them on the phone and go, hey man, don't margin my account as if this Amazon's going to zero. You know it's not. Come on, man, I'm your buddy. Click. They're not even going to take your call. So here's what I'm going to do. I'm going to buy what I call a disaster put about 20% under the stock. Why do I call it a disaster put? If the stock market or Amazon goes down 20%, what do they say it's in? A bear market. Breaking news, the S&P is down 20% as of today. It's officially in a, so that's a whizzism. I'm going to buy what I call, I don't know if I did my math right, it's around $180. So I'm going to buy the 180 put underneath this. It's going to do a couple things. Now, obviously, the price of the trade went up a little bit because I'm coming out of pocket to buy a put. It's some insurance. But instead of risking $24,000, guess what your risk is? Now, my call sign's Wiz. Watch the magic that I just did. $8 grand. If you bought 100 shares of Amazon today, and God forbid it goes to zero in the next 2.5 years, you lose $24,000 or whatever it is. If you did the synthetic stock and Amazon went to zero in the next 2.5 years, you'd lose 8. That's the worst possible thing that could happen to you. It's going to be a rhetorical question one more time. Why in the hell would you spend 24 grand to buy 100 shares of stock of Amazon? It's stupid. Now I have one more trick up my sleeve. Let's trade, like I said, the front month. Out to Friday. What's Friday? The regular January expiration. I'm going to sell an upside call. What's Amazon at right now? 223. I'm going to sell a Friday, January 25th, 225 call. Ladies and gentlemen, I'm bringing in $110. So guess what I'm going to do? Every week I have this trade on for the next 2.5 years, unless Amazon's going straight up, I am going to sell a Friday call against the position that is going to reduce this cost basis. Eventually in 6 months or so, 4, 5, 6 months, this trade will be completely paid off. One more time, rhetorical question. Why would you buy 100 shares of stock? Ain't nobody paying off that 100 shares of stock, folks. I will pay off this initial investment by selling short calls. Let me show you my current Amazon trade. It's right here. I have synthetic stock at the 225 strike, the 180 disaster put down. Oh, let me just analyze here. There you go. Oh, not that one. Let's analyze the whole position. Click on it, analyze. So there you go. This is my existing position. If you did this trade today, mine's at the 225 strike, but I sold out the Friday, the 225 and a half call. 225 and a half. So nice pop out of Amazon today, but I keep that cash, that 225 call that I sold, and it is going to bring in money and pay off the trade. Folks, there ain't any position on God's green earth that is going to help you pay off your stock. You could do some covered calls, of course. I can teach you how to do that stuff, folks. But isn't this awesome? Instead of spending $23,000 today to buy 100 shares of Amazon, and I'm going to tell you, folks, these synthetic stock trades, they work in the background. I trade the S&P 500. I do all sorts of stuff in the front month. But folks, this synthetic stock in the background, I showed you some of the case studies. These are potentially six-figure trades. These trades can potentially make over 2.5 years, 6 figures. If Amazon keeps going up and to the right, you potentially are looking at a 6-figure trade over 2.5 years. Let me get a show of hands. Would you like to make potentially 6 figures coming out of pocket, 3 or 4 grand initially? You don't have to raise your hand because I know the answer is yes. So here's what you need to do. You need to join our solo Amazon service. I'm going to teach you all this stuff, man. If you don't know how to trade options, I'm going to give you access to what we call OWS, Options Weapons School. So my other briefs, are about $167 a month because I trade a bunch of other stuff. But in solo Amazon, I'm only trading this stock. So it's $970 a year, or I'm going to give you a link for $97 a month. If you do the annual membership, you get a couple months free essentially. But if you want to, here's your flight test. If you want to try it out for a couple months at $97 a month, you can do that. Here's the link, topgunoptions.com/solo-Amazon. Let me go bring up that web page here. It is right there. $97 a month. Paste that in there to everyone. Boom. Just scroll down. You can do the annual for $970, or you can do $97 a month. I don't drink anymore. Thank you. Psychedelic assisted therapy that healed me months ago, or not months ago, years ago in Mexico with Marcus Luttrell, Navy SEAL. I started a foundation. Why am I rambling about that? Because I used to say, hey, $97 is a cheap bottle of wine. I don't drink a bottle of wine anymore, folks. Thank God. But $97, call it a nice dinner. Okay, what do you get for $97 or $970 a year? That's how we did in Amazon last year. This account started with $25,000 last January 1st. It made $136,000. About 126 grand in Amazon, and I did a little XLY along the way. The vast majority of my trading is in Amazon. That's the results from our solo Amazon portfolio. I'm not going to do too many more case studies because I want to keep people on time. Hey, Wiz, every Monday morning at 10 a.m. when you do your solo Amazon brief, I'm working. Well, guess what? 80% of our members work Monday mornings at 10 a.m. We send time-sensitive alerts. We have an app, the Top Gun Options app. When I place an Amazon trade during the brief, I stop the brief, I go over to the app, and I fire an alert. I can show you that app in a second here if you're interested. So no text alerts because, my cell phone company, we got rid of all that stuff, man. We have an app with instantaneous alerts on your cell phone. And then, about 20, 30 minutes after I get done the brief, it takes about that long to render the recording on my laptop. I post the replay on the member page. A lot of folks watch the replay on their lunch break or when the kids go to bed. It's absolutely awesome. Chris, I'm so geeked. Been a subscriber for almost 3 years now, and this is the first time I've been able to attend live. I only know you via the replays. Today, I'm going to hook you up with these flight manuals. These are worth their weight in gold. Primary, intermediate, advanced. As soon as you join, download these and start reading. I go reread these every once in a while to tighten up. Man, I'm a little rusty on volatility. Let me go read that chapter. These are epic. Now, if you went to buy these on our homepage, they're $197 for all three. Let me help you out if you're a political science major like me. Wait a minute. It's $97 for a month. Yeah. The manuals are $197. But they're free. Yeah. So I just saved $100. Yeah, you did. so everybody understand that. These are yours to keep. They're included, man. You just made $100 today. Here's what you get. Access to the solo Amazon brief every Monday morning at 10 a.m. Eastern, the app and email alerts. For all the old folks like me who, I don't know, Wiz, apps are kind of creepy, I still send out an email alert with a screenshot of the trade and all that type of stuff. So, but the vast majority of traders nowadays are pretty tech savvy. It's an app, man. You get a chime that goes off and the trade appears right on your phone. 3 skill-based manuals. I just threw them in there. They're usually $197. They're included. And access to the members only ready room. So let me just, since we have a couple minutes left, let me just go show you what that looks like. Right here in the ready room, in between briefs, if you got a question, Wiz, what do I do with a bear call spread? But, I post intelligence in here, Goldman Sachs. There's an Amazon trade. Boom. Here's the Amazon trade alert thread. I posted this 2 days ago. You click on it right there. There's the trade. There's the risk metrics and everything like that, folks. If you have any questions on anything, you just throw it in there. I get an alert, folks, when somebody asks a question in here, right? And there's 552 members in here. If I'm sitting on the couch watching the Panthers beat up on somebody and my phone dings and they have a question, I get in there and I answer it, man. Greg in here asking questions, people in here, Bruce and Steve, boom. I get in here. So that's what it looks like. Okay. So you get access to the ready room. You get access to that Amazon thread where I ask all the questions and it's awesome. Now, again, I said it's $970 for a year, but if you want a test fly, it'll only be $97 a month. That's our test flight. $97 a month. And that's for the rest of your life, folks. It's not like it magically goes up to $10 billion in month 2. It's $97 a month for the rest of your life. But that's stupid, right? Why would you stay in $97 a month when it's actually cheaper to do the annual? We only do the $97 a month so people can go, all right, you're not a complete idiot. I've been here for a couple months. Now I'm going to upgrade. Just shoot an email. Supported Top Gun options. You know what? I've been in the month-to-month solo. Please upgrade me into the annual. You got it. Now I sound like the Flex Seal Tape guy, but wait, there's more. There is more. When you go to check out, just like at Amazon, it's going to say, do you want the training? Yes. Even if, what's the motto of Top Gun? You think you're good, we'll make you better. Even if you think you're the best options trader in the world, you're not. I'm going to make you better. It's called Options Weapon School. It's only $297, folks, which is a nice dinner. Options Weapon School. Take the training. We take a building block approach. This is the stock market. This is where I gather my intelligence. This is our tactical trade plan. I haven't even talked about options yet. Session 2. These are calls. These are puts. Just the basics. Each one of these is about an hour to an hour and a half. There are members that have watched these 100 times. They're like, dude, when I watch these, I learn something more each time. These are worth their weight in gold. Wheel, spreads, double verticals. And the tactic I just showed you, if you followed, it's session 6. I did that tactic in what, 10 minutes? You're going to get an hour and a half training on what I just did. But if you kind of went along and heard what I said, awesome. Welcome aboard. Okay. Who's that? Oh, that's Utah. He was a Blue Angel. Mark Provo, call sign Utah. FedEx captain, didn't know what the hell an option was. Came down, layover in Fort Lauderdale. We did lunch. I gave him some training. Good morning, Wiz. Less than 20 trading days. I'm up 15 grand on a $40,000 account. I'm like, dude, Most people would kill for a 38% return in a year, let alone 20 trading days. Okay. So, and then whatever. I mean, this guy, another case study, whatever. I'm going to keep these guys on time. It's our newest live trading service. Our briefs are usually, 167 a month. The other ones, I'm only trading one name. It's a hell of a lot cheaper, $970 for a year or $97 a month. If you didn't learn anything today, I failed miserably, but I'm pretty sure you did. Simplify your trading cockpit. After all the briefs today, was I talking to you? Are you talking to me? Was I talking to you? Do you have 33 positions, 15, 20, even 10? Folks, you saw my brokerage account, about 5, and I do this for a living. Simplify your trading cockpit. Diversification is for stupid people. The only stock you need to own for the rest of your life is Amazon. And with that, I like being on time and on target as an F-18 pilot. I'm going to throw it back to you guys, and thank you for having me, folks. Have a great rest of your day, and fights on.
Wiz, you did it again. Thank you so much. Love your presentation.
Man. Thanks for having me. I appreciate it. Happy New Year.
Happy New Year. Always on point and on site and relevant. Amazon sure is an exciting instrument to trade. A lot of money to be made with that one ticker alone, and now XLY. So why not? Thanks for joining us today, Wiz, and thanks for making such a generous offer to our members. Ladies and gentlemen, that was Mr. Wiz Buckley of Top Gun Options. And Wiz has put that special offer in the chat box, and you can learn more by going to www.topgunoptions.com. Come back and see us on Traders Corner, Wiz. We appreciate you.
You bet, brother. We'll see you.
Thank you. All right, that's a tough act to follow. But ladies and gentlemen, you'll be glad that you stayed until the end. Our last presenter, he is a graduate of Syracuse University and has been trading the financial markets for the past 12 years. He wears several hats over at Right Line Trading. He is a trading coach. He assists with the optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the Right Line Trading community. Here to present AI Auto Trader, the next frontier, AI bots that learn, adapt, and earn for you, is the great Mr. Rory Powers of Right Line Trading. Welcome to Traders Corner, Rory.
Oh, thank you, Anthony. That's a beautiful introduction. I really appreciate that. Thank you. And it is a pleasure to be here. I know it's been a long presentation, a long day, but stick around. I've got some really exciting trading system to show you today. It's called the AI Auto Trader, and it leverages some cutting edge AI advancements that really open up a new frontier in trading to take us into 2025. I know the new year was January 1st, but I like to think of the trading new year is going to be January 20th. Only because what happened 8 years ago, and I don't say this for political reasons, but 8 years ago, Donald Trump made trading great again. And I think with the new administration and the deregulation, the energy independence agenda, ending the geopolitical conflicts, who knows, maybe even with a mean tweet or two, he's going to send these markets, with a lot of volatility, and as day traders, that's how we really make really nice money. So stick around. I think I've got some really great information for you today. I just want to get the CFTC out of the way. This presentation is for demonstration and educational purposes only. I am not a licensed financial advisor. If you're not familiar with the risks associated with trading, please do yourself a favor. Consult with a licensed financial advisor. And I'm going to start my presentation with a testimonial. This testimonial is from one of my favorite members of our AI trading community. Her name is Marcia, and I know it's been a long day, so I'm going to kind of condense her testimonial. But if you want to see the full version, it is listed on our YouTube channel. And Marcia came to us as a complete newbie, We've got a beautiful trading community of 300 to 500 traders. And over the years, you know, we've had thousands of traders in our community, and they all, you know, fall on a variety of I like to refer to it as the spectrum of experience levels. To the far left is your beginner. To the far right is your professional full-time trader. And our community consists of both left and right and everything in between. Marcy, it's important to know, came to us on the far left, had never traded before. She asked me on the phone what I would recommend, and knowing that 90 or 95% of discretionary traders don't do very well. They blow out several accounts. They go from trading system to trading system looking for a way. And in order to short the learning curve and make her experience a lot more successful, I recommend that she take part in the AI Auto Trader. So her testimonial, in short, describes her first 45 days of becoming a member and getting 16 funded accounts with one of the prop firms, 16 $50,000 accounts. And in fact, today she's adding to that and is very close to getting 15 more funded accounts. And she still has those initial 16 accounts that she started the first 45 days in her journey with. So she's one of our success stories. She's in our YouTube live streams. She posts her winners every day, and she's very consistent and she's very successful. But I think what distinguishes Marcia from a lot of other traders is her learning curve was so short. In order to accomplish these incredible achievements, she did it in less than 60 days. I can't tell you how many people, how many traders that I talk to that are in this for years and have spent thousands and thousands of dollars and bought dozens of different trading indicators and systems and still have not been able to achieve what Marcia has been able to do. She's a 100% genuine and honest. And if you go to our YouTube channel, you'll see that she's 100% genuine. So I wanted to start with that because there is hope. And I do bring a message of hope today if your trading journey has had a few potholes or speed bumps along the way. I'm part of a very experienced and educated team. Not only are we software developers and engineers, but we also consist of professional traders. Our mission here, and I use the word mission coming right after Wiz Buckley. Wiz, a decorated Navy pilot and a very distinguished guy. And I want my hats off to anybody who served in the military. But our trading team, it is our mission to develop trading strategies that provide our members with an edge over the other retail traders. Trading in the financial markets is like going to battle. We're on a mission. We're on a mission to win some money. And we want to have a tool. We want to be trading with a system that's more technologically advanced and more powerful than the other retail trader. And that's been our vision and our mission since we started with this AI Auto Trader. And I just want to briefly recognize the members of my team. I'm going to start with the professional traders. We have Mr. Craig Emery, runs our futures trading room. He uses our trading signals to trade the futures contracts. He trades his live account as well as a prop account. We also have Mr. David Kushner, who is, I like to refer to him as our prop trading extraordinaire. The Kush, David Kushner. Endearingly and lovingly, we call him the Kush, the good stuff. Mr. Kushner has had 6 funded accounts with a prop firm, and he religiously is getting payouts bi-weekly every single month. And he's done it for the past 6 years. So we also have Mr. David Wise. David Wise is our options trading extraordinaire. He's a leader in the Reddit community of traders. He's been verified by Reddit in their community. If you ever have a chance, his name in Reddit is One Wise, and you'll see that his name is highlighted, which means that he's a professional trader that's been verified by Reddit. And I'll tell you why he's a professional trader. He consistently wins 89% of his trades. He's one of the very rare traders that can kind of channel out all of human emotion and really base all of his decisions based on the technicals. He eliminates all human emotion out of his trading. He's a unique individual and he's a great trader. We also have behind the desk here at Right Line Trading, Brock Miller. Brock is my right-hand man. He's a great guy. He's a college student. He's getting his degree in computer science. And then we have our Mr. Charles Sider. I always refer to Charles as our engineer. Charles is one of these guys that's very meticulous. He makes sure all the I's are dotted, the T's are crossed. He's a giver. He provides a great service to our community, not only with his tech support, but he also does a weekly training session that guides people on their journey to trading this AI auto trader. We also have Mr. Sergio Luque Rodriguez, and Luque is our coder. He also has a master's degree in computer science like Charles. Charles is a UCLA grad. Sergio has his master's degree from FIU here in Miami, and he's also got his master's in computer science. But Sergio, I've been working with Sergio for going on together. Sergio's been with Right Line for going on 10 years now. I think it's 8 or 9 years going on 10. And Sergio, listen, I've seen him progress. When I first started working with him, his English wasn't very good, and I really underestimated him. But let me tell you something. Not only is his English excellent now, but his skills are off the charts. When it comes to bringing mathematical modeling or complex algorithms, and now that we're in this AI revolution, he's able to integrate AI technology into our automated strategies. And that's the basis of my presentation today, that I'm going to tell you exactly how we're leveraging this new technology to our advantage. The team is led by the owner of the company, Mr. Mark Miller. Mark Miller has his MBA from Cal State. He's a U.S. Army vet. He happens to be a great guy, a ton of fun to be with. He trades the system on YouTube Live, and you can check him out. And let me tell you, being a U.S. Army vet, what I really appreciate and respect the most about Mark Miller is he brings those core military values to every department here at Right Line Trading. Honesty, integrity, transparency. And he brings those to the forefront of everything that we do here at Right Line Trading. So that's the team. I want to just introduce the voice that you hear behind the screen. Like Anthony said, everything he said is true. I'm a graduate of Syracuse University. I've been with Right Line Trading for over 10 years, going on 11. I'm in my 11th year now. And I reside down in South Florida. This is a couple of pictures. Besides trading the financial markets, my passion is also saltwater fishing. Residing in South Florida, you'd be crazy not to take advantage of this beautiful ocean that we have. We're right on the coast here of South Florida. But let me tell you, I've got to brag about my biggest and best catch. The best catch ever was my beautiful wife. It's a miracle I caught her, because she's a half marathon runner, and I'm a little bit over the hill when it comes to running, but I was able to catch her. And the two of us have two beautiful children. The good Lord has blessed us. This was on Christmas just this past year. This was my little one. Her her second Christmas. Her first Christmas, she was just a little baby, but she'll be 2 in March. And my little one, Marilee, is 6. She'll be 6 in March. And you can see Marilee got a red ukulele for Christmas. And Santa Claus made a big mistake. Santa didn't bring Heather, my little one, a ukulele, and she was quite upset. Since then, Santa has come back from the North Pole with a yellow ukulele for my little one. But you can see me with the Coco Melon shirt of my wife on a recent fishing trip. You can see Mark Miller, Sergio, and myself caught some beautiful grouper, snapper, a tilefish. Once we got back to shore, the restaurant cooked them up, and man, we had I'm telling you, the freshest, most delicious fish dinner. But enough about me. Let's talk about the AI auto trader, the genesis. Thank you, James. I really appreciate that. The genesis of the AI auto trader. And if this was the female version of me, maybe it's Sally. I see Sally out there. I know Sally for many years. This is the epitome of a trader. This is, and if I could put words to a picture, this is how I would describe it. The frustration over the weeks or months has built up and accumulated, and it's come to the boiling point, the breaking point. You can see her equity curve, the balance of her account is dwindling down to almost nothing. And finally, she's ready to take a sledgehammer and put it through her monitor. Ever been there? I can't tell you how many times I've wanted to take a sledgehammer and bust my monitor. And so the genesis of the AI auto trader was that feeling, that frustration, having moments of glory where we get a winning trade and we have a good day, or we string together a good week, only the next week or the next month to just give it all back. So that lack of consistency was the genesis of the AI auto trader. So we've all experienced problems making money trading, and I want to, highlight what I believe to be our biggest problem. And I'm going to put myself in the first person here, but I want you to know I've spoken to hundreds, if not thousands, of traders, and it's really a privilege and an honor to be able to speak to you over the phone over the years, and I've gotten to know so many of you. But I think we all share, in these emotional errors. And you think of somebody with emotional problems, you think of a guy that's, laying on his psychiatrist's couch with his legs propped up on the couch, telling the good doctor where it all went wrong. That's not the type of emotional errors that we're talking about here. What we're talking about is over trading, revenge trading, making impulsive decisions. I was on Trader's Corner here a few months back, and a really educated guy, his name was Chris Vermeulen, and I'll never forget his presentation. He had done a study, and his study was on human personality traits as those personality traits relate to trading, and whether or not those core personality traits lend well to being a good disciplined trader where you make sound decisions. And not surprisingly, what he found, the core human emotions, and just to give you a couple of examples, you have a driver. That's the one who's saying, go, go, go. Maybe somebody who overtrades. You have the revenge trading. I can't tell you how many times I took a couple of losers, and try to win it all back on the next trade. But going back to the personality traits, you have the analytical, and you think of somebody like an engineer that doesn't want to make a wrong decision. They may be hesitant to pull the trigger. They don't want to be wrong. They want to weigh all the options, and they're a little slow coming out of the gate. And then you have your emotional. These are all personality traits. We all share them. We all have a certain degree of each one of them. So back to Chris Vermeulen's study. He found that maybe one or two of these core personality traits lend well to being a good disciplined trader. Somebody like David Wise, David Wise, he's in that options room and I seen him in a trade and he's in a trade and he's taking heat, and I'm squirming in my chair and can't get to the mouse quick enough to get out of it. And he comes across, in the room, he sounds like a pilot on an airplane that you're going through turbulence and you're hanging onto your armrest ready to rip him off the chair. And he comes across the microphone cool and calm as a cucumber, and if you look out to I want to welcome you to American Airlines. If you look out of your left, we're flying over the Rocky Mountains, and on your right, and we're just experiencing, and he's just calm and cool as an airplane pilot going through turbulence. But those are the type of people that can make sound, disciplined, have a rules-based strategy that they never deviate from. And that is the bots that I'm about to describe to you. These automated trading bots never break the rules. They never break the rules. Let me see if I can get to my next slide. My computer's acting a little weird. We've narrowed it down to two things that we believe are going to create trading success. Thank you very much. I appreciate that. Thank you very much. We've narrowed it down to two things. Number one, we have to have the proper tool set. What I mean by the proper tool set, you don't want outdated technology. I was on another presentation and somebody asked, do you still use NinjaTrader 7? That's like kind of using Apple's original computer that came out back in the 80s or 90s. It's just a dinosaur. There's so much stronger and advanced technology. You don't want to be trading a system that's outdated, that did well 10 or 15 years ago. Things have changed since then. Number two, because we all suffer from those human emotions, ideally, and human error. I always laugh because I'm the biggest culprit of it. Ideally, because we suffer from these human errors, we want software that can automatically get us in and get us out of these trades automatically. So I like to lay down a little bit of a foundation here. But before I do, I want to point out, I mentioned that I really believe January 20th is going to be the new year for trading. And, if you haven't noticed, we happen to be in what I would call an AI revolution. There's three companies. I know Wiz just discussed Amazon, which is a monster company, but there's three that are bigger than Amazon, okay? There's NVIDIA, there's Microsoft, and there's Apple. And the technology that why they're at $3 trillion right now is because of their cloud-based technology, their computer chips. Those computer chips that NVIDIA is making, last year alone, their stock went up 243%. If you got in when Paul Pelosi did a few years back, that number is probably double or maybe triple of that. And it keeps climbing higher and higher and higher. In fact, AI technology is really working its way into just about every sector in our economy. Healthcare, retail and e-commerce, the supply chain and logistics, real estate, travel. We're talking now about banking and finance, manufacturing, agriculture. It's it's finding its way into every sector of our economy because it produces a more efficient output. It's a lot more efficient than the older technology. So the main benefits from using our AI auto trader, number one, you're going to have an edge over all other retail traders. And I'm going to lay out the 3 core ways that we're leveraging this AI technology into our trading system. Before I do, I'm just going to highlight the benefits that you'll receive by trading our AI Auto Trader. I'm going to show you a live chart and some performance metrics of how we did today. This is my P&L for today. Can you imagine having the ability to trade 5 different instruments simultaneously and being able to put up numbers like these on a daily basis? I don't know about you, but I can't do it. There's no way in God's green earth that I could put together a day like that. This is a powerhouse of a system that does it every day. And if you stay to the end, I'm going to give you a free invitation to come see the AI Auto Trader trade on a live market on YouTube tomorrow morning. We'll be on YouTube tomorrow and Friday. We're there every day of the week. But the main benefits of the AI Auto Trader, for me, it's been the bonehead human errors that I do. I am very proficient at NinjaTrader 8. I think I know NinjaTrader 8. If not as good as the next guy, maybe a little better, because it's really all I've done for the last 10 years. So I know NinjaTrader 8 very well, but I still make these bonehead decisions that are based on emotion. Sometimes it's the trading system trying to get in and out of trades if I'm trading on a discretionary basis on a fast-moving market to make quick decisions. I just am not very good at it, to be honest. So what this does is it eliminates all of that human error. There's no more overthinking. There's no more hesitating. It's going to put your stop and your profit target in the most ideal location based on the average true range of the market. In the background, this AI technology, and that's one of the 3 points that I'm going to cover, is going to dynamically adjust the parameters in your strategy that are based on the current trading environment. The elephant in the room when you do a presentation on automated strategies, it has to be, well, listen, I've bought a bot in the past. I've bought a strategy in the past, and it didn't work. When market conditions changed, it got stale. It did good for a week or two, and then it didn't. I had to continuously optimize it. It was just nonstop. With the changing conditions of the market, I had to keep playing with the inputs. Well, guess what? With this AI technology, all of that is eliminated. This is a system that, based on the trading environment, which changes very quickly. We all saw it today. We saw that CPI report come out at 8:30 this morning, and all of a sudden the market shot up and was trending beautiful most of the afternoon. We had big moves up, some retracements, yeah, but really nice trending up market. So, with the release of a news report, my point is it's a very news-driven market. The market can change from being a ranging, choppy market to shooting up to the sky or dropping down like a lead weight very quickly. So this strategy, this technology will automatically adjust the position of your stop and your profit targets based on the average true range of the market. So it eliminates all of those human emotions. It eliminates putting your stop in the wrong place, getting out too early. All of that is eliminated. I'm also going to discuss prop trading on steroids. If you're a prop trader, stick around. I've got a new PA template that we just released that I want to show you. So let's get into the 3 points I wanted to discuss. Number 1, I wanted to discuss the candlestick pattern recognition. The charts are very symmetrical. If you look at a range chart, you can see on this range chart here, and this is one of our charts that the system traded today. You could see these circles that come above, these green circles that come above these bars. What those are signifying is a bullish engulfing candle. The system does recognize bullish and bearish and engulfing candles, as well as a number of other candlestick patterns. And it has a machine learning mechanism that once it recognizes those candlestick patterns, it will take action. If you're in a long trade and a bearish engulfing candle comes, it's going to close the position and get you out and lock in profits. So it's using that pattern recognition to help manage these trades. The second component that I wanted to touch bases on, and there's a number of different, I'll show them to you real quick. There's a number of different candlestick patterns that the strategy recognizes. And I don't want to go too deep into the minutia, but I'll show you this really fast. These are in the strategy parameters themselves. These are some of the different candlestick patterns that the system will recognize. And when they see them, it will help manage the trades. That's the candlestick pattern recognition. The second component that I want to show you is our technology. The way it works is each and every one of our bots, and we have a very diversified portfolio of strategies. We're trading the futures index equities on NinjaTrader 8. All of the future index equities with the exception of the Russell. The Russell, for now, we've sidelined. So we have the NASDAQ and the E-mini. That's our 1-2 punch. The NASDAQ and the ES. And listen, we're not dogmatic about which instruments we trade. We trade the ones that make the most money. The ones that all of our decisions are data-driven. We trade the strategies that make the most money, period. If they don't make money, they don't make sense to trade. So we trade the ones that make the most money. It turns out that they happen to be extremely liquid instruments, which are the NASDAQ, the NQ, and the ES. There's a very small bid and ask spread. So these are very liquid instruments. If you're trading a live account, you'll get your fills very quick and easy. But back to the technology. I don't want to get caught out in right field here. The way our bots work, each and every one of them runs in tandem with what we call a drone. So each bot has a drone. They're two separate strategies. The drone is exactly what it sounds like. A drone, you think of an aircraft hovering over the atmosphere and scoping out the territory and giving you a bird's eye view of the environment. Well, that's exactly what this drone is doing. The drone has a huge profit target, a huge stop loss, and it takes the trade and it's hovering above and it's seeing what the average true range of the market is. The bot is sharing a database, and this is part of that AI integration that we install on your computer. And the bot, based on the information that the drone tells it, will know exactly where to place its stops and its profit targets based on the range of the market. Now, not only is it telling it the average true range of the market, but my third bullet that I want to cover is it's also telling it, because the drone is running 23 hours per day. So the drone is also telling the bot what hours of the day historically it performs the best. And the bot will dynamically change its trading hours inside of the strategy parameters. Let me go back to my strategy. Inside of the parameters, we have the trading hours, and these will dynamically change. We can have up to 3 separate trading hours. If it finds it does well at the London Open, let's say, from maybe 4:30 or 5 a.m. to 7 a.m., it does extremely well. Well, that'll be your number one. Your number two, well, maybe after a half hour after the New York Stock Exchange, it does well. So you might have an hour or two in your second window. And your third window will be the third most profitable time of the day that the strategy is making the most money, and it'll lock in that third window to trade during those hours. So this will dynamically change based on the historical performance of the drone. And I'm going to show you some real examples here. So let's go over the performance, because listen, let's face it. When it comes to an automated system, it all boils down to what do the numbers look like, right? Okay, let me show you, because I'm really going to blow your mind with this. You know, we've come a long way, and the technology has evolved, and I'm going to show you some performance metrics that are, you know, really game changing. Our most profitable strategies I mentioned were the ES and the NQ. Thank you, Joseph. That's very kind of you. Yes, you are going to get a replay. Okay, let me stick to the point. So our top two strategies I mentioned were the ES and the NQ. So let me show you a couple of strategies we're running on the ES. The ES runs on a 30 range. It's a big bar for the E-mini. And it actually takes all of our signal, all of our triggers, A, B, and C. That's why it's called signal A, B, and C. So let me show you what the performance has been. From December 1st, okay, to January 15th, trading one contract, okay, trading one contract on the E-mini after commissions. This strategy on my computer made $13,140. And I always like to keep it real, because I've seen some other presentations, and I'm going to call them questionable. But let's go right to the ES30 range, and let me uncheck it, and it goes to 0, and I'll check it, and I'll push generate, and we know that this is the real deal. So from December 1st to January 15th, it shows that my P&L is $13,140 trading one contract. Now, there's nothing preventing me from, once I build up some equity in my account, to scale up the number of contracts I'm trading. So if you're trading 2 or 3 or 4 contracts, imagine what that does to the P&L. It makes it incredible. One of our members, and I tell you, you know, I always say it, if you've ever heard any of my presentations, I'm not embarrassed to tell you that we get some of our best ideas from our members. One of our members, Robert, who happens to be a professional trader, has been running this strategy and actually shared it with us. And if I tell you how he got it, you would laugh. And I'll give you the backstory, not to overrun my time here, so let me speed up. But we had a strategy on the NASDAQ that ran on a 30 range. He mistakenly put it on the ES. He's a professional at optimization of strategies. He ran it through thousands of different iterations and found the ideal inputs, and put it on the ES by mistake. And it just so happens he's been running it from September 19th. The last I spoke to him was on Friday of last week, to January 10th. And he was at $44,000 trading one contract. He's a member in our Discord chat group. He makes himself, he's very responsive and active in our community. And he's up $44,000 since September 19th, trading one contract on the E-mini. We also have an E-mini on the 8 Unorenko, but my lack of time, I'm going to jump over to the NASDAQ. But man, do we also have a powerhouse, another member, Mr. Higgins. This is the one that today made $4,775 in one session today. It leverages an 8 Unorenko bar, and I could show you the entries that it took. It's not just smoke and mirrors. This is the ES chart, and the entries that it took today to make $4,775. Just amazing. So it looks like it did it in pretty short order too. Yeah, this started at 8:30 this morning, and you could see it caught that huge move up, caught the long right above the VWAP. The green background signifies a multi-time frame alignment of trend. That 8-unit Renko is also looking at a 34 range. And if the 34 range is lined up to the upside, that green background signifies a multi-time frame alignment of trend. The green arrows, those are our market internals. The system picks up that there's a disparity between uptick and downtick. We're looking at those internals. So those green triangles are telling us right when that news report came out that those algos, those institutions were driving the price of the E-mini higher, and we were all over it. We were on top of it. $4,775 in one trading session on that 8-unit Renko on the E-mini. So let's jump to the NASDAQ. I really want to cover our NASDAQ strategies because I really think we have the ultimate 1-2 punch. The one punch being the E-mini. The second punch is our Haymaker and our Mack truck, which coincidentally also run on Unirenko bars. Let me show you the metrics on those. The 20U Mack truck from December 1st to January 15th, we're just under $4,000. And let me bring over my performance. We're just under $4,000 on the Mack truck. And let me go to my summary. This shows you week by week. I always like to uncheck it just to show you that this is the right strategy and generate it. And this will show you the exact numbers. I just pushed generate. I shouldn't have done that. It looks at a lot. I have a lot of tabs open on this performance. But what you'll find when this comes back is that my numbers are 100% accurate. We're just under $4,000. Here it is. Just under $4,000 trading one contract on our 20 Unirenko Mack truck. To show you today's chart on it, it made $2,000 today. It also caught that big move up early and locked in a couple $1,000s throughout the session. That's on our 20 Unirenko. And last but certainly not least, we have our Haymaker. Those of you that have seen me in the past, I'm always talking about the Haymaker. It happens to be one of the most exciting strategies to watch. I'm sorry, the Haymaker runs on a 30 range. The Haymaker, you can see a beautiful equity curve. If we look at the summary on it, we're up $4,282 trading one contract on the NASDAQ. So, you know, between the Haymaker and the Mack truck, you're looking at right around $8,000 trading one contract between December 1st and January 15th. I mean, that equity curve, if you look at it, very little drawdown, a beautiful curve to the upside that I know you'd be thrilled to have. So those are really our most profitable strategies. This is the Haymaker that I just showed you. And prop traders, yes, prop trading. I like to refer to this system as prop trading on steroids. I'm kind of running tight on time, so I'm going to speed up a little bit. We have customized templates that are specifically designed to get you through an evaluation in one day. In fact, in one trade. And if you join us on YouTube tomorrow or Friday, we'll show it to you live. What the system does is it picks the hottest strategy during the hottest half hour of the day, and it trades the maximum number of contracts. For example, on a $50,000 prop account, you could trade 10 contracts. Our profit goal in order to pass that evaluation is $3,000. To get $3,000, we need 60 ticks. Well, to account for slippage and commissions, let's call it 63 ticks, the system will take a trade at the optimal time of the session with that optimized trade management strategy, and you'll either pass or fail in one trade. It's a very aggressive strategy, and I think that 33% is a very fair number. We have some that will go up to 50%. It'll be 1 out of 2. I'm somebody that doesn't want to overpromise you and have you calling me disappointed. I'm the one who answers the phones here. So I don't live in an ivory tower. So I don't want to tell you something that isn't 100%. So let's count on 1 out of 3 on these evals with our 1-day pass templates. And I think that's very honest and fair. This shows you the 30 range on that NASDAQ, which is the haymaker strategy, is one of our best ones. Now, I'm really proud, you know, to show you this PA. We have a new PA. Once you get over the hump of the evaluation, you know, which is pretty difficult, now you got the PA account. And listen, we're going to change our strategy. We're going to be a little more conservative with these PA accounts. We had to pay for that second account. Or if you started with a PA account, you paid a little more for it. We don't want to blow it out in one trade. So we go to what we call our PA account bots. And we have one on the NASDAQ and the E-mini. Well, we just now released a brand new one on the MES. And man, I'm really excited. This week, we just released it on Friday. And this week, look at this chart. This week, what it's done is $1,380 trading 2 micros, minimal risk. The max drawdown, $250. And for a week or from the 1st to the 15th, you're up $1,380 trading this strategy. $1,380 minimal drawdown. I talk to people all the time. They say, hey, I got 10, 15 PA accounts. I'm afraid to trade them. I need a strategy that I can make 100 or 200 bucks and copy it across all 15 accounts. Well, man, do we have the bot for you? This is ideal, this ES strategy. So we do have customized templates for both evals and PA accounts. This is showing you the same metrics that I just did. So I like to refer to this as prop trading on steroids, and I'm going to invite you. Mark Miller is really myself. I'm a little boring compared to Mark. I'm going to wrap it up in just a few minutes. I'm a little boring when it comes, if you compare me to Mark, because I'm super conservative now. But Mark is, you know, he's just, let me tell you, he gets consistent payouts through a variety of different prop firms. This is the inside look on his website of his account. He had several 50,000 accounts, over 60,000, and he's got some really nice payouts. And you could definitely use these bots to trade your prop accounts. So let's get to the special offer. For the New Year's, we're going to extend it. This is Traders Corner's first event of the year. They're calling it their New Year event. So in the spirit of the new year, we're going to do something special. Our customer support, and I'm not saying it because I work here, I'm saying it because I know firsthand. We provide the best customer support out of any vendor that I've ever been associated, that I've ever had any experience with. And I know a lot of traders that tell me about a lot of other companies. I'm not one to throw mud, but what I can tell you is not only do we do a white glove installation, but we do a lot of hand holding for many, many years after that. When you place your order, it's the start of a relationship that we want to last for many, many healthy and prosperous years to come. We're always going to be available to support you, whether it be technically or if you need any guidance on running the system. We're going to make ourselves available. Nobody's left behind or in the dark. We have some great masterclass modules and a user manual now that's, I mean, professionally done. Thank you, Michael Higgins. We trade this system, and this goes into our transparency. You know, and I've got to mention this because I think we've all experienced, you know, when I first started trading, my inbox was chock full of emails of saying how quick and how easy it was going to be and how much money I was going to make. And I couldn't wait to jump in head first, only to learn that it wasn't quite so easy. Okay. So what we've done is we've kind of opened the doors. We've kind of putting our money where our mouth is. And in full transparency, we're trading this AI system on YouTube every morning on YouTube Live. And I am going to put a link in the chat box right now. I'm not going to be able to get to your questions. However, if you put your name and your phone number in the chat box, only me and Anthony can see it. It is hands off, Martin. Anthony seems like a really nice guy. I don't think he's going to call you. I'm only going to call you if you ask me to. But if you have a question or you'd like to talk to me when I'm done, let me catch my breath and get a drink of water. And I will give you a call and answer any questions that you may have. But I promised you that I would give you a free invitation to see this system run on a live market. And here it is. I'm putting it in the chat box right now. Every morning, 9:30 a.m., YouTube live stream. Go to this channel here. 9:30 Eastern, right when the market opens. And if you join us, you'll see this powerhouse of a system in action. So we're live every day, full transparency on YouTube Live. Come check it out. Traders Corner. This is the exclusive special offer for Traders Corner. We're going to run anywhere from a 25 to 50% off discount, depending on the membership level that you decide to join us with. We have a small, medium, and large, a monthly. Normally is $6.99. We're going to knock 25% off. My associate Brock is going to place the link in the chat box. So you could learn more by clicking that link. And you'll find that with a 25% discount, the monthly comes down to $524. Much better value is going to be the annual. We're knocking 25% off. Normally it's $29.99. We're going to knock off about $750 or 25% and bring it down to $22.49. $22.49, I think it breaks down to about $175 or $180 per month. So for the entire year, for about $175 or $180 a month, you're going to have the full portfolio of strategies. You're also going to receive all of the chart templates, all of the indicators, all of the strategy templates, and all of the prop trading templates. If we release a new one, a new template, a new instrument on the AI Auto, you'll get that included as well. So $22.49 is the price for the annual. Your best value, and if you do have the means, if you're somebody that just doesn't like recurring payments, the best value is to go with the one-time payment, which is 50% off. And we're going to run this special through the end of the weekend, through Sunday night. Okay. We're inviting you in Thursday and Friday to join us live on YouTube. Come check it out. I'm telling you, you'll be amazed. And in conclusion, a lot of our members are having a lot of success. Steve, Sood, Simon over in the UK had a day where he made $16,000 in one trading session. We have a great Discord chat community where we have the training video channel, the daily results channel. Michael just the other day had a day like Simon, a $17,000 a day. We post the results. Our members post the results. You can see what's working, what's not working. There's a problems and solutions, prop trading, a great Discord community, very responsive community of traders of all skill levels. And last but certainly not least, Suzanne is really a leader in our community. But my favorite testimonial, and I want to show you this because I talk to a lot of traders who feel bad that they feel they got burnt or were disappointed or let down by a bot that they had purchased in the past that just didn't work. This is a testimonial that was during our YouTube live stream. Gary Sparks, a very humble guy, he barely ever talks, but he had this other gentleman in YouTube, Michael Edwards, asking him a lot of questions. Gary Sparks told him that the other services and he's warning to stay away from, that he's had bad experiences with, that he's purchased their products. And what he found was that RLT, that's abbreviated for right line trading, our AI auto trader, he found is superior to our competitors. And it's superior not because we're nice people, it's superior because not only do we have our own skin in the game, and we have a technology that's far superior to our competitors. We're leveraging this new AI technology that's making every sector in our economy that more efficient. So coming into this new trading year of 2025, when this new administration comes into office, and I'm not saying this politically, we're all capitalists. I think having a superior trading system that's leveraging this AI technology coming into this new administration, you're going to position yourself to have a significant edge over all of the other retail traders. Now's the perfect time to do it during this special offer. So I want to conclude by just thanking, number one, you for joining me here today. And if you have a question, please put your name and your phone number in the chat box. And secondly, I want to thank Anthony and Traders Corner for having me. It's always such an honor to be on your Investor Summit. And thank you again for your time. Thank you, Anthony.
Hey, thank you, Rory. Those strategies and profits and recommendations look amazing. Congratulations to you and your team over at Right Line Trading on developing such a powerful system. Ladies and gentlemen, if you struggle with human error, over trading, inconsistent results, and blowing out your prop or live accounts, which I've done more than once, then Mr. Rory Powers over at Right Line Trading has a solution for you to build wealth completely hands-free. You can learn more by clicking on the link in the chat box. Thanks again, Rory, for making such a generous offer for our audience. It's a really great offer there, especially at lifetime. Well, ladies and gentlemen, that concludes our online trading summit. The staff at Traders Corner wants to thank you all for joining us today. It's been an information-packed event, and we hope you all enjoy the holiday season. The replay will be on our YouTube, and I'll put that link in for you right now. All right, so that's there. So, and we'll be sending it out to our members as well. Have a nice evening, and thanks again for being here today and making 2024 a tremendous success for Traders Corner. We did it again. One more great trading year, and you guys are still here and doing it too, so you're doing pretty darn good too. And we hope that you have a very blessed 2025 that is very, very profitable, and we hope to see you again very, very soon at the next event. Thank you so much.
Hey, Anthony, I just wanted to mention that I initially put the wrong link for YouTube and I corrected it. And I put the correct link for the streams on YouTube. On our YouTube channel, it's under the live stream. So I'm sorry about that.
No, that's okay. It's all right. If we're sending it out in email anyway, so that's good. So yeah, thanks, Rory. I appreciate it. I don't mean to overrun you as well or anyone else. So yeah, that's cool. Thank you. All right, guys, have a great evening, and really, honestly, have a really, really amazing 2025 trading year. It's already started, so, you know, Really wish you good luck, and we hope to see you again very soon. So thank you so much. Good night.